Very good morning. You're watching India Market Open, and we are kicking off festivities here at NDTV Profit. We're getting the party started, and so have the markets in some sense. Yesterday was phenomenal. What Trump has said today might help today, guys, as well. So let me quickly go through what's on the show today. Big claims from Donald Trump. Says India has assured that we will stop buying Russia oil, at least till the war ends. We're going to discuss this and the impact on crude with Peter Maguire. Axis Bank in focus. A bit of a mixed bag, but will it be seen as negative, and will there be impact on the bank Nifty? Could the tide turn for Axis Bank in H2 after the results have been declared? Gurmeet Chadda going to join us for more on that.
And it's all about IT earnings as well today. Infi and Wipro going to be reporting numbers. Will they turn the tide in the second half and more or less report numbers in line with what has so far been reported in the IT space? Wait and see on NDTV Profit. And you've also got Hyundai Motors making some interesting statements about its vision for 2030, an aggressive push into hybrids and electrification. Stay tuned for that at 9 a.m. today.
Big faces on the show today. 9:30 a.m. you see Sanjay Sethi of Chalet Hotels after a new brand launch, as well as Sudipta Roy of L&T Finance post their quarterly numbers. And the Worldview Diwali edition with Florian Weidinger of Santa Lucia Asset Management at 10:10 on India Market Open. Stay tuned, you can't afford to miss a single moment.
Let's begin with the global cues this morning. It was a mixed day of trade for US markets overnight as uncertainty over US-China trade talks and the government shutdown. Remember, 15 days now that the US government has been shut down, and that continues. So if you pull up the indices, you'll see the Dow mildly in the red, but the S&P 500 and Nasdaq chugging along. A result season has started in the US as well, and bank results have pushed up the S&P 500 to some extent. Bond yields rose very slightly as trade uncertainty prevails. The 10-year still at 4.03%, so it's extremely benign. Oil prices have continued to dip. Now, this might reverse after what Trump has said and if it comes into effect, but oil prices did hit a 5-month low. The Brent was at $61 mark. Meanwhile, the gold rush continues. I mean, come what may, that continues to be the biggest story. $4,200 per ounce, that mark has been crossed by gold, and this is the first time that's happened. Clearly, investors are flocking to the safe haven asset. Let me pull up what Asian indices are doing this morning before we get to what India is looking like. Asian markets are all in the green. India is something that we should look at as well. Also looking interesting, 45 points up in the green, which is a great trend after the kind of bulls roaring that we saw yesterday in trade. But this is the big news, really. US President Trump claims that Prime Minister Modi has assured him India will stop buying oil from Russia. A process already underway, he says. Listen in.
You have to understand, I've watched India for years. It's an incredible country. And every single year you'd have a new leader. I mean, some would be in there for a few months. And this was year after year after year. And my friend has been there now for a long time, and he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process, but the process is going to be over with soon. And all we want from President Putin is stop this. Stop killing Ukrainians and stop killing Russians, because he's killing a lot of Russians. If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
Okay. So there has been no confirmation or statement from the Indian side, but this is what Trump is claiming at this point. Peter Maguire joining us. He's market strategist at xm.com. Peter, great to have you on the show. And welcome to NDTV Profit. A pleasure to speak with you as always. Just your comments on what happens if India actually pares down its purchase from Russian oil. Putting this into context, that this is a claim and a hope that the Trump administration has communicated earlier, and it hasn't quite happened. India's stance is that we will buy oil where it suits us.
Well, good morning, Tamara. I think there's many moving parts to this, as we well know, and I want to wish everyone a happy and wonderful Diwali, by the way.
Thank you to you too, Peter.
Thank you. So I think the first part is we hear President Trump and his rhetoric, and we understand, and you wouldn't come out with a bold comment like that if there wasn't negotiation between Prime Minister Modi and President Trump. So let's put that aside and now move forward and say, right, where is this oil going to be purchased from, and how long does it take to wean oneself off that Russian crude? You just don't stop immediately, as President Trump said. I would think it'd take a matter of weeks, if not a month or two. And then President Trump saying, do we offer US crude as a solution to this for Indian refiners? And then the next part of it is, if the war does stop, and that's what President Trump's trying to create, then it's okay for India to resume purchasing Russian crude, Tamara.
Talk about what we've seen in the recent past, Peter, and good morning to you. With regard to the supply in the oil market, right? This is unlikely to change anything materially, though you have India as one of the top purchasers of global crude. There is plenty of supply that is currently available, especially after that latest announcement of an increase in supply. Would you agree? And would you also say that there is a cap, there is a ceiling on oil prices as things stand right now?
I think so, Alex, and good morning. I feel as though that this mood is one of, first off, an oversupply to the market. We're all understanding from a glut perspective in this fourth quarter, and this will lead into naturally the start of 26, probably up to Easter. So that's going to mean one simple thing, I would think, which would be cheaper energy prices and a ratcheting down of where we are at the moment. We've got WTI at 58 3/4. It's probably, you've got the best part of 55 in it by month's end, I would think, 2 weeks out, a downdraft. And I think that Brent would certainly be under 60, or, the best part of 62.40 at the moment. So I think that downdraft is going to continue, and that's going to be wonderful for consumers and certainly for inflation. And I think that that's what everyone will get with higher production numbers.
Peter, good morning. I still think it's good morning for you, and happy Diwali to you as well. But do you, independent of what news flow might come in, structurally, does the upside in crude seem capped? It's very important for India, and hence I'm trying to understand from you. If India were to stop buying Russian oil, etc., all of that were to happen, will it structurally still be lower? Will it not cross 75, you reckon?
Well, good morning, Niraj. I think, and good to see you. I feel as though, first off, there would be some buffer in place from the likes of other producers, which would make up any form of impact that particular Russian crude would have. So there would be more supply led to the market, and I think OPEC Plus have got the potential and capacity to do that. And I think that'd be steered through the relationship between President Trump and MBS. So that in turn is going to be how this unwraps. And this is going to be a dynamic situation, because it'll take, as I said, weeks, if not a month or so, to at least wean oneself off the Russian crude, and then we have to see where India is prepared to buy from. So these are all moving parts, and all I can say is President Trump seems to have an answer to everything. So let's see how he moves on this one.
Thank you for that, Peter. Just to add to that, a story that Rishabh Bhatnagar from our Delhi bureau broke yesterday, that Rajesh Agarwal, the Commerce Secretary, has now gone to the United States to join the trade delegation there as well. So it's a fluid situation, and this is, I know it's the nth attempt for a trade talk, Mr. Yeah, the chief negotiators' frequent flyer miles have absolutely been notched up between New Delhi and Washington. Yeah. But maybe we're closing in.
Yeah, and India's saying that we are open to buying US crude as well if the pricing is right. So I think there is, well, hopefully something on the anvil.
It's good that the basket, not just the sweet crude basket, but generally the basket on crude is much lower than it has been.
The US-China trade tiff has helped that as well. Yeah. So there's a lot more reason for the street to cheer like yesterday.
Absolutely. In fact, let's talk about what happened in trade yesterday. You had buying on a net basis, very small number, but still it was buying to the extent of 68.6 crore rupees by foreign institutions. And barring a bit of a spot in between, there has been more buying in the recent past than over the course of the last several months. Equity markets rose across the board, and you had the benchmark Nifty 50 that gained about 0.7%, ended above the 25,300 mark, and most 39 out of the Nifty 50 stocks gaining. The Bajaj twins had quite the day yesterday, gaining quite considerably among the top three gainers. And you also had Nestle, which gained quite handsomely, close to 4% in trade. The broader markets outperformed, with the mid-cap index gaining close to 1%, the small-cap index up about 0.8% or so. And most of those sectors gained. You had Realty, which topped the list with gains of about 3%. PSU banks, defense, metals all gained quite handsomely, 1% or more for all of those indices. You had ICICI Lombard and Bank of Maharashtra, as well as Persistent, that stood out on account of strong set of numbers in the second quarter. And really that seems to be the focus in trade today as well, because you have quite a few frontline names that will be reporting numbers, and quite a few that will react to numbers that were posted post-market hours as well.
Yeah, spot on, Alex. Just before we get to the day, just a small step back to just try and understand why, if indeed this trade deal happens, why the setup is so beautiful for Indian markets, right? So if you look at the last 12 months, rolling 1 year basis, barely 30% of the BSE 500 is in the green on a rolling 1 year basis. That tells you a story of how the markets have consolidated and in fact corrected as well. The median drawdowns on the BSE 500 are about 20% from the highs. 1 year rolling, median drawdown is down 20%. We haven't gone anywhere. And the expectations, the good part about all of this is suddenly the expectations of returns from the Indian markets have been reset. Comes up last September, October, November, December, maybe until March or April. You ask anybody about how the Indian markets will behave 1 year from now, the answer was we will be up. Now people are saying that we may consolidate. So the expectations have been reset, which is actually a really good thing. Now coming to today's trade specifically, I think two sectors, and kind of Tamanna and Alex spoke about both of them, but banking first up on the radar, because the MPC minutes show the possibility of more downtick or more rate cuts, and both Axis Bank and the RBL Bank news flow, right? They have put up a notice, and we'll talk about that. Keep banking in focus today. You might well see banks having heightened activity in the session today. And IT, for sure. Infi, Wipro and LTIMindtree. All three today. That's three large ones. Remember, LTI may not be a part of the Nifty anymore, but it was a part of the benchmark index less than 6 months away. So it's a large cap in its own right. Three large companies come out with numbers and commentary. It could well be very, very important IT, if not today in the day's trade, then tomorrow early morning.
I'm just thinking back to all of those analysts who stuck their neck out and said that IT will be better this quarter. And I mean, the verdict is still out there, but they may still be proven correctly. And yeah, I agree with you 100% that earnings is going to be huge. So big day of earnings with IT majors and the Nifty reporting today. Wipro, Infosys, something that Neeraj mentioned, but look at Eternal as well. Nestle, we're very keen to see what Nestle has done. There's Mastech, Wari Energies, apart from, of course, the LTIMindtree. So quite a few Nifty companies also reporting. Bulls have come roaring back after 3 sessions of consolidation, and the banking season for results has kicked off with mixed set of earnings. Axis may drag down the bank Nifty in initial trade, so keep an eye out on that. Meanwhile, the technical setup is not half bad at all. In fact, pretty good for the Nifty and the bank Nifty. Higher highs and higher lows will be coming in for the benchmark. The Nifty has closed above the 25,200 mark decisively, which is good. Resistance points at 25,400, 25,450, 25,500. Nifty support points 25,200, 25,150, 25,100. Bank Nifty is closed at 56,800, but will remain in focus as major banks announce Q2 results. Watch out for this Saturday. A whole load of big banks are announcing numbers this Saturday. So that's going to be key. Resistance points for the Bank Nifty, 57,000, 57,200, as well as 57,400. Support points at 56,700, 56,600 and 56,400. But let me go across to Puneet on what's the setup for F&O.
Well, thank you so much for that, and very good morning to all three of you. Another interesting session to say the least, because we have seen the resistance and support levels that you've been putting out, Tamanna, also increasing over the last week. So that's a key positive. Now above the 25,300 level, and while we have seen a couple of days where we've seen the pullback from these current levels, it continues to be at a stronger, at least on the technical setup, a very stronger push. Earnings will be one of the key triggers for the Nifty today, tomorrow, as well as over the next 5 days, because of the number of earnings that are coming in both in IT as well as in banks. Was also interesting for the IT space. Something like an Infosys, while commentary will be key, the profit estimates also built up a lot of expectations this time around. So key to watch if those will be met and largely drive the momentum on something like an Infosys. On the banking side as well, really strong setup built in above 56,600 considerably. We are now moving towards the 57,200 mark, and that's a level from where we actually started this pullback a month and a half ago. So we are testing those limits, and likely that the earnings over the weekend will drive the next leg of growth on this particular index. Both in terms of foreign invest position, largely muted again, a little bit of addition in longs that the foreign investors have done. Some selling in index options, but the index long has just moved a tad above the 8% mark. Again, increased number of shorts versus the longs, which we've been highlighting over the past few days as well. The net OI put call ratio has inched up again over 1.2. Additions of more puts compared to the calls. This was 1.1 yesterday itself. So post the expiry, we have seen those additions. And in terms of open interest distribution, the 25,300, 25,200 mark seen an increased open interest activity in terms of calls, while puts have started to decelerate a bit below the 25,200 mark, a key positive sign for the market, at least in this level. Finally, open interest gainers and losers. We've seen something like a Tata Motors yesterday because of the demerger over the last couple of days, as well as the adjustment happening, increased open interest change. Similarly, something like on 361 has also been a key trend, over 30% OI change happening. But on the open interest losers side, we can pull up and the OI change is very minuscule. So seeing short covering across a bunch of stocks, but limited in terms of impact. So another very, very important trading session for the markets, which will likely driven by commentary, but Axis Bank could be the one to watch out for in trade today based on the results, and likely if we are waiting by for the other banking names to have a positive impact on the Nifty Bank.
Hey, thank you for that, Puneet. Meanwhile, Axis Bank, you're right, is the first one on my watch list. Overall, a thumbs down. Net profit is down 26.4% at 5,090 crores versus 6,918 crores. Net interest income is up 2% at 13,744 crores. Now remember, I'm not talking about how the stock will move. I'm talking about how the numbers are and how you should see the numbers. Provisions are up 61% at 3,547 crores. Provisions down 10.1% quarter on quarter. Gross NPA has also come down a tad from 1.57% to 1.46%. Net NPA is just steady at 0.44. There's a one-time standard asset provisioning at 1,230 crores. This time it's because of crop loans, which has shown some pain on the Axis Bank balance sheet. Net interest margin at 3.73%. Here's what JP Morgan is saying. They've retained a neutral with a target price of 1,260. They say the Q2 miss is led by higher provisions on crop loans. Asset quality is improving with a decline in slippages and GNPA. NIMs are stable. Corporate loans driving overall loan growth. CASA growth is weak due to lower government balances. Valuations are reasonable. I think if there is a reason why there might be a bump up at some point in the Axis Bank stock today, it's because of valuations. Valuations have come down a fair bit, 1.4 times of the FY27 estimated profits. HDFC Life is the other one that we're looking at. Good set of numbers on HDFC Life. Results are in line with estimates. Net premium income was up 13.6% to 18,871 crores. Annual premium equivalent APE has grown by 9%. Value of new business has grown by 8% to 1,009 crores, and margins for value of new business, that's VNB margins, is slid a bit, but I would say largely flat, 24.1% versus 25.1%. Net profit is up 3%. Might see an uptick in HDFC Life today in trade. Oberoi Realty is the other one. Now, the conference call on Friday will be crucial to see what other details analysts will get, but we're talking about the numbers as they have been reported as of now. Revenue is up nearly 35% at 1,779 crores. Profits up 29% at 760 crores. EBITDA has also gone up by a healthy 25%. Margins have slid a little bit, but nothing too much to complain about, from 61.7% to 57.4%. All in all, we're giving it a thumbs up.
Interesting set of numbers. I will start with earnings as well. Angel One. And, you know, we've been watching the capital market plays. They've had the impact of the regulatory changes on the F&O side. And really, there are two ways or two lenses that you can use to look at Angel One. On a sequential basis, actually, there is an improvement in performance pretty much across the board. But if you look at the year-on-year comparison of the Q2 numbers, which is not something you often do, but you will see that there is a significant implication of the changes in the derivative space that has been undertaken. Orders, in fact, are down as much as 26% year-on-year and stood at 360 million in the quarter gone by. The gross revenue has risen 5% sequentially, has fallen 21% year-on-year. Margins have expanded sequentially, remained lower compared with last year, considerably so. So there's the reason for the thumbs down is just that. It's been 3 quarters where you've seen a sizable decline in operational performance when compared with a year-on-year picture, but sequentially, Q2 is actually considerably better than Q1. In fact, the reported PAT is up as much as 85% sequentially, even though it is down as much as 50% year-on-year. Bear that in mind when you look at the stock movement in trade today. BEL, this is a pretty standard disclosure, and as much as you can call a 600 crore approximately orders that they have received in October so far, they've just said, oh, by the way, since our last disclosure at the end of September, we've added close to 600 crore of orders, and this is par for the course really for BEL and the sector as a whole. We've been talking about it all through the year. And KEC International, again, this is a company that has reported a considerable number of orders, particularly in its T&D business. This is another one, 1,038 crore rupees for a 380 kV substation. This is an international order. It is going to be delivered in Saudi Arabia. And that takes the total order intake for this company to 16,000 crore in the year to date. And that is up about 20%, which is quite the mark. The question now remains about execution, and I think the management has said very clearly that it is confident. It has retained its guidance for the year. The question, Neeraj, is after the Q2 numbers, will they have to change their guidance upward?
Yeah, well, ordering activity is very brisk.
Yes.
Execution remains to be seen, but they've been fairly confident about execution as well, as he's told us enough number of times on our shows as well. Well, the first stock on my list is also courtesy the gentleman who's going to come to our left very soon, RBL Bank, and they've officially said that the board meet is on October 18th to approve proposal for raising funds by issue of eligible securities by a preferential issue or a private placement, etc. Now, all of this, you could argue, is very well known. The reason I put it up today is that now that it's happening on Saturday and the days are 1 or 2 days left, I think it brings RBL and therefore banking firmly into focus. So keep an eye out for this one. Yet again, 299 and counting. It's had a very heady run the last 4 or 5 days. Let's see if there is more in store. Adani Green Energy, a very strong H1 update. H1 operational capacity up 49% at 16.7 megawatts. H1 sale of energy up 39% at 1957 crore rupees. So watch out for Adani Green. Maybe it has a bit of a leg up as well. And I thought the Jefferies note on L&T was very interesting. So while there are a clutch of other results as well, and we'll talk about some of those, but the Jefferies note on L&T, they've maintained a buy, raised the target price to 4345, which is a 16% uptick. It's outperformed the Nifty significantly, and Jefferies believes the company is on track to achieve or exceed FY26 guidance. That's quite something. They expect core E&C EBITDA to rise 20% versus 16% in FY15 to 19. So let's see if L&T has a bit of a leg up this morning.
Okay.
My three.
Okay, we want to talk a little bit in detail about Axis Bank, and then of course we'll come to RBL as well. Vishwanath Nair there, and Vishy, you joined the call as well and got some sense of Axis Bank. Now, Axis Bank has a new problem that crops up every quarter.
Usually on the asset side, yeah.
The good thing is that the old one gets sorted, but then there's always a new one. What
surprisingly, this quarter the old one's not yet sorted. So,
oh dear! But there is a new one.
I call it the quarterly horror show at Axis. It's because there's just way too much uncertainty as to what exactly is coming through, right? Like for example, this quarter they've said that 1,231 crore worth of additional provisions have been made this quarter, which is why the profitability has gotten hurt. 26% drop on net profit, primarily because of this one large provision. This is happening because of a certain crop loan product, two of them actually, which were discontinued, but the bank continued to lend under them. And the RBI found out as part of the FY25 inspections and then said that, listen, you need to provide for it ASAP, and that's what the bank has done. What else didn't work? According to me, the asset quality has slightly improved. Having said that, you've got the sequential numbers still trending higher. If you were to look at the slippages figure, that's still higher than what the previous years, if you forget about the technical impact that came in Q1, it's still trending higher, about 5,900 odd crore. And that Q1 technical impact is continuing in Q2, when the bank had said that in Q1 it would be a one-time hit. What has worked, however, is the net interest margin figure. That at 3.73 is holding strong. Yes, it's a little bit lower than Q1, but in the current environment, having a 3.73 net interest margin is a good number. Corporate loans are growing sharply. They're also seeing improvement on the unsecured retail front, so card distribution has improved. They're also going fast on the personal loan side. So overall, on the core business side, it looks better, but these asset quality adjustments and provisioning adjustments are a problem. A recurring problem. In fact, Puneet Sharma, the CFO of the bank, was speaking on that conference call last evening, and we asked him a question about this technical impact continuing into Q2. Also because in Q1 the number was close to 2,700 crore, in Q1 it's about 1,500 crore, so it's not that far away from the Q1 impact on gross slippages. Let's listen into what Puneet Sharma had to say about this.
This is the July to September quarter. So if at the end of the July month, I was to slip because of the technical impact, I would get recorded as gross slippage. Consequently, the customer upgraded themselves on July. So on August 1, if the customer upgraded, the customer would be recorded as recoveries and upgrades. So we are not netting off same quarter recoveries from the gross slippage number. So there could be customers that would have, purely because of interest application at month end, slipped for the night and gotten upgraded because they serviced the very next day. Hence my request that we should remain focused on the net slippage, because that is a reflection of the performance for the quarter, and net slippages is what drives the provisioning cost.
Okay. So that's the view coming in on Axis Bank. We'll take a very short break. We're coming back with more analysis on whether Axis Bank is a buy today or not. Of course, IT stocks in focus with big numbers coming through. All of that after this very short break. We're coming right back.
पे जल ताकि खेतों में चले हल। तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Back with India market open right here on NDTV Profit. It's festive days, guys, so let's be cheerful, independent of what the market does really. Look at specific pockets, strength, weakness, but broadly be cheerful. However, within all of this cheer that I'm requesting and recommending, let's focus on specifics as well. IT is a space in focus. Infosys, Wipro, LTI, Mindtree are all set to announce the second quarter numbers today, as we said before. Now, before we get Sandeep Agarwal of Sovilo Investment Managers on the conversation to try and understand what is to be anticipated and the implications thereof, let's get my colleague Jasmeet in to tell us what the street is expecting from these majors. Jasmeet, good morning.
Very good morning. Well, thank you for that. Let's quickly understand the key things to watch out for in Q2 results. Firstly, the CC growth. While the brokerages are penciling in a growth between 1.8 to 2.3% for this quarter. Secondly, this is a stronger quarter for the company and the deal ramp-ups to add up. While thirdly, the guidance will be in focus while the brokerages are penciling a higher guidance for this quarter. So that's something to watch out for. Now, thirdly, the comments on the overall hiring, AI and S&P aspect will be in focus. Apart from that, margins do have a tailwind given the operational efficiency and other acquisition cost adding up. Now, in terms of key number, if you look at the revenues expected to rise by 3% while in terms of the margin we see expansion of 49 basis point, and in terms of profit we see an uptick of 5% for Infosys. Now, all in all, we see a good set of numbers coming up, but guidance is something which will be in focus as we have mixed street of expectation for Infosys. Now, in terms of Wipro, which is coming up today post the market, we see again a mixed set of numbers, while in terms of what to expect would be the guidance again, given that the management had guided a range between -1 to 1% in the previous quarter. So that's something to watch out for. While again the CC growth is muted for this quarter by the brokerages, and we also see that the contribution from the recent deal ramp up is something to watch out for, and that will be impacting the margin given the additional cost. Now, in terms of key numbers, we see the revenue is expected to rise by 3%, while the margin is expected to increase by 50 basis point. In terms of net profit, we see a downtick by -1%. So all in all, a muted set of numbers for Wipro, but guidance again will be in focus of Wipro as well. While thirdly, we also have LTI Mindtree in the scheme today. What we see is that the revenue sees an uptick by 4%, while the margins an expansion by 64 basis point, and net profit is expanding to 2.4% from the previous quarter.
Well, okay. Let's pose some of these questions to Sandeep Agarwal of Sovilo. Sandeep, great having you. Thanks for joining in. And Sandeep, I wonder if you expect anything remarkable from any of the three IT companies that come out with numbers today in terms of their commentary or the results, which could have a bearing on the IT space at large over the next few days.
Yeah, hi, good morning, and thanks for having me on the show.
So, I think that the challenge is that, the business has become very, very mature. So these companies are doing a great job, but unfortunately, in an environment where, you have just come out of the digital disruption couple of years back and now stabilized, and now the new AI disruption has happened, which for the first time in last 3 decades, we have seen that there is an impact on effort. Still now, all the disruptions were transition from one technology to another. So you have to just retrain your workforce, which may take 4 to 6 quarters, and you can redeploy and your revenue will see a big jump. Unfortunately, this time the disruption which has happened is a effort cut, which is 30% effort cut. And our strength as a country and the industry was always providing effort at a very reasonable cost and very well-trained resources. Now that business fundamental itself is in question, and because of that, you are seeing all the challenges, despite these companies being the best in the world in terms of execution. And let me tell you, our market share will be like more than 90% if you exclude the BPO portion from numerator and denominator. So what better you can expect from an industry which is already at more than 90% market share, and they are doing superb, everything right. And we are growing much higher than the sector growth. But there is a reality that efforts will seeing 30% cut, and because of that, despite every good effort, these companies will not be able to post meaningful growth, not only 1 or 2 years, I think structurally for maybe 3 to 5 years at least.
Okay. And Sandeep, that is a reiteration of what you spoke the last time as well. The fact that unfortunately the growth in the sector is anemic. But then you have a situation, for example, in trade yesterday were persistent on account of a surprise on the earnings, saw a reward in the form of a 7% uptick on the share price. So there are pockets, or there are a few outliers. What, according to you, would those outliers be?
So, outliers will be from the technology segments, basically. So whoever is there in ER&D and who is working with IT, they will definitely grow at double the rate of the IT services space. So, for instance, if the large caps are growing at, let's say, 5-6%, which is also optimistic case scenario, then this good quality mid cap, which are into, high tech and ER&D, they will grow at 11-12%, 13%. So that is a reality, and that will continue for next 5-7 years, because ER&D as a space has very low penetration of of outsourcing, and that penetration is picking up very sharply. And particularly after the Ukraine-Russia war, we have seen massive demand for outsourcing from India. That space was earlier massively serviced by EPAM and others. So there is a massive tailwind there. But again, remember that tailwind, one, ER&D is a much smaller overall space versus the IT services. And secondly, that is also growing fast now for 3-4 years. And that's the reason you have seen that all these stocks like Persistent, KPR, and many of them, they have moved up 8-10x in very short span of time. So I think even there, you have to be look at more rationally, because the PEG ratios across the board, large and mid cap, is very, very high. People are just seeing the underperformance of the sector for last 2-3 years and zero return and all that. They are not seeing that the underlying, which is the growth, has also fallen meaningfully, and because of that, the PEG ratios still are very high compared to what we are earlier, although the stocks have not made any return or they have given negative return. So I think the right way to look at IT sector next 3 to 5 years will be what PEG ratio you are assigning, rather than only looking at what the stock has done in last 2-3 years.
Completely fair. So then, therefore, just to close out this conversation, especially in the context of yesterday's move in Persistent, would you say that there are any buys, or would you wait for better opportunities down the road? I would assume, based on your previous answer, that the only space that you see great potential on the upside, at least in terms of earnings growth, is that ER&D space. But as you've already pointed out, the valuations might just be a little stretched for your liking. What is your call? What do you like right now, and would you be buying at all?
So, honestly, 10-11 months back, or almost 12 months back, we have exited all our IT services positions. Most of them, maybe small, minuscule position, 1 or 2 will be there. But we have massively shifted in last 2-3 years a lot of money to platforms, and that call has done well. And we are very big fan of platforms, because I firmly believe that our strength is not the enterprise IT or the operating systems and all, because there needs $300, $400, $500 billion of investment over a period of time to achieve anything. And our strength is the consumer tech, where we have done phenomenally well. And I think all these consumer tech platforms, whether it is Urban Company, it is Eternal and all, they will do very, very good. And these are our big tech. That is my big call. I think that these companies in next 10 years will give you $300 to $500 billion market cap, each of them. because that is our strength. That is the problem which they are solving. Remember, US big techs are solving problem because of Capex. So they are using the capital in a very efficient way through these platforms. We are using our strength, which is the human resource, in a very efficient way through this platform. So our strength is human resource, skilled human resource. We are using that through platforms in an efficient way, and that is the reason this market caps are going on. So I never compare US big tech with Indian platforms. I believe Indian platforms are much superior, much bigger, and so will do phenomenally well in next 5-10 years. That is a bold call which we have taken.
And it is an interesting, bold call, which we will delve a little deeper into on another day. Thanks so much for joining us today. Absolute pleasure speaking with you, Sandeep, as always.
Thank you.
All right, let's take this forward. Let's talk about a few of these stocks in more detail and also widen the base ahead of the start of trade today. We've got Milan Vaishnav of Gemstone Equity Research joining in, as well as Avinash Gorakshakar of Avinash Mentor Research. Thanks so much to the both of you for taking the time. Always a pleasure. Milan, I'll come to you first. You've had yesterday a pretty broad-based up move, and the broader market's doing better than the benchmark and holding above the 25,300 mark for the Nifty 50. You have an indication of a positive up move today as well. Would you say that the basis formed for a sustained up move, or would you say that the gains could be capped in the near term?
To be, first of all, good morning.
Good morning. And wish you a very happy season's greetings to you and your family, both of you.
Thank you so very much. Thanks a lot. Yes, I see possibility of the markets breaking out above 25,500 eventually. But that being said, as I generally do, I would rather stay reactive rather than staying predictive of the market. So I would wait until the market actually breaks about 25,400, 500 zone. But the stage looks set. The possibilities are quite high that we would eventually achieve a strong breakout out of this symmetrical triangle. Now, I have a basis of staying reactive and not going very aggressive on this until I get the actual price confirmation is that we are in a symmetrical triangle, which is very large, a 1 year large symmetrical triangle. It generally acts as a continuation pattern. So higher are the chances that we will move higher, but it is still a neutral pattern, and I would not like to anticipate the directional bias that the markets would adopt. But yes, there are high chances that we might end up and resolve this pattern by moving higher. Now, that being said, the only thing that still remains a little bit of a concern is the market breadth is not improving the way it should, especially when we are moving towards the high. So that's a small thing that we need to keep an eye on. But yes, I expect the markets to eventually move higher.
So therefore, with that context, and that's the broad level view, but what individual stocks do you like this morning?
There are two that I am picking up. One is BEML. I am looking to buy BEML above 4470. I would put a protective stop at 4300 and expect 4800 on that. Another stock that I am looking at is CESC. I look to buy above 176, put a protective stop at around 170 and expect 185 on it.
Okay. So those are a couple of ideas. Avinash Gorakshakar of Avinash Mentor Research with us on the show as well. Avinash, good seeing you. Thanks so much for joining in. And how have you looked at the overnight news flow, Avinash, particularly in terms of either the banking results or the financials results, right? Because the HDFC Life numbers were out as well. HDFC AMC has a few notes, and Axis Bank, the conversation is split about whether you look at the numbers and how weak they might have been, or look at the silver linings.
Yeah, good morning, Neeraj, and season's greeting to all at the NDTV team family.
Thank you. To you as well.
My guess is, the bigger disappointment has come in from Axis Bank because I think numbers were much below expectations. And I think, this extra provisioning which has come in has actually surprised the markets. My sense is that, the markets would look at this stock a little more cautiously because previous quarter was also not a big quarter for them. And I think if the provisioning is not complete, by the September quarter, then the market should obviously look at it with a slight caution because there could be a little more pressure on the profitability. As far as HDFC AMC is concerned, I think a good 25% profit on a YY basis, a bonus of 1:1. I think definitely looks interesting, and I think they've managed to maintain the kind of growth on a higher base, which is quite commendable. And HDFC Life also has done pretty well. The bigger part of the business for HDFC Life and most of the insurance companies actually comes in the second half. So we are expecting a much more stronger second half. And structurally, we are positive on the insurance space as well as on the AMC space. Typically, all financial intermediaries, Neeraj, like depositories, wealth management companies, because I think, within this space, you're going to see a lot of growth unfolding in the next, say, 6 to 12 months.
Okay, Avinash, good morning and great to have you as we enter, this festive season. I believe you have also some calls this morning of what you're finding interesting. You were very clear that Axis Bank is not there on that list, but what are you finding interesting right now? Are you feeling bullish on real estate?
Yeah, I think, Tamanna, in the real estate pack, we continue to be positive on Antraj. I think it's a good combination of real estate and data center. And I think clearly, the market is underestimating the opportunity which is going to come from the data center business. In the next 2 years, our sense is that this business would overtake the real estate business for the company. And I think they are putting up a massive 300 megawatt data center capacity, which actually should also involve a lot of Capex. But I think they've already done some part of the Capex funding in the recent QIP deal. So I think all said and done, the second quarter numbers as well as the outlook for the complete year, that is FY26, looks quite solid. The other stock, Tamanna, which we are positive is in the auto component space called Shriram Piston and Rings. This is a very matured and a very well-established player in the auto component sectors, caters to almost all the segments like commercial vehicles, utility vehicles, two-wheelers, tractors. And I think the GST benefits are likely to definitely benefit the company. I think we are seeing very strong volume growth both on the passenger car side, two-wheeler side, as well as the utility vehicle side. And this is definitely going to propel a good re-rating on the stock. Very profitable company, 3,500 crores top line, 516 crores profit last year. This year, they should cross 600 crores. And I think it's a net cash positive company. So I think we are looking at levels of 29,53,000 over the next 12 to 15 months.
Wow, so some great ideas there. Anant Raj and Shriram Pistons. I wonder if Hyundai makes it to the list. This CLSA note on Hyundai this morning has caught my eye. I'm just going through it. They've maintained an overweight with a revised target price of 2804. So that's another 16% upside coming in. They're saying the facelift of the Venue, that's one of the models of Hyundai, is expected to be launched in the coming months with a new EV in FY27. They're focused on selling good and safe models with customer pull, not going for aggressive market share gains and compromising on margins. They're building in a 9% volume CAGR with 13.5% target by calendar year 28. We were talking about this yesterday, about how it's K-pop season in the markets, LG on one hand and Hyundai on the other. Avinash, how are you finding Hyundai?
No, I think the overall trend in the market, Tamanna, for automotive, especially the passenger car segment, has taken off. I think we could see a very strong October. I think, festive sales have picked up in a big way. So I think Hyundai Motor should also do well. I think you could see a very strong quarter for most of the automotive companies in the third quarter. I think it should surprise a lot of analysts and markets, considering the fact that the first quarter was quite tepid. But I think volume growth is going to be exceedingly attractive for almost all the segments, especially passenger cars, which should obviously, be a beneficiary of the GST cut. So I think Hyundai also should do well. But I think clearly from a near-term perspective, I think, companies which cater to Hyundai in the auto component space, like typically Sundaram Fasteners or typically something like a Lumax Industries, I think these are companies also to keep a watch, because a significant growth opportunity could come in for the auto component players, considering that OEM sales in the third quarter are going to be solid.
Got it. Okay, Avinash. And in fact, by the way, 9 o'clock is when you'll hear from the management of Hyundai as well. And on the other side of the break, we've got to speak about a few financial results. Do stay tuned. We'll be back before you know it.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सामने के सोलर पैनल। घर हो या खेत, होता है कार में सोलर मतलब साथ, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सामने के सोलर पैनल। घर हो या खेत, होता है कार में सोलर मतलब साथ, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching.
Welcome back. The big story this morning continues to be Axis Bank. The Q2 performance missed the mark. We've seen a variety of reactions coming in. Some brokerages are saying it's not half bad. The extra provisioning which has come in this quarter will be also a bit of a concern. But there was a 26% drop in profits and a sharp rise in provisions. Has that outweighed gains in asset quality? Let me go across now to Gurmeet Chadda, who's joining us this morning. He's managing partner and CIO at Complete Circle. Gurmeet, a very good morning to you, and thank you for taking out the time and joining us. I know you have a very interesting and packed morning schedule, so I really appreciate it. Let's hear what you have to say about Axis.
Hi, Tamanna. Good morning. I think the core POP wasn't that bad. If you see the deposit growth and loan growth, it was in early double digits. Used to be more high single digit, but due to the RBI inspection especially on the crop loan portfolio, which had been discontinued, they had to make that one-time provision of more than 1,200 crores. I think that impacted credit cost. As a result, the ROA also went down. But in a market like this, as I said, the market doesn't want any surprises, especially negative surprises. And so while the numbers are good, guidance is good. Actually, one thing which I liked was that they actually guided that it will be more than 3% in terms of growth, in terms of industry average, which means they'll be very aggressive. But as I said, the market would want more stability, less surprises. So more neutral on it. Had this provisioning not happened, I think the results would have been much better, and maybe some catch-up could have happened as far as the valuation goes with Axis and HDFC.
Okay, so Axis right now, because valuations at least are one spot in the pros list for Axis versus all the cons of provisioning, etc. Do you think valuations merit an optimism on the Axis stock price or buying Axis right now?
No, unlikely, but you never know how market reacts though. But as I said, had this provisioning not come, the core would have looked better. The ROA and ROE as a result would have looked maybe 1.5% to about 17-18% ROE, and that did not happen. And so Street would like to see. And also there's been a transition with happening in Axis. Plus also the Citi acquisition did not play out as well as they thought it would, especially the card portfolio. But what I liked was the guidance and the fact that the growth in CASA and loan portfolio was good. I think if you see one thing in Axis, the corporate loan portfolio picked up, which is also a sign that, which is a good sign more for the industry point of view. And recent RBI policy was more a credit policy where, they've given a lot of scope, removing 10,000 crore cap on corporate loans, allowing acquisition finance. So over last 5 years, you saw retail loan portfolio being the mainstay. Going forward, I'll not be surprised if the corporate loan book starts, catching up and taking another larger bank's benefit.
Meet, and so to that end, and good morning to you and season's greetings to you as well, Alex here. I'm just wondering whether you would be positive on some of these public sector banks. You saw Bank of Maharashtra among the top gainers yesterday after its quarterly results. This is a leg up for your major corporate banks, right? Which would be your large public sector banks.
Absolutely, and because of valuations, there could be some catch-up, especially with SBI. I think it's been consolidating for long, has the largest loan book, and they can really increase the corporate loan book in seconds, especially with acquisition finance. We have seen a lot of large Indian companies doing sizable acquisitions, and earlier it wasn't allowed. They either used to go to foreign banks or structured debt or approach the bond market. And I think that could be a big leg up for banks as far as credit is concerned. My concern remains deposits, and I think with new generation more interested in financial markets, deposits and interest rates falling, yields falling, deposits will be very hard to come by. So the preference would remain banks with very good CASA mix. And that is why I think it's good to stay anchored to ICICI, the industry leader, and SDFC now, with merger things behind, and tactically look at some PSU banks like SBI. I think the bigger opportunity tactically may also come in banks like Federal, like RBL more on the news of what's happening around. So a lot of...
I'll ask you about RBL, Gurmeet. RBL, how do you see it? Positive development. We'll probably see the decision in the next couple of days. They've announced their board meeting. And does it have a spillover effect for, say, a Yes Bank or some of the other private banks?
Could be. See, with a disclaimer that we are in RBL and we entered a little earlier, got lucky there. But if you see the lot of good news in terms of this event, while the formal announcement is awaited, has come. The stock is up from 30-40% in last quarter or so for the year. I think it's almost doubled if I'm not wrong, maybe slightly less than doubled. So some of it is probably getting factored in it, but an Emirates coming and with the kind of stake markets are talking about, would be interesting to see the open offer and what price it comes at, because that would decide more of whether it will happen or not. Otherwise, some profit booking can happen if the open offer price is lower. But very good for the bank. See, operationally it's been very weak. The credit card portfolio continues to show stress. Although the MFI is now showing signs of stabilization, trades at about book value. It was almost trading at 0.5, 0.6 book value at the beginning of the year. So I think some of the catch-up has happened. And now it depends whether the news fructifies, and I hope that the open offer is more in line with what market is expecting and not much lower.
Quick word on RBI minutes from yesterday. Clearly, there's a split on the pace and timing and quantum of rate hikes going forward. That was clear from the minutes that we saw. Do you think a bit of pressure on the bank nifty and banking stocks, especially before the Dhamakedar Saturday when you have two big private banks reporting?
No, I don't think so too much about it, because the inflation continues to be. Look at wholesale inflation is 0.1, retail inflation is 1.5%. In fact, I'm of the opinion that with kind of a debt crisis we are seeing in globally, especially Western world, both Europe and US and UK, Japan also. I think all this entire thing of they being better credit rated and emerging markets being low credit rated could be challenged if rating agencies are more neutral, I would say. I think it could actually now mean that markets like India, etc., may have lower rates for longer with the fiscal discipline we have shown. So, and the inflation being benign, GST impact also will get passed on. So I'm not too worried there. I think, in fact, on rate sides we are headed lower, and I think we'll soon see Indian 10-year bond also sub 6%. Just a matter of time.
All right. Thank you so much, Gurmeet. The other stock that is in focus, and this interview we have with Hyundai India is something that I want to play out. They have an aggressive product blitz with 26 new models in the pipeline across segments. As part of its long-term India strategy, the company will also introduce its Genesis luxury brand by 2027 in the premium space. My colleague Puneet spoke with the COO Tarun Garg on Hyundai's strategy. Listen in.
There's just a sense of energy which you have been showing since listing. I think post the first couple of quarters, even in your conference calls, there's been that energy, and always something that you mentioned, the Indianization of Hyundai in India. That's been one of the focal points, right?
Absolutely, because of course we were always Indian. If you see the kind of models we have launched, it's not always that in fact okay, there was a model doing well in Korea, let's bring that. No, I think the idea was always to bring India specific models, so that is a part of Indianness. Of course, localization, if you see the vendors, today our localization stands at 82%. So in our campaign, Shah Rukh Khan being our brand ambassador now for what, 27 years, again reiterates that fact. Of course, more and more expansion now with the Pune plant coming in. So you can see that Indianness was always there, but the IPO was like the icing on the cake. And today, like you heard, that more localization, more new models, 26 launches, 7 new nameplates, cleaner fuels, 8 hybrids, 6 CNGs, 5 EVs, go on and on and on.
Okay, more of that interview at 10 a.m. this morning. We're getting very close to the market open, so which is why we just gave you a slice of what Hyundai is saying. But we will play out more of that interview ahead, and the stock already showing some spike in the first minute of the pre-open session. Shrikant Chauhan with us this morning. He's Executive Vice President and Head Equity Research at Kotak Securities. Of course, Avinash continues with us. Shrikant, very good morning to you. We're all in festive mode. Is the market also joining the party?
Good morning, good morning. Yes, Tamanna. It looks like the way yesterday we saw broad-based buying in the market, and the way the market has crossed the level of 25,330, which was a very toughest sort of resistance for the market in terms of option statistics, because there was good amount of call writing across 25,200, 300 and 500 strike. But yes, we saw good amount of buying interest in the market. A lot of mid-cap stocks, small-cap stocks did well. In fact, yesterday's FI sellings were also on the nominal side. And if we consider especially Indian rupee, then it was around 88 levels, strengthened to 88 from the levels of 89 almost. So while looking at the broad-based setup of the market, I am of the view that the markets are heading for the levels of 25,500 in the near term, and maybe 26,000 in next maybe a few weeks more. So it will take some more time, depends upon the how quarterly number comes. But broadly, I am of the view that till date numbers are not that bad, and the buying breadth is very strong. 25,150, 25,200 going to act as major support for the market. So in case if there is any correction because of any reason, we should look for adding some long positions in this market.
I wish that the foreign institutions also listen to what you're saying, because they continue to be net short, Shrikant, in indexes. Yeah. But having said that, 26,000 is what you've said is on the cards in a few weeks, and I think a lot of viewers will take that with, as a Diwali present perhaps, or maybe Christmas is coming early, who knows. But having said that, what individual stocks are you looking at this morning?
See, all these financials, they are doing really well. No doubt that there is buying interest in metals. Mining stocks are doing well. But if we consider specifically in these markets, then two sectors, that is BFSI and metals, they are doing really well. From the BFSI space, all these banks like PNB, Canara Bank, they are showing a lot of strength, and they are on the verge of crossing their all-time highs. Canara Bank especially, which is around 128 to 129, it is on the verge of crossing its multi-year highest levels. It made a high of 128, 130 during the period of 2010, 2009. And after a very long time, I'm to say after the period of 15 years almost, the stock is crossing the same. So based on its overall setup, I am of the view that the stock is heading for the levels of 150. Eventually, it will take some time. But in the near term, we can expect to 135, 136 sort of levels. For trading positions, one can keep a stop loss around 126. The other stock on which we are bullish is from the capital market space, and that is HDFC AMC. Currently, it is around 57.50, 57.40. There we have target of close to 5,900, and we can keep a stop loss at 5,600 for the same. We also like metal stocks. In that, we are focusing on Hindustan Copper as well as GMDC.
Okay. All right, some big calls over there and Hind Copper also in focus. Shrikant, Avinash, stay on with us because we have to talk about a very important story at this point. There's been a major crackdown on insider trading. SEBI has barred 8 individuals and ordered the recovery of over 173 crore rupees in illegal gains made from trades in a listed company, the Indian Energy Exchange, IEX. My colleague Sharad Dubey joins in with more details. Sharad, what is this case about?
This is a very serious case when it comes to insider trading and a very big order coming in for SEBI. And IEX, they have banned actually 8 entities in the insider trading. And interestingly, they have impounded 173 crore rupees when it comes to the overall amount. The entities also include officials from CERC. So that's a very, very important news flow coming in. But what's the case actually all about? The case is entirely for the market coupling news flows, which was expected to happen. And that happened in the month of July, and the stock cracked almost 30% in the single day itself. Now, why this is important is because this is negative for IEX, and the people who were privy to these management meetings, they actually took positions, and these positions were there in the put options. On July 24, the stock cracked 30%. Now, of course, the stock has taken a big beating, but interestingly, let's look at the mutual funds who are having exposure to the company, because almost 40% of the stake is held by DIs. Parag Parekh holds roughly 10% stake in the company. SBI, ICICI Pru hold between 6 to 9%, and even LIC has a significant holding of 4%. The stock has done nothing much after its July's fall itself, and still falling almost 30 to 35% from its high levels seen. But it becomes very interesting going ahead, because on October 30th, there's a very important meeting coming up where IEX will be engaged in the legal proceedings in the appellate tribunal against the market coupling news order coming in from CERC as well. Maybe there might be a more leverage coming in from IEX side, but either way the stock can move in the day's trade.
Okay, it's settled in the pre-open session, but then again, this is the pre-open session, so keep that in mind. Thank you for that, Sharad. That's actually a gross oversight and corruption that the SEBI has found, and a serious matter there. I'm glad that has come to the fore. Some movers in the pre-open session. Let me come to that very quickly before we get to the big brokerage call of the morning. Surprise, surprise, Axis Bank 4% up in the pre-open session. More provisionings have come in, but clearly the street for now, because of benign valuations, perhaps looking at this as a potential buy. Their asset quality has been improving, GNPA has been improving, so maybe that's one of the reasons. Shrikant, quick word on Axis, Oberoi Realty, Hyundai.
Okay, see, like all these stocks are showing a lot of strength, especially Axis Bank. In fact, this stock was doing much better since the last almost 3-4 weeks, and currently it is around 1200 levels. So while looking at its setup, I am of the view that eventually the stock is heading for 1400 sort of levels. But in the near term, very short term, 1250, 1260 should be the next level to watch out for. And on the downside, it has excellent support close to 1180, 1190. So if there is any fall close to its previous closing level, there the stock is having good amount of support. It was resistance for the stock, now it is going to act as major support. For Hyundai, there also we are bullish, and there also we are expecting stock to move towards the levels of 2750, 2775 again. It is correcting from the highs of 2850, but it's a correction, and again we can expect a quick rally in the stock.
Okay, just want to mark, just before we get to the big brokerage call of the day, Axis Bank, RBL Bank, HDFC AMC and HDFC Life, because these are the ones. Axis Bank is showing that 4% uptake. Is this re-rating going to start with the commentary given by Axis? I think that's the key question. RBL continues on its merry ways and now above 300. It was 270 about week or 10 days back. So a lot of stocks in focus. Also might be in focus might be Larsen & Toubro, because Jefferies has come out with a note on Larsen & Toubro with a 16% upside. Sharad Johnson yet again with the details on that note. Sharad.
Well, yes, L&T is in focus. Jefferies has come out with its reports, and interestingly, they have maintained buy rating, and the target price, that's roughly 16% upside potential coming in from the current prices at almost 4,345 odd rupees. Interestingly, in the technical charts as well, the stock has been given strong signals. Now, the brokerage house has stated that they have outperformed Nifty over the 6-month, 1-year and 5-year basis, all three parameters between 1 to 201%. And interestingly, they believe that the company is on track to achieve or even exceed their FY26 guidance. Over the last 2 to 3 odd months, I was checking the order flows also, and these numbers have also actually piled up significantly. So we could see a good set of numbers actually coming up in this quarter as well. Now, the anticipation that the ENC EBITDA, that's expected to rise at 20%. Now you compare this segment with the older numbers, that comes in at roughly 16% between FY15 to FY19. So there is a margin re-rating happening in one of the key segments for L&T, and visibility is also coming in with a conservative guidance which should drive the stock going ahead. So of course L&T itself, order flows are coming in, and this might also have a spiraling effect in the other infra players as well, as L&T is India's largest infra player, and now the orders have started coming in. Maybe a private capex of a pickup might be there in the offing in the coming months.
Something to watch for, and in fact something that a few companies have already spoken about. But I wonder, Avinash, what do you make of MRPL? The numbers came in, of course, post market hours. It's the top gainer in the pre-open session in the Nifty 500, up 7%, and the margins have improved to 6.6% versus 1% on a sequential basis. Profit improving in multiples. What did you make of the numbers? And by the way, Chennai Petrol also moving in consonance.
No, I think numbers have been much better, Alex. Definitely these numbers have surprised the markets. But I think if oil prices continue to remain soft, I think you're going to see continuation of this kind of quarter in the third quarter also. And I think most of the oil marketing companies, typically the gross refining margins is something which should get a boost up. So I think, the markets are rewarding good performance, and this definitely is getting reflected in the stock price. I think we'll have to see what kind of commentary the management gives, for the coming 6 months. But I think typically the second half is typically a more kind of a stronger quarter, a stronger period for the company. So I think obviously, the year, I think we could expect a further re-rating on the earnings side in the very near term.
Okay, 7% higher. It's quite stunning really what's happening to MRPL in the session today, and a clutch of others. But the one that really caught my attention, Shrikant Chauhan, is Axis Bank, right? I mean, it's a large one. We'll start off on a roaring note. The question is, from a trade perspective, now that we know that it's going to be 4% higher, is there more juice in that trade, Shrikant?
See, I think before the announcement of the result, the stock was considerably on the higher side. It was around 1,050, 1,070 in the month of September. And from there, all the way we saw uninterrupted rally till 1,200 sort of levels. Now, the next level to watch out for would be 1,250, 1,260. And at current levels, I think around 1,215, 1,216, we can expect further more upside because the results are really better than the expectations. Also, if we consider the overall performance of the BFSI space, then Neeraj, there we are seeing good amount of activity. And this time the FIs activity, the FIs, they are also not selling much. So I am of the view that more parking should come for the stock, and we can expect 1,250, 1,260 sort of levels. But eventually I am expecting stock to move towards 1,400 levels. So today also, even after opening 4% higher, we should look for taking some long bet on the stock.
1,400 levels. Avinash, I spoke to you earlier about Axis and you found the results very dismal. We have a 1,400 rupee target price from Shrikant.
No, I think, Tamanna, I think this is just a one-day bump up. I think let's wait for some time. Today, the markets are on a kind of a good sentimental note. I think Shrikant is a very good technical analyst, so, he has his view, which I respect. But I think we'd like to wait for some more time before we venture out, after the stock has gone up by 4%. But our bet would be ICICI Bank. I think we feel that ICICI Bank is much more stronger and well positioned, to probably move ahead beyond 1,400. Our target price is around 1,550 here.
1550. Okay. One day move maybe on Axis, but ICICI Bank is Avinash's choice. Shrikant Chauhan, quick 20 seconds, your top call for the day today.
For the day, yes, I would like to go with MRPL. It is very close to its breakout level and close to 152, 153 it has resistance, but above that the stock can go up to 160 sort of levels. So MRPL looks good at current levels.
Okay, and just before we start, viewers, this is the thing. I've just brought it up again. This is from an interview that NDTV Profit did with the Titan management, and the lines, the key lines, they're saying, won't be surprised if we run out. This is Tanishq seeing the surge in jewelry demand amidst the festive rush. And remember, this is happening with gold prices where they are. Just tells you a story about what's the kind of consumption rush that we're seeing. Gurmeet Chadda posted a post saying that autos may see the best month ever. Maybe we'll talk about that as well. But here come the markets this Thursday morning. In the green yet again with the Bank Nifty in focus. We spoke about this early morning. Maybe more rate cuts. Axis Bank, RBL Bank and lots more. IT is taking a back seat, but nobody's complaining because the Nifty and the Sensex are up 0.3% each. Mid caps and small caps should come up on the screen next. 0.21% for the mid cap index, 0.33% for the small cap index as well. This is looking good, guys, at the start. It's a sea of green, save for IT. Now let's get the heat map up on the screen. Axis will dominate. Not 4% by the way, but 2.95% ahead of results. Eternal is up 1%. There is strength in Kotak Bank, there is strength in Adani Enterprises, strength in Eicher, Bajaj Auto. So autos are doing well too, and giving company access is Kotak and HDFC Bank. So that's the texture of the top gainers on the Nifty, more green than red. What is down? HDFC Life. Numbers seemed in line, but there is a sharp cut in the profit estimates for FY27 and FY26 because the margin numbers have been reset a little bit, and which is why I think HDFC Life is sulking. It may not necessarily have prolonged downticks. It's a one-off 6-7% EPS cut. You probably see 4-5% cut in the price and then maybe some bit of a pullback. SBI Life, Infosys ahead of numbers, ONGC, Wipro, TCS. So IT is sulking. HDFC Life is clearly the one standing out on the long side, on the wrong side. But Axis and Kotak and HDFC and Adani Enterprises and Eternal, Tamanna, it's a nice cohort of stocks moving up today.
Today, all of the morning watch list has performed exactly opposite to what was expected. Axis Bank, a lot of disappointment on the numbers, more provisioning coming in, but the shrinkage of the GNPA as well as the fact that valuations are now looking attractive means that stock is up, Kotak, etc. following through. Eternal also will report today, so that's why up. HDFC Life, actually the numbers look pretty decent, but I guess the management commentary and the outlook has kept the stock depressed at 4% down. Nevertheless, the markets are looking good this morning. I think that's what's important, that festive cheer coming in. Let's pull up the broader markets for you as well and just give you a sense of what's happening there. Flat on the Nifty mid-cap 150, but at least in the green is the Sensex and Nifty that are roaring right now. 0.25% up on the Nifty small cap 250. Let me pull up the sectoral heat map for you and give you a sense of what are the sectors that are moving. We told you this morning that it's banking stocks that will work. Private banks, Nifty private banks, and remember, all the big numbers are actually coming this weekend on Saturday. So that's up about 1%. Bank Nifty also up. Realty doing well because you have had some decent numbers so far, and Oberoi Realty was decent as well. On the losing side, Nifty IT taking a breather. Remember, some big numbers today as well. You'll hear from Infosys, Wipro, LTI, Mindtree, but not down in the dumps, just about 0.25% down on that index. Today, PSU banks left out of the party entirely, but largely a green screen. India VIX, let's just take a look at the India VIX very quickly and see what the mood is up there on the volatility index coming up. Mildly in the red, that's a good sign if the volatility index is in the red. The Nifty staying strong and now above the 25,400 mark. Truly, you're having a happy season of festivities right now. The Nifty above the 25,400 mark after a very long time. Let's see if it stays up there, 25,407 right now. So that is looking good. Let me talk about specific stocks this morning. And in results. Earnings is on top of mind. MRPL, good set of numbers, positive surprise. Oberoi Realty, decent set of numbers. Axis Bank, Street loves whatever they're seeing. MRPL really the standout this morning, 7.5% up. Rossari Biotech, HDFC Life, let's look at a few of them as well. Rossari Biotech actually looked like a very decent set of numbers, but mild response there. HDFC Life, there's something that the street is not liking at all. L&T Finance is the other one that I'm going to talk about, and KEI Industries. True, L&T Finance is something that the street has not tracked too much, but it's not really down in that sense. KEI Industries seems to be the howler of this morning, nearly 7.5% down on those numbers, which optically, frankly, were not that bad. There will be a board meeting in a few days. Emirates NBD will come in and buy. That's a story that NDTV Profit has broken 1.5% up on that stock. Ola Electric, there is a new launch which will be announced today, about 2% up on that stock. And, quite a few earnings there looking good this morning. So you have earnings in focus as the big driver, but the overall sentiment definitely positive. This is a better opening than we've seen in quite a few days, Alex.
Yeah, you said it, and it's building on the gains that you saw in trade yesterday as well, with that 0.7% move up for the Nifty 50. Now we're trading above 25,400, and frankly, Shrikant Chauhan's target or view for the Nifty 50 at 26,000 in a few weeks does not seem too far away. In fact, it's just less than 1% or so for, or maybe a little more than 1% for the Nifty 50.
Hopefully not the famous last words.
Yeah, hopefully not the famous. I don't want to jinx it. Okay, let me take that back. Let me take that back. All right, let's speak about a few of the stocks that are moving beyond what we've discussed so far. ITI is up about 4% or thereabouts. Alok Industries up in about 3% or so. And interestingly, Bank of Maharashtra building on the gains from yesterday and looking quite strong. You have 2.75, close to 3% gains for Bank of Maharashtra on the back of its numbers that were posted yesterday. Westlife Food also up in about 2.3% or so. In fact, for the Nifty 500, this should give you a sense of the broad-based nature of today's move. There are 359 stocks that are gaining out of 500, and you have 134 that are losing ground. Among those that are losing ground, we've already marked KEI Industries, which is off the low point of the day. HDFC AMC also reacting negatively, posted its numbers overnight or post-market hours and reported, in fact, the stock price is down as much as 3.4% or so. Anantraj also losing about 3% or thereabouts. If I remember correctly, Avinash's call is on Anantraj, so we'll go to him in just a bit to find out whether or not this is an opportunity to add. But Shrikant, I want to ask you about Bank of Maharashtra. Yesterday, it was one of the key movers. Would you say that it's a good idea to get in at these levels as well, considering the kind of up move you've seen in a few days? And perhaps we can pull up the weekly chart for Bank of Maharashtra.
See, in the near term, if we consider the technical pattern of last 2 days, then it was around 54 levels. From there all the way, it is at 61, 62, which is far away from its important support levels. But yes, if there is a medium term view, then I think the stock is heading for its previous high of 70 sort of levels. So at these levels, it looks like quite stretched sort of stock. In case if there is any correction, then close to 57, 58 levels, 57, around 57 levels, it looks quite attractive to buy for. At these levels, it is better to stay away.
Okay, just want to mark Huhtamaki India as well. I think the net profit has risen dramatically, and which is why the stock is up 12.73%, 1.3 million shares on that price traded already in the first 6 or 7 minutes. So pretty good going for this one as well. Keep this one in mind. Rossari Biotech came out with numbers. I wonder if that stock is reacting to that. Should pull that stock up as well once, just to see what's happening there. No quick moves. So, but Avinash, I'm guessing you would be tracking Huhtamaki, Avinash? Won't be surprised if you did.
Yeah, I think Neeraj, this is a very old company. Paper Products Limited was the old name.
Yeah.
An MNC FMCG company, very well established in the FMCG packaging, flexible packaging segment. I think numbers have been very good. In fact, markets were pleasantly surprised both on the EBITDA margin as well as on the bottom line growth. And I think typically, business takes off more in the second half. So I think we could expect a much more stronger third quarter I think overall, this is a clear indication that, they are a pure play on the FMCG segment. So I think that means that most of the larger FMCG plays also could come out with much better numbers than what the street is expecting. So I think definitely, it should look better. Even at these levels, I think if one were to look at the next 12 to 15 months, the outlook looks positive if they could maintain the same trajectory over the next 6 to 8 months.
Okay. Gentlemen, thanks so much for joining us this morning. Absolute pleasure speaking to the both of you, Shrikant as well as Avinash. Thanks so much for taking the time. 25,400 being held for the benchmark Nifty 50, just about 2.5% away from that 26,000 mark. The question is, how soon do we get there? 39 or 40 constituents on the Nifty 50 advancing in trade right now. And let's see what are the top gainers, because you have a few casualties as well. Axis Bank, it's off the high point of the day, which was 4% higher, but it's still gaining about 2.8%. But speaking about results, it is a strong quarter for L&T Finance, even though the company is seeing a little bit of cuts this morning off the low point of the day. Retail loan book crosses 1 lakh crore rupees. In fact, we spoke with the management. Here's what they had to say.
I think, Q2 is traditionally a weak quarter for BFSI firms, but what we have seen this quarter is a very strong disbursement momentum. As you can see, disbursement grew by almost by 25%. Now, one of the sort of important contributory factors to that was that the microfinance industry sort of asset quality issue, which had been lingering for almost a couple of quarters, actually has shown signs of resolution, and we saw our microfinance disbursement grow quite a bit. Over the quarter, we did about 6,300 crores of microfinance disbursement, which was almost close to about 2,000 to 2,100 crores per month, which is almost the highest ever that we had done in March 2024. So in a way, the normalization of the microfinance disbursements led to some good amount of momentum in our disbursement growth, as well as the growth in personal loans, as well as in the two-wheeler business. So overall, most of our sort of major lines of business actually performed very well in this quarter, which gave rise to a good disbursement momentum as well. In terms of the collection efficiency on the microfinance side, we saw reasonable normalization. Overall, our microfinance sort of collection efficiency in the month of September ended at about 99.5%, though it's a shade of what we consider as business as usual, but it is almost trending towards normal. So obviously we are seeing the fag end of the microfinance asset quality, industry asset quality issue, and we expect that H2 will be a far more normal operating period for this business. In terms of the other lines of business, every line of business has shown a sort of movement forward, and we expect that H2 will also be a very good momentum in terms of disbursement as well as asset quality improvement, driven by the GST 2.0 reforms, as well as the sort of the impact of the several credit sort of improvement initiatives from a digital perspective that we have been carrying out in L&T Finance for the last 12 to 18 months.
Talking about the gold loan business, now there, of course, you've seen strong momentum in disbursals, and you're adding more branches to the gold loan side of the business, about 200 new branches this financial year. It's a new business for you relatively compared to the other lines of business. What is the outlook going forward?
See, this is a business which is a high yield secured business. Obviously goes well with our overall sort of trajectory of adding more secured businesses to our overall product portfolio and balancing our product portfolio more prudently between secured and unsecured businesses. So obviously this is a business we will focus on quite strongly over the next coming quarters. We have announced yesterday that we are going to set up almost 200 branches in the remaining part of the year, which almost means that we have to open one branch every day for the remaining part of the year. We have got a good business and a good franchise which we acquired from Paul Merchants Finance Private Limited, and we amalgamated the business into L&T Finance earlier in June this year. And I'm happy to state that the business integration has gone very well. The disbursements momentum is continuing. In fact, it is increasing with every passing month, and I do believe that the addition of the branches, especially in the geographies that Paul Merchants is strong in, also in the geographies that we are strong in. For example, we will see a reasonable amount of expansion in the eastern and the western part of the country, apart from the northern part of the country. And so overall, these 200 branches will be more or less distributed in the northeast and west of the country. And we expect that, the overlap with our rural business finance portfolio, the microfinance portfolio in which we are strong in, will give us a very ready-made catchment in the villages that we operate in to funnel into our gold loan branches. To, in a way, the gold loan branch actually will add as a force multiplier to the existing business that we have in the microfinance business in terms of customer catchment. So we are very bullish about this business, and I think this business will continue to perform very well within L&T Finance in the quarters to come.
All right, so that's the management of L&T Finance talking about how the quarter has gone by and what lies ahead for the company. But, the other counter that has remained in focus post yesterday's announcement of a new launch of premium lifestyle and hospitality brand is Chalet Hotels. Athiva is a new age premium lifestyle hospitality brand that they've launched, and that's debuting with 900 plus keys across 6 hotels. And, this is a transformation of the already present the Duke's Retreat in Khandala that they are doing. And to take this conversation ahead, we are joined by Sanjay Sethi, who's the MD and CEO of Chalet Hotels, joining us now. Mr. Sethi, very good morning to you, and thank you so much for taking out the time. My first question to you is that what is the core vision and value and proposition for Athiva, and how does it differ from the already present existing brands that you have in your portfolio? What is the target customer that you are right now aiming at?
Look, we've been in the business as Chalet for 25 years and largely focused on building hotels, asset managing hotels, and over the last few years operating hotels, ourselves, some of them. But each of them were operated in individual names. It didn't make sense to do that. So what we're doing in a sense is stringing all the hotels that we run ourselves together under a common name and in a sense creating a brand. The brand is all about joy, wellness and sustainability, and the principle here is to position it to the new age travelers of today, or the mindset of the new age travelers. And when I say millennials and Gen Zs, I'm not age profiling our guests. What I'm saying is the mindset of the young travelers is what we're targeting. These are young, affluent travelers who are ready to spend on experiences, and experiences is what we are offering at Athiva Hotels and Resorts.
Understood. And Mr. Sethi, what are the short-term targets, let's say 1 or 2 years, and medium-term targets 3 to 5 years in terms of expansion for Athiva, and what's the number of keys and locations that you're planning to add in? Can you provide a roadmap? And will Athiva be restricted to an owner-operator model, or are you actually open to third-party management contracts to accelerate the brand expansion?
So let me make it clear that we are not in the business of planting flags right now. So we are going to run our own hotels under Athiva Hotels and Resorts brand to begin with. I think every other brand of any repute in the world has done that to begin with. But are we creating an opportunity of an asset-light vertical at some point of time? Absolutely. I think what we're doing is we're creating a springboard ready for launch whenever it can be. Maybe the next generation of management a few years down the line can think that's the right way to go. But right now our focus is on building and operating our own hotels under the Athiva Resorts brand, Hotels and Resorts brand. Today our portfolio that we've just announced has 6 hotels in it, hotels and resorts, totaling up to about 900 keys. The first of that opens tomorrow, which is the Athiva Resort and Spa Khandala, which was earlier known as the Duke's Retreat. A few months down the line, we will have a business hotel, Athiva Business Hotel, positioned again in the upper upscale segment at Vashi in Navi Mumbai. A couple of months after that, we'll have another resort on Aksa Beach that will get branded as Athiva Resort and Spa. So we'll have 3 of these coming up pretty quickly, one after the other. Then there are 3 other locations that we've announced which will be branded as Athiva. 2 of them are in Goa, one in North Goa at Bambolim, the second in South Goa at Varka. Each of them is going to have between 170 to 190 rooms positioned at the high end and to be market leaders in those markets. They are both stunning waterfront properties, seafront properties with great stunning views. And finally, we've announced that we have a hotel or a convention center and hotel that we are planning, working with the government of Kerala in Thiruvananthapuram, which in phase 1 will have a convention center and about 150 rooms, and then we'll keep expanding. It is 44 acres of land in all.
Interesting. And Mr. Sethi, considering all of this expansion that's going to happen, what is the kind of Capex in place for Athiva as a brand as well? And how does this compare to your already existing plans of Capex for the international brands that's there in your portfolio as luxury brands?
So pretty similar. The Capex will not change. I think the one thing that we're doing differently, because we're so focused on sustainability as one of the 3 pillars for Athiva, the other 2 being joy and wellness, that we're making sure the carbon footprint of hotels that we build out is low, and therefore there's going to be a lot of use of local material, and therefore there could be a cost implication which will also be beneficial to us. But the focus there is sustainability in what we build. On a cost per key basis, look, some of these costs are historical. Dukes overall is going to cost us, including the cost of acquisition, the renovation and the expansion that we're doing there, roughly around 300 crores. We have roughly around 2 crores per key in Goa, including land price and IDC. Trivandrum will be lower, it will be around 1 crore a key. So basically, what we're saying is between 1,000 to 1,200 crores is what the total Capex outlay for these 6 hotels that we spoke about is. And a lot of that is already spent because we bought the 2 Goa land parcels. We've almost completed the Duke's Retreat into Athiva, and the Vashi one is also half done. So we've already spent all that Capex.
Okay, and what is the kind of projected revenue per available room and EBITDA margins for Athiva as a brand, and of course the properties compared to your portfolio average, and what's the kind of operational efficiencies that are expected from managing this property brand?
It's going to be our own brand, so there's no management fee payout. So that's the first thing that we're going to keep in mind. It'll all come back to us again. So we expect the margins to be very good and strong, and we do not do any asset or add any asset to a portfolio that's going to dilute our margin. In fact, we look at margin expansion with everything that we do. On the RevPAR question, we don't give forward-looking numbers, but let me share where we are today. Duke's Retreat, when we acquired it, was doing an average room rate just shy of 8,000 rupees. It was 7,000 and change. Today, it's already operating pre-launch at about 14,000 rupees. So that's probably the sweet spot for us. We expect Dukes to get to about 65% occupancy. So if we take 2/3 of 15,000, the RevPAR is about 10,000 rupees at Dukes. Each market will have its own RevPAR. Goa is going to be different. Vashi is going to be different. Trivandrum will be completely different because it's a convention center. But what we'd like to ensure is that each of the hotels contributes positively to our margins that we have delivered historically and will deliver in the future.
Okay, Mr. Sethi, one last question to you. How is the second half of FY26, looking like, considering the trends that you must have picked up this festive season, which has already kicked in? What is the kind of, occupancy rates that you're observing? Plus, what are the EBITDA margins that you're aiming at for full year FY26?
Most of this is not going to come into play in the current financial year because Dukes is just being launched tomorrow into Athiva. So Athiva Khandala opens tomorrow. 4 Points by Sheraton will only open in January into Athiva Hotel. And subsequently, 2 months down the line will be the resort in Madalin, which will convert to the Athiva Resort and Spa, Aksa Beach. So they're not going to expect it to contribute materially to 2026 financial year P&L. But next year onwards, I expect that to be significant. You must remember that Dukes has been under renovation for over 1.5 years. There's been very little inventory to sell. 4 Points has half its inventory out of action for renovation. And therefore, there won't be any visibility in this financial year. But from next financial year onwards, I expect a strong contribution. Again, I cannot give you forward-looking numbers on this.
All right, Mr. Sethi, thank you so much for giving us all those insights, and a very happy Diwali to you and your family as well. And thank you so much for taking out the time. Interesting conversation there, Neeraj. In fact, even if you look at their expansion plans, quite significant. They want to double their capacity in the next 3 years, but valuations don't look cheap for sure. So we'll have to wait and watch out for as to how these additions reflect on the top line as well.
Yeah, and coincidentally, disclaimers, so because there's nothing, but I met with the whole team of Chalet yesterday evening on Athiva and on their plans going ahead. On the buzz around the festive season and the outlook ahead. They are extremely confident of what the October, November, December quarter would show up. So the near term certainly looks good. Maybe that is something that the stock is pricing in as well right now, Mahima. A great interview, Mahima. Thanks so much for that. I just mark a few other stocks before we get to Hyundai. And want to mark KEI. KEI is down 5% in trade. I think one of the reasons could be, and it's recovering a little bit, but one of the reasons why it is down about 4.5-5% is because relative to the estimates, the EBITDA was maybe 10-15 crore lower. And I think for a stock trading at about 50-52 times, depending on what your estimates are, even a slight miss and maybe some trading positions built up might lead to this kind of a performance. So keep this in mind. Now, I wonder if smaller PSU banks, the Bank of Maharashtra, not the Bank of Baroda and SBI, but PNB, Can Bank, Maharashtra Bank, Indian Bank might be active today. Marginally in the green, nothing dramatic, because I thought that this whole mega bank merger plan, small lenders to be clubbed with the larger ones, I thought there would be brisk activity, not quite seeing that. Okay, Hyundai is the other one. After rising from the lows, hitting all-time highs about 2,900 and cooling off a bit, I think the commentary from Hyundai has been very, very positive, right? It's gearing up for a very aggressive product blitz as well. 26 new models in the pipeline across segments. As part of its long-term India strategy, company will also introduce its Genesis luxury brand by 2027, marking a bold push into the premium space. My colleague Puneet spoke to Tarun Garg, who will be the first Indian CEO to head Hyundai Motor India. Listen in.
Mr. Garg, thanks so much for joining in. Firstly, many congratulations to you personally as well. You've been announced as the MD and CEO since from 2026. So firstly, many congratulations.
Thank you so much.
On becoming the first Indian CEO of the company. What is that like? It has been a long time coming for you, been in the industry for long. What does that feel like?
It's an amazing feeling, and of course fills me with a lot of pride to be the first Indian ever to lead HMIL. And of course we had IPO last year, and which was the biggest IPO in the history of India, and I had the huge honor of leading that IPO as well. So I think now we are truly an Indian company, and with my appointment today as the CEO with effect from 1st January, it brings in much more of Indianness, and of course, like you said, so many investments. So I think this is the beginning of the second phase of growth for Hyundai in India. We have been very successful in phase one, almost close to 3 decades. In terms of volumes, 9 million cars sold in India, more than 3 million exported, so many marquee brands, Creta, i10, i20, Centro, Accent, Venue, etc. So I think, yes, so much to look forward to now.
I think there's just a sense of energy which you have been showing since listing. I think post the first couple of quarters, even in your conference calls, there's been that energy, and always something that you mentioned, the Indianization of Hyundai in India. That's been one of the focal points, right?
Absolutely, because of course we were always Indian. If you see the kind of models we have launched, it's not always that in fact okay, there's a model doing well in Korea, let's bring that. No, I think the idea was always to bring India specific models, so that is a part of Indianness. Of course, localization, if you see the vendors, today our localization stands at 82%. So in our campaign, Shah Rukh Khan being our brand ambassador now for what, 27 years, again reiterates that fact. Of course, more and more expansion now with the Pune plant coming in. So you can see that Indianness was always there, but the IPO was like the icing on the cake. And today, like you heard, that more localization, more new models, 26 launches, 7 new nameplates, cleaner fuels, 8 hybrids, 6 CNGs, 5 EVs.
Go on and on. But let me just start with a couple of key aspects of what you just mentioned. One is that you've actually come out and told the street about a revenue as well as margin guidance. I think it's the first time that an Indian automaker is doing that. You're roughly at around 69,000 crores last year. You want to go to 1 lakh crore by FY30. Will that be led by new model launches, as well as where's the confidence coming from to come out and say that in your first year since listing?
Look, frankly speaking, we have always grown in India, and the volume, selling close to 600,000 in the domestic market, and of course exporting as well. So the confidence is always there. If you see the launch plan, 26 model launches, 7 new nameplates, blah blah blah. So 7% CAGR is what we are looking at in terms of volume, which should give us this kind of a 1 lakh plus 1 lakh crore plus revenue. We have always believed in quality of sales, a balance between volume and profit. Now that we are listed, I think this is our responsibility towards the shareholders. So very, very important aspect of this thing. In terms of technology, we have access to all the technology which HMC has. So you can see that there are, otherwise the OEMs are either inclined towards CNG or electric or hybrid, but here is one company, Hyundai, who has announced that we are going to be in all kinds of cleaner technologies. In fact, more than 50% of our sales would come from the cleaner fuels in fiscal 30.
And just taking forward that point, what do you actually make of the consumer in this particular point of time? Do you expect that the adoption will not be led by CNG, because that's been what the history suggests in terms of alternate fuels? It will also be led by hybrid. It will also be led essentially by EVs. Is that what you think the Indian consumer is going to go to in the next few years?
Absolutely. If you see, even today, at the entry level, we offer the customers petrol and CNG, because for that customer, the initial cost of acquisition is very important. But for the SUV segment, he wants the petrol and the diesel and the electric. Going forward with the hybrid in our array, so I think there will be much more options. So there's no one solution which the customer has, and going forward for different segments, for different geographies, also customer choice will be different. Today, there are markets like Punjab and Telangana and Madhya Pradesh and Gujarat who want more diesel. There are markets like UP and Maharashtra who want more CNG. There are markets like Delhi and Northeast who want more petrol. So even today, different states behave differently, India being such a vast country. So going forward, I think there's an opportunity for all kinds of technologies in India.
The other one, the one which I had was, the huge investment plan that you announced, 45,000 crores. How much of that will actually go in, the additions of Pune plant? I think eventually post FY28, you're looking to add almost 2.5 lakh capacity there, which will take your capacity to almost 11 lakhs in India. So if you could just give us some perspective on model launches, on capacity addition and upgradation.
So Puneet, we have given a lot of information today. So I think you can, of course, going forward, yearly basis, we will keep on adapting and seeing what kind of Capex will be required in every year. In terms of model launches, like I said, these 26 will have about 7 new nameplates, which is very important. And the number of nameplates in fiscal 30 will be 18, including the derivatives. And of course, like I mentioned, there will be 5 EVs, there will be 6 CNGs, there will be 8 hybrids. So I think we'll have a very rich portfolio which will cater to some new segments as well. We announced the entry into the MPV segment, entry into the off-roader segment. Of course, we have announced the entry into Genesis in India in 2027. We have announced that a fully dedicated EV is going to again be launched in 27. So you can see that we have a very, very aggressive plan, and we want to have a 15% plus market share and EBITDA guidance of 10% to 14%.
Let me take the point a little bit more on market share, because you've been an undisputed leader in the number 2 market share for a while now, almost a decade or so, if I can count the recent time frame. But that has been challenged in terms of competition. With the new launches, with what you're expecting the Indian consumer with multiple powertrains, do you expect that the road ahead will be much tougher than what it has been?
Look, road has always been tougher and the challenges always come up. I have been in the industry now for 32, 33 years and there have been different kind of challenges. Important thing is what is your strategy and how do you execute that strategy. So it has to be, for us, it has always been a balance between volume, market share and profits, and that is how we want to move forward. Of course, we are very, very passionate about the number 2 position. At the same time, like I said, being listed, we have a responsibility towards shareholders. The other thing is we want to really keep on focusing on exports, because right from the time we set foot in India, exports has been an integral part of HMI strategy. So we don't want to let go of that, because that gives us a precious foreign exchange, and of course the margins are very good. So I think this is very, very important that you have a very comprehensive 360-degree view of the situation rather than only focus on one aspect of the business. But yes, of course, with the Pune plant coming in, I think there will be a headroom both in the domestic as well as in the export market to grow share as well as volume and profit.
The other detail that you've given in this particular Investor Day has been the launch of a EV coming up very soon, and that could be in the compact SUV space. Could you talk to us a little bit about both the compact SUV space as well as launching an EV in that particular space as well, because very limited option for buyers right now?
So look, if you see especially these compact SUV space, I think this is the most exciting space with the maximum competition. The venue segment is doing really very well in terms of growth, in terms of volumes, and of course in terms of getting a good quality of sales as well, because that is the customer who is wanting higher trims, who is wanting automatics and DCTs and sunroofs and infotainment as well. So we are very excited by the segment. Post GST 2.0, we have seen a big growth coming in that segment as well, and that segment also wants EV. So I think we have announced a fully dedicated EV, which will be a base up new EV, not a derivative model, for India, exclusively for India, and of course to be exported as well in early 27. So I think that's a very exciting space, and we are very, very hopeful that will really set the ball rolling in terms of increasing Hyundai's EV market share as well.
Do you largely feel that with exports, and I think the plan is to go to 30%, that sets you at a very distinct advantage to the other players right now, because that is where they are starting to build that up? And also, if you have actually seen a change in strategy, because we have a couple of players who are going to new geographies like Australia, like South Africa, you must be already present there. To give us some perspective on that.
So look, obviously with the exports comes more volumes, which gives us economies of scale, higher efficiencies, better productivity, and of course foreign exchange as well, and margins are very good. So exports are very, very important and very critical part of our strategy going forward. Of course, as of now, more and more exports are of hatches or sedans. Going forward, as we introduce more and more SUVs, I think this will again throw up more opportunities for export of SUVs as well. So I think it's a very comprehensive plan that we have. Many of these 26 launches that we are going to have are going to add to exports as well. Of course, whether it is the Middle East or whether it is Latin America, Africa, or even markets like Nepal and nearby markets as well, there is a huge scope both for ICE as well as hybrids and EVs in all these markets.
You highlighted a very interesting point in your compact SUV answer, that the buyer wants a lot of things in the price point that he is looking to give to a car company right now. Do you think that over the last few years there's been a lot of over-reliance on models like Creta and Venue, and now with this investment plan you will be able to adhere to a lot more, because those are very, very popular models which have hit the nail on the head for that buyer? Do you think that those two models will of course continue to dominate your percentage of total sales that is in India? Or do you expect that the other ones will catch up now?
Of course, we are very, very proud of Creta and Venue, because they have been the kind of a flag bearers in terms of volume, market share, profit, leadership. At the same time, we have very exciting products like Extra, which is doing very well since the time it has come in India. Of course, we have the i10, the Aura, volumes continue to go up with a CNG option to the customers. Going forward, like I said, we have a plethora of products which are coming up. So obviously, with a more diverse portfolio of models as well as powertrains, we will see the better volumes coming in.
ट्यूबवेल में जल ताकि खेतों में चले हल। तो लगाइए सार्थक के सोलर पैनल। घर हो या खेत, होता है कार है। सोलर मतलब सार्थक। ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल। तो लगाइए सार्थक के सोलर पैनल। घर हो या खेत, होता है कार है। सोलर मतलब सार्थक। ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. One of the
Welcome back to India Market Open. Clearly, Nestle is going to be a stock that is in focus from the consumption side. A modest revenue uptick is what is expected, mainly supported by the price hikes that they've taken in the premium segment. But the profit may take a marginal hit, and this is only on the back of higher input costs and subdued volume growth. To decode what's in store and how the demand is shaping up, let me go across to Mahima to get us all the details. Mahima, ahead of the numbers, the stock is nearly seeing gains of 0.5%, so there is some bit of positivity. But what are the key numbers and the key things that you're going to watch out for?
Right, so Hiral, the slight positivity could be because demand recovery is in sight, but overall costs of palm oil and coffee are still a concern for Nestle. In terms of where the numbers are concerned, as per Bloomberg estimates, revenue growth is at around 5% is what is expected. EBITDA may be flat, margins could be at the same level as they were in Q2 FY25, and net profit could fall quite a bit. 29% is what the Bloomberg estimates are suggesting. Now, what to expect? Modest top-line growth, as you mentioned, supported by price hikes, and largely in the premium segment, the price hikes have been taken. Gross margin could see a decline, and on the back of that, EBITDA margin will also decline. Export revenues could grow in mid-single digits, and that is something that will push the top line as well. And volume growth likely to be in low to mid-single digits. Now, key things to watch out for, of course, the commentary on raw material prices and what are the kind of price hikes that the company has taken. Secondly, management's commentary on demand and material cost, and whether they fully have transferred the GST benefits or not. Of course, the GST transition could also have a bearing on this quarter for all of these FMCG staple companies. And lastly, commentary on growing competitive pressure, which is always there to stay for something like a Nestle. So all of these things are the key things to watch out for, and something that you can expect ahead of earnings for Nestle.
Okay, so that's with regards to Nestle. Thank you, Mahima, for that. In fact, two listings, Neeraj, we are watching out for. Canara Robeco and Rubicon Research. One, I'm sure Rubicon is something that you would want to talk about.
As you would want to.
And CDMO is something that all of us are talking about, and pharma, that is in focus. But both of them, we're just a minute away from listing. But anything that you would want to add on either of them that you've been hearing?
No, just simple scuttlebutt more than any other form of research, because we did a bunch of events this Diwali. Almost everybody that we've spoken to, very constructive on Rubicon's prospects, and which is why I think that the QIB book saw the subscription that it did. I wonder what the listing could be like, but over 100 times subscription overall is nothing to scoff at. Canara Robeco will suffer from in a relative comparison, but it's okay.
Yeah, and you know, they have had a very good record when it comes to cost-effective manufacturing. Secondly, when you talk about R&D capabilities, that's what everyone's talking about. That is something which is absolutely strong for them. Only high revenue concentration in the US market is what they are concerned about. But let's see what that number looks like. With just 2 or 3 seconds. Canara, Robeco AMC and Rubicon Research. Both of them in terms of new listings. Rubicon Research 25% upside. 610 is what you're seeing. Canara, Robeco 6 to 7%. 25% not as bad at all, with a LG which was at 50. 50% of that, but a strong listing.
Yeah, I wonder if this one settles and then actually sees some more upside, simply because of the fact that the bullishness around this space, especially after Biosecure Act, and the fact that the valuations and the capabilities that Rubicon has come up with is something that has worked for a lot of investors. So I will keep an eye out for that for sure. We will, during the course of the day-to-day viewers and maybe on India Market Close, try and get in a research analyst to try and speak about some of these aspects as well. So please keep this in mind. Okay, next up, I mean, we are taking Diwali to another level, and we are not only talking to domestic investors who got a great pulse on the markets, but we also thought of somebody who's looked at India while investing in Asia quite meaningfully over the last number of years. Their allocation to India was lower, and they've picked up the allocation now. I'm talking about Santa Lucia Asset Management, and the CEO of Santa Lucia Asset Management, a fund based out of Singapore, Florian Weidinger, spoke to us earlier in our studios, clad in the Diwali attire. It's a conversation you don't want to miss. This is the Worldview Diwali special. I wonder if this festive season, from an Indian purview or an Indian view, seems festive enough in light of the fact that the world is an uncertain place in general, one Truth Social post away from uncertainty, and India has its own share of issues, notably with the US. So how do you see India and the Asian landscape, considering that you are a large investor in the Asian equities?
Well, I mean, festivals are a good moment to forget a little bit the world around us. So, but your prompt is, of course, right. Not only has India had a rough patch geopolitically, but also if you look at the equity market, it's sort of I think it's the biggest quarterly underperformance against Asian equities in 14 years. And you have still a very strong domestic buyer base in the Indian equity market, but the foreigners have kept taking money out. And this has its own reasons, valuation and so on, but really going back to the global picture, it's been an interesting few months. I think a lot of people took the India-US relationship for granted. I think that applies both to people in India as well as people in the US. We can all make jokes that it's one Truth Social post or two individuals dancing with each other, but the echoes that came from the decision of the US to essentially levy 25 plus 25 equal 50 tariffs on India is not something that's easy to walk back from tomorrow. So yeah, this I think will have more lasting consequences. And we chatted earlier on the way walking here to the studio. I mean, during some of our travels covering companies across Asia, we spoke a lot about tariffs and what it means for them. And one of the executives of a big textile outsourcer company had told us that, we look at factories in Vietnam, in Indonesia, in Bangladesh. Thank God we didn't go to India, was his quote, in the face of that announcement.
Yeah. So what is to your mind? Okay, let me first broaden the horizon for Asian equities, because there is this uncertainty, not just with India, with a host of other countries, China, a few others, etc. Right? And there is this whole moment wherein the gold price uptake is telling you is that the world seems to be worried about whether it is geopolitics around impounding assets of a particular nation, or nations impounding assets of other nations, so to say, the way it happened last 2 days ago, and more. So what is your central thought when you think about investing in the equity markets and Asian equity markets in particular?
Oh, that's a very interesting thought. I think, I mean, first of all, I'm a German national sitting in Singapore investing in Asia, but I've been sort of out of Germany for 25 years, and I'm an OCI, so I like to think of myself as somewhat in the middle on this topic. And I think that, I mean, look, for us who invest in Asian equities, the strength of the dollar has been a big headwind for 15 years, right? And the opportunities in Asia and India notwithstanding, dollar strength has subtracted from everybody's returns. But we may be entering a period where dollar strength can maybe no longer taken for granted because there's a counter reaction, right? People call it the debasement trade, metals rallying, gold, silver. It is probably fair to say some of this is occurring in response to some of the actions the West consciously took. This is not about passing judgment on morals and right and wrong. It's just factual that the West chose to weaponize the monetary system, chose to weaponize US dollar bank account holdings in its pursuit of Russia, partially in its pursuit of China, in a sort of big power game. And we can all theorize why and how and whether it's right and wrong. But the fact remains that sort of the key concept of sort of private property and, most important, due process, that things don't happen to you until there's a legalistic judgment, that has called into question, I think, the validity of, if you're an Asian tycoon, do you really want to keep all your money in US dollars? That's sort of question number one. And then question number two, based on what's been transpiring in the US, we've seen the ascent of Miran to the FOMC, and he is the author of the famous paper that suggested that instead of paying interest on treasuries, maybe treasuries should be charged a usage fee as a home for global funds in US dollars. And so as these ideas take hold, it doesn't take much, right? There's about 17 trillion of foreign US equity holdings in US equities. A lot of that is from Asia. There is trillions more in US treasuries. And just a little bit of that money starting to think maybe I need to go elsewhere, and some of that market could be in my home region. That would represent, in relative terms, a very big portion of funds that could be looking for an alternative home. And you know, this is not an end of the world conversation. It's just a gradual adjustment. It's somebody who has 100% of their assets in US dollars deciding, well, maybe I need to keep 20% somewhere else. And I think that's where some of the gold buying is coming from by both tycoons and central banks.
Yeah. Well, Jeff, good luck saying that, hey, look at it and I would like to, you know, move away from all my dollar holdings into something else. But so if you are, I know you are an FI which invests in India, but let's say you are an FI investing across the world. One school of thought, Florian, is that over the next 5 years, yes, the world grows, but the rest of the world, non-US, grows at a much faster clip than the US. Maybe the dollar depreciates gradually as it may be, but in a linear fashion over the next 5 years. What does that mean for fund flows to the rest of the world versus the US? And does that therefore create a good problem for Asian currencies and Asian equity markets?
That is certainly a possibility. I mean, I think as investors, we need to look at what are the possibilities, not what are we hoping for. And while this possibility sounds a little bit like what we're all hoping for, it is becoming a more probable part of the distribution of outcomes. And there are a few things here that you have hinted at, I think, in your question, which is, you know, first of all, you'll have investors reassessing for the first time after many years where there was this famous TINA, there is no alternative, right? And we're seeing this year for the first time allocators who allocate to us saying to us, we are actually subtracting from the US. I haven't heard this in years. So this is something that is starting. The second thing that's starting is that the weakness in the dollar is coinciding with an acceleration of fiscal expansion in the United States. It's coinciding with growth actually slowing relative, as you're saying. And it also comes at a time when everybody's focused on the trade war and the negative headlines, but also coming at a time when the US's net flow from its foreign investment position is turning negative for the first time in many, many years. So the US always had this deficit with the rest of the world as a stock measure, but miraculously had positive net flows from its foreign holdings. Economists have called this dark matter, and that dark matter effect has started to turn neutral roughly this year. So it's an interesting moment. All these headlines are happening at the same time that the net foreign investment flow position is starting to turn neutral from a surplus. So therefore, it's reasonable to say, well, the range of possible outcomes, the outcome where there's a stalling dollar, not a collapse, just a stalling dollar, is something that gets a higher probability assignment from here on.
And therefore, a high probability of a fair, I mean, the last two answers, do they indicate a higher probability of flows into emerging market assets over the next 5 years?
Well, that's, again, a hope and a higher possibility. I mean, if you take this year, given everything you've been reading, you would think this should be the turning point. And we have heard a lot of people taking money a bit out of US equities and putting it elsewhere. Actually, excluding China and Taiwan until very recently, I mean, Taiwan was sort of net flow zero for most of the year. It's now positive 6 billion, I think, year to date. Net flows into Asia are still negative this year. And this is despite the dollar actually weakening and so on. Net flows into every single major Asian equity market are net negative cumulative this year. India, I think, is minus 17 billion. And that's the foreign flow, of course. The domestic flow is very strong, 7 billion monthly domestic mutual fund insurance flowing in. So that story is intact, but the foreign flow into India is negative. The foreign flow into every other Asian equity market is negative. The only exception is actually Hong Kong, which has a lot of the southbound money from mainland China flowing into Hong Kong. So that's actually the interesting story, that despite everything you're seeing, we're still seeing net outflows, and we're coming, depending on which country you pick, most Asian equity markets are in a position where their foreign investment position is back where it was 10, 15, 20 years ago.
Yeah.
So Indonesia, as far as I can tell, all-time low. Thailand, I think, is back to 2012 or something like that. We're talking very sort of low foreign investor positioning in the rest of Asia, and so a little bit of that money flowing back could be quite positive for these markets, therefore.
So is that happening because of MAX 7 and gold, or are there other reasons for it? And therefore, it's not that an Indian investor looking at the FI positioning in India at multi-year lows is alone. It's happening across, and therefore it's not an exception to the rule, but rather the rule right now.
Absolutely. I mean, India is the biggest bucket within that, absolutely. But yes, it's true for almost every Asian equity market that net negative flow this year. And if you look at over many years, actually.
Got it.
However, all good things come to an end, all bad things come to an end. And we're starting to see the configuration where there's a possibility that you'll see some neutral or maybe positive flows into some Asian markets. Taiwan turned positive, I think, in September.
Okay, yeah, and now what? The second highest weightage on the emerging market index, if I'm not wrong, after China, eclipsing India. The other question, Florian, is that when does the dime on India turn? Is it that a foreign investor, let's say for you, for example, right, would you wait for 2 or 3 key events? Would you wait predominantly for some bit of resolution between India and US? Would that be the, if not the sufficient condition, but a necessary one? Would you wait for growth to finally show up because a lot of measures have been taken, and we'll talk about that? Or would it be something else that would make you say that, okay, let me now turn and invest into India, if you are not already?
I mean, for us, we're quite specialized value investors at SLAM, so we invest in single situations. So we are less driven by a country view. We're always driven by the single situation. And I think in India, even in this configuration right now, there are a few interesting corners that have been neglected over many years. Indian investors have been quite growth obsessed, if I may use that word. And we actually quite like, we started to pay more attention over this year into some of the medium-sized InvITs in India, which I know are not popular at all, other than with pension funds. But they're actually offering very interesting risk compensation on a spread to sovereign, which you don't find in other international markets. So that asset class just seems the wrong price relative to how other assets like this are trading in other markets in the world.
Got it.
I like to joke that, sort of, let's say, take the highways. The highways are the highway InvITs are trading at IRRs that are double to triple the implied IRR of roads in China. So it's probably the only asset where India is cheaper than China. Right? Otherwise, Chinese equities are cheaper than Indian equities in almost every sector. And so, so we just significantly increased our allocation to INVITs this month in India as a result of just a view on the sovereign spread being very high. And on a singular basis, a lot of these companies are just trading quite cheap. But as a more general country view, I think you're right that you need to see a little bit of resolution on the geopolitical front for especially the manufacturing export-led to see a bit of light. I mean, nobody wants to think about FDI and 50% tariff land. And then the other thing I think is that, and that's going in India's favor actually, is that the dollar stalling is giving a country like India, also actually maybe Indonesia and the Philippines are in that category in Asia, quite a bit more policy space on the interest rate, right? So as the US dollar is no longer exerting pressure, central bankers in places like India, Indonesia can manage their own economy a bit more and worry a bit less about the exchange rate. And so that actually creates policy space. And you've seen, RBI coming down, 25, 50, and there's a pause right now, but you could argue based on inflation readings and so on, there's potentially room for more, right? And that's quite a new configuration for India, which used to be sort of high rate, high inflation. India turning into sort of moderate inflation, moderate rate. That gives an interesting thesis for assets that are still producing reasonably okay growth in the broader Asian context.
It'll be interesting to see how the composition of the nominal growth changes in real growth and inflation dynamics. But just before we get to that and the special individual things, so if you were a top-down investor, would you wait for the India-US truce to be the key factor? Or would it be that even if that were to exist, but if earnings growth in India picks up because of all the measures that the government has taken, that gives you some comfort? Yeah, I mean, I think you need to be, if you want to really make money, you have to be in there before the truce, right? Because the market, so I think following fundamentals that's the school of investors we belong to. So we would follow the fundamentals, and the macro is a game that we all need to take just as a given. Right? The macro is not something we can influence. The macro is something we're a price taker in the macro game. Okay, so you want to be the price maker, and therefore you want to look at value currently. Yeah. Okay, if indeed, okay, would you be enthused to allocate more to India from where you are right now in your overall Asia allocation, if indeed the whole consumption spend effort that the government has taken starts to result in earnings growth and GDP growth? There are some people penciling in that from this 6.25, 6.5% growth, circa, or between 6 to 7% growth, we might actually nudge 7.5 if all of these measures come to the fore next year. If that happens, would you increase your allocation to India? I mean, we are coming from a low base at the moment. I mean, we had almost a quarter of our flagship fund in India 2 years ago. Wow. We're in particular in the power companies, but we reached, I think, middle of this year, we were at a low of 5% or so of the flagship fund. So we went from being very heavy in India to very low in India. And good call. We're currently inching up. So that was in early 24, somewhat lucky based on individual holdings, but we have been buying, we have probably been adding 200, 300 basis points to India over the last few weeks. Simply because if you look, India is always an expensive market, but worst quarter in 14 years, valuation premium relative to EM is starting to normalize a bit. Is this market really going to trade at a PE of sub 20 in aggregate? Probably not. So it's probably not a bad time because there's a lot of bad news out there, and bad news out there is usually a time when you want to be more marginally interested than disinterested. That's frankly why I'm here. I'm meeting with companies to understand what's below the carnage, and those are interesting moments to look usually. What have you learned thus far? I mean, it's only day 2 of the tour, but and I have another 2 days to go of meeting companies. But I think it's fair to say that. And by the way, I think this is true across Asia. I think there's a great deal of improvement. And you asked me earlier, what would investors need to see? And I think that's maybe the most important dimension for Asian equities and Indian equities, which is the quality of the treatment of minority shareholders. Right? So, and there's an effort across Asia, which the Japanese have been leading, which, believe it or not, the Chinese have been quite strong in.
and the Koreans, which is to really push companies to do the right thing for all shareholders. Some of it through carrots, some of it through sticks. You might have heard the Value Up program in Korea. I'm sure you've heard about the whole Topics Index in Japan. China started with the SOEs and is widening it. They published in November last year the so-called 9 points. Everything in China comes with a number. And that sort of rolled out what they learned from the SOEs into all companies, and a few companies have followed up with various so-called market value management measures. You see the JUMP program in Thailand, Singapore to revive its equity market. India is trying a bit with its own POEs over the last few years. I mean, we've seen the news on banks, but also earlier efforts to make POEs more professional. I think India still is lagging, frankly, the rest of the region in really holding promoters to account and creating a basically level playing field for all investors. And I think a lot of international investors are always concerned about the inherent asymmetry between a dominating shareholder and a minority shareholder. This doesn't have to do with, is one person a good person or a bad person? It's really more, it's always a conflict. Even with a good person, it can be a conflict, right? Take Unilever India, right? I mean, a majority shareholder can abuse minorities even if the parent is called Unilever, right? So, and it can certainly happen with a single promoter. It can happen with the state. And that's really what we look for at the moment in Asia, is in which regions do we see that companies are succeeding in becoming a bit more shareholder friendly. And shareholder friendly meaning that capital allocation is transparent, evidence of cash flow being shared. India is lagging the region a lot when it comes to dividends and share buybacks, right? So there's.
Would you want that? Wouldn't you want Indian companies to actually invest in growth right now? Well, as opposed to dividends and buybacks?
Well, as long as growth is uncertain, investors do like to see some evidence of capital discipline, right?
Yeah.
And the important thing about a little bit of capital return is that it disciplines a board. A board that has to think once a quarter, how much of this money do we retain? How much do we give to all shareholders? How much of the money goes to the cousin through the related party transaction? Capital return disciplines these conversations. Okay. And that's why it's, in our belief, a very important element. And I think a lot of international investors are looking for evidence of better capital management across EM. And that's an area where India has been lagging a little bit.
Got it. Okay, now on to themes. So you told us about InvITs, right? That's something that you like. India doesn't have an AI story worth tom-tomming about. But there are a few interesting themes that have opened up in the last 3-4 years. Energy transition, yes. Some bit of data centers, power demand, so on and so forth,
absolutely.
Right? What do you like?
Yeah, I mean, this is a very headline top-down, of course, for the brevity of the conversation, but I think we structurally like the Indian power sector. We're not heavily positioned in there right now, but if you just compare broad numbers, right, on television, it's always dangerous to cite precise numbers, but in ballpark terms, India is looking at about 400 to 500 gigawatt of generation capacity, right? China is close to 3,000. So just to get orders of magnitude right, and the recently announced project in Tibet is going to add another 60 gigawatt to that number. So 15% of India is being added with an announcement out of China, right? So, and that's of course China's great play over the last few decades, is to become the manufacturing center for the world. They need a lot of power supply for that, but China has a lot of excess power, so it's very well positioned from an AI point of view as well. And AI is ultimately going to be a power game. India is coming a bit from behind there. It shares that with most of the other South Asian nations and Southeast Asian nations. Vietnam has made good strides in building power ahead of industrial demand over the last 10 years, and that strategy really worked. You see what it did for the FDI numbers. So Vietnam and Thailand actually both drove a very conscious power development plan that emphasized building power capacity and then letting the manufacturing come, not waiting for the manufacturing announcements and then building the power plant. But India actually has a few aces up its sleeve. World's biggest hydro reserves, right? So a lot underutilized. I mean, India could close a lot of its power gap with investing more into hydro. There are some stock market ways to be exposed to that in India. So the hydro opportunity in India is interesting because that seems the renewables the most logical way for India to close its power gap, and really the differential in the numbers. If India wants to be a serious player, it can't be in a configuration where China has almost 9 times the power generation capacity of India.
Okay, so energy transition or power demand per se is one thing. What else within India? Top down.
Yeah, and we are. This is more of a sort of an opportunistic thing, but we are looking at. As a value investor, we're always interested in where's the misunderstanding, where's the pain that got us into the road assets recently, because that you had accidents there, right? You had the ILFS drama and so on. Earlier, our interest in the power sector was created by a lot of the working capital issues and debt problems in the sector. So we're always attracted to where's the pain, because that might be an opportunity to buy something cheap. And I think in India, an interesting area to follow, although it comes with unfortunately a lot of personal issues as well, is the rise in household debt, which is still okay actually in very big terms. I mean, if you compare India to Indonesia, for example, Thailand, then India's household debt level is high, but it's not excessive. I mean, Thailand is running at a much higher. I think India went from roughly 30 plus to 40 plus % household debt to GDP, right? Thailand is running closer to 80. Indonesia is a bit below. But let's just agree, it's a bit too high for comfort, and it's starting to subtract from household spending ability, and that's why also the whole consumer story is not so straightforward in India, because that subtracts. But at the same time, there's sometimes opportunity for companies that are in that space and are feeling a bit the pinch on increased credit costs and so on. Might be interesting companies to follow.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सामने के सोलर पैनल। घर हो या खेत, होता है कार में सोलर मतलब साथ, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सामने के सोलर पैनल। घर हो या खेत, होता है कार में सोलर मतलब साथ, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachhrajani. And we're kicking things off with the festive greetings. And so therefore, at the onset from both of us and the entire team at NDTV Profit, here's wishing you festive greetings. Of course, over the weekend is Dhanteras. And the next week is Diwali celebration, so lots to look forward to. And it seems, Mahima, the market is celebrating a little early, perhaps.
Absolutely, and it's good for sure because we saw the pain, in the past. Yesterday it was a good move, but before that we saw 2 days of pain, and now I think the markets are also appreciating and cheering the festive season, so that's good. We're well above that 25,400 level also now. So yes,
heading towards 25,500.
Yes.
And in fact, this morning we had a technical analyst that spoke about 26,000 levels. Perhaps it might be a little too early to look at that. But there's a lot that's happening under the surface. There's a possibility of a resolution of the India-US trade travails, if you can call it that, with the Commerce Secretary heading to the US to continue negotiations. So if something emerges on that front, that would certainly be looked at as a positive. And there are a lot of earnings that have been viewed positively as well, and a few that are not so great, but still have been given a thumbs up by the street. But this week, we've started a new segment for you, and that is NDTV Profit's Cracker Stocks. And we've got Sameer Dalal at the start of the show to tell you what his Cracker Stocks are. Sameer, thanks so much for taking the time, and wish you and your family and your team festive greetings as well. Where do you see, first of all, the benchmark? And that's the hardest thing to do. So maybe you can throw your dart into the darkness. Where do you see the benchmark next Diwali?
Yeah, thank you for having me on your show, Alex, and wishing you and your entire families, your viewers, their families a happy Diwali and a prosperous year ahead. Now, coming to the question at hand, where do I see the Nifty in the benchmark? Well, for the next 6 months, I see it stuck in a range. I'll be very frank with you. These technical breakouts and all these things that keep happening is all well and good. But fundamentals still are not justifying why there should be a run-up right away. We haven't seen the consumption story picking up or playing out. So I would like to say that for the next 6 months, at least in a range up to 24 to 26, and then based on how things work out, it'll be easier to make a call whether we could probably see the Nifty moving up. Net, bottom line, I believe the Nifty over the next 2 years will move up. But it will be based on how things happen. So difficult to take a call, but I'd like to say between 26 to 28,000 would be a fair value for the Nifty. So you're talking of a 8-10% rally in the next 1 year.
Samir, what are the sectors that you will be foraying into in the next 1 year from this somewhat to the next somewhat?
So we are already forayed into them and we've been positive on them for quite some time, Mahima. We've talked about the consumer space. We believe that given all the incentives being given by the government, RBI, and we expect maybe one more rate cut in December, if that comes through, it leaves more money in the hand of the consumer and consumption should start seeing an uptick. So we are very positive there. We think the entire space will do well, be a little selective where valuations are a little better or the growth could be a lot stronger. So, in consumption, unfortunately, valuations are already very rich. So you've got to probably look at where growth could come in more. The other space that we are very positive on is the banking and financial services. If you look at it, NBFCs have already seen a huge run up. Some of them still have opportunities in them, which haven't run up. So maybe you can look at those banking stocks or something where, stocks haven't run up too much, where there's valuations decently priced. I think those could probably see an uptick. And the third is the auto ancillary side, where we think, because the growth in the autos is expected to sustain, the auto anc space is expected to do well going forward. So these are three spaces that we kind of like at this point of time. But of course, things will keep emerging and changing over time. Cement is something which could probably look attractive if the real estate side starts seeing an uptick as well. So we got to see how things play out. But at the moment, these three are the three top focuses for us.
Would your stock picks at this moment for the long term, based on fundamentals, of course, be in these spaces?
So they are obviously in these spaces. There are also some of them which we had bought long before where we still remain very constructive, like energy, renewable energy, stocks like Sterling and Wilson Solar or Suzlon Energy where we remain positive, NTPC Green where we remain. So there are stocks outside of these spaces. But yes, if I had to do incremental buying at this point of time for the next 1 year, this would be the space that I would do it in.
Okay. All right. Samir, absolute pleasure having you as always, and look forward to the next chat. Talk soon.
Thank you, Brian.
Let's bring in our experts for the day then. We've got Tapan Doshi joining us this morning, as well as Kush Pora. Gentlemen, thanks so much for taking the time, and wish you and your families festive greetings as well. Let's kick things off with the first question today. And we've got a question on PG Electroplast. This is a question... I'm trying to find out who this is. Bhavishya, I think. Bhavishya is writing in, asking about this. And 2,500 shares of PG Electroplast bought at a price of 650. What is the target price and stop loss for a period of 2 to 3 years? So it's a pretty long-term holding. Kush, with that caveat, not looking at the short-term charts, looking at the long-term charts, where would you place a stop and what would be your long-term target?
Sure. First of all, very good morning, guys. And Alex and Emma, you're both looking dashing. We didn't get the memo for the Indian attire, so apologies for that. But, a very happy Diwali in advance to you, Tapan, and all the viewers as well. PG Electroplast, after the kind of sharp crashes that it had seen, is now starting to see some rebound. I'm glad that he has an horizon of 2 to 3 years, because this will give the stock enough time to consolidate and then start its up move. Considering the time frame, I don't think his buy price is such a bad one, although it might be hitting his portfolios a little, or rather it'll be coloring his portfolio a little red right now. But I would suggest a definite hold on the PG Electroplast. I would give 500 as a positional stop loss, the recent lows that it has made. But I would be surprised to see the stock head towards 725 once that is taken out, about an 850 plus kind of levels also. In fact, the stock can hit much higher levels as well. But being a little conservative, I think 95 to 850 should be the targets that he can hold for. But right now, the risk-reward ratio is extremely favorable. So hold on PG Electroplast on the upside 850 and higher levels in a year or maybe two.
So that's with regards to where PG Electroplast stands. We've got our next question from Gautam, who is writing us from USA. He's got 5,000 odd shares of Coal India at the levels of 383 and wants to know if this is a good time to sell Coal India and buy Hindustan Copper or any other counters for the next 12 to 18 months. Tapan, hi, a very good morning to you and a very happy Diwali in advance to you and your family. Your view with regards to Coal India, whether this is the right time to sell and enter Hindustan Copper. Is that the right thing to do?
Yeah, good morning and season greetings to everyone. Of course, say Coal India is like a decent return it has given over the time. But yes, if you want to see a compounding return, I think there are many other counters in metal. You can check it out. Of course, Coal India from here, I think may give you a decent return. And if you see their capex is almost 16,000 crore in 26, and they are going to have a JV with power plants, which are already underway. Of course, you can say the dividend yield is around 7 to 8%. That may give a better return. But government backing and all this helping this company. But overall, if you see that operating profit margin still in a problem, they are going to increase. They are working on it. I think from here also, I think it may give you a decent return. But still, if you want to take another call, I think if you see in metal, I think JSW still I feel may give a better return. Or Hindustan Copper is also another stock you can think about it, which may give a better return than Coal India. Coal India is a steady return it may give, but yes, JSW Steel and Hindustan Copper, you can look at it.
Okay. Okay, so there's some interesting updates coming to you at the bottom of the screen, and you should pay attention to this because it relates to what President Trump said overnight. And I will request the team to try and pull that bite up if we can play that out, because that will lend a little context to what I'm about to tell our viewers. The Ministry of External Affairs possibly commenting, this is a statement that has been released in relation to what the President of the United States has said overnight, which has to do with India's purchase of Russian oil. In fact, he said that Prime Minister Modi has assured him that India will stop buying oil from Russia. It's a process that he says is already underway till the time that the war with Ukraine is underway. Listen into what he has to say, and then we'll look at what the MEA is saying.
You have to understand, I've watched India for years. It's an incredible country. And every single year you'd have a new leader. I mean, some would be in there for a few months. And this was year after year after year. And my friend has been there now for a long time. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You can't do it immediately. It's a little bit of a process. But the process is going to be over with soon. And all we want from President Putin is stop this. Stop killing Ukrainians and stop killing Russians, because he's killing a lot of Russians. If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will. Within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
Okay, so that's some context for you. And by the way, crude oil prices have been on the way down. The last I checked, Brent crude at very close to $61 to the barrel. If we can pull up NYMEX, perhaps, is that what we have available with us? Okay, so Brent crude trading at $61 to the barrel, which has been benign, but a lot more panning out there with regard to supplies from the OPEC Plus, which recently went up. By the way, let's go back to our questions, and we've got Govind calling us. I didn't mention, I think a lot of you know this already. You can message us on the number on the top of the screen, or you can call us on the number as Govind has done. Govind, thanks so much for calling us. How can we help you today?
Yeah, good morning, Alex sir. Good morning, Mahima ma'am, and all of you. Happy Diwali to you.
Happy Diwali to you and your family.
I'm very happy to connect this call actually. Sir, actually, I'm a fan of your NDTV Profit team, sir. I have very much knowledge I have gained regarding this team, actually, what they are analysis, all the things. I'm very much happy, sir.
We are very happy to hear that as well, Govind. How can we help you today?
And one more also, sir. Everybody have observed yourself and Mahima ma'am and Kushar always talking to the fresh face of the face, sir. Okay. That is actually very positive energy to everyone, actually.
Very good. I'm glad. Thank you so much.
We're so glad to hear this.
You've given us a Diwali present. Now,
giving a wonderful analyst team, sir. Actually, very good knowledge given to the retail investors, especially small investors.
Yeah. That's very
sir,
kind.
I have brought. Yeah.
Please
Sir,
go ahead.
My question regarding this, I have brought NHPC for a long time back, sir, 1 year back actually.
Okay.
98 rupees at the price of 3,000 shares. Can I get my price or any percentage rewarding, or else I will switch to Tata Power and Switzerland, or what else it is,
Okay.
sir?
What is the time frame that you have in mind, Govind?
Yeah, long time, sir. What, 2 to 3 years also, no, nothing.
Got it. So Tapan, then the question is on NHPC for you on the fundamentals. Would you hold 98 rupees as the acquisition price? So he's losing ground. 3,000 shares is what he's acquired. Would you suggest that the fundamentals in Tata Power look better?
Yeah, see, Alex, if you see the fundamental of NHPC is okay, but somehow no, it's not able to perform as such. Even if you see the growth will be here, will be a decent from here, and expected revenue will be almost double digit. That is not a problem. But the only thing is, because the government intervention is there, and also lot many things from the management also, they told that there will be an issue on the earnings and all that, especially on the margin front. I think, if he wants to switch, I think Tata Power, as you told, will be a decent stock to go, because there the clear cut roadmap is there. They don't want to be a green energy company by I think 2045, and all they have EV, they have thermal and all that is there, and they are doing well also. I think there I can see the roadmap is much more clear than NHPC. So of course I will go for Tata Power. Even for that matter, I will go for Suzlon also. Suzlon I think had a bad quarter, but I think from here it will also pick up. Green energy, that it's going to go up, and they have a very good operation on that part. So I think both Suzlon and Tata Power will be my choice compared to NHPC.
All right, so that's the view with regards to where some of these names are concerned. But we've got our next question from Rajalakshmi, who's got 350 shares of Geo Financial at the levels of 260, and wants to know if it can be replaced by something like a federal bank or L&T Finance. Kush, let me take this up with you. Your view with regards to where charts are concerned for Geo Financial, and do you think the charts are better off for something like a federal bank or L&T Finance?
Mehma, I'll take a quick moment to thank Govind for the kind words that he mentioned. I think, the reason that we all smile is knowing that, we do make a positive difference in their lives with the sincere efforts that we put in. So thank you so much, Govind, for that. As far as Geofinance goes, my suggestion would be continue holding on to this one. Structurally, L&T Finance has been very strong. The performance has been superlative. And on the channel, I've given this call not once, not twice, but multiple times on the stock. And, it's been doing phenomenally well. Federal Bank among the PSU bank has been an outlier. It's also done very well. So I must say that the choice of stocks that is under discussion is fantastic. All three of them look good, but I'm not in the camp where you should sell Geo Finance. Maybe because there's profit you could book partially, and then look to enter Federal Bank at the current levels, and L&T Finance at declines of 255, 260 odd levels. So I would suggest a partial profit book on Geo Finance, and then he could split the funds between LTF and Federal Bank, because both of them look fairly strong on the charts, and the momentum also has picked up in the last month or so.
Okay, all right. So that's with regards to where some of these, banking and financial names are concerned, and that's Kush's view. We've got our next caller. Amit is calling us from Bengaluru. Amit, hi, a very good morning to you. How can we help you today?
Thank you. Advance happy Diwali to you all.
A very happy Diwali to you and your family as well, Amit.
Thank you so much. I have a doubt on that. I am holding a Canara share of 6,580 quantity.
Okay.
And at the rate of 102, 102. So now I'm around the profit of 1.7480 something. Okay. My daughter, I wanted to hold till December.
Okay.
So I want to know that can I exit now, or 130 is reaching and return is coming. Okay. So can I have a suggestion from you guys?
Okay, Amit, got your question. I'll take this up with Kush again. Kush is already sitting on profits of around 1.7 lakhs. Wants to know if he can continue to hold till December to see further gains. Is that something that you're seeing on the charts?
First of all, kudos to Amit for buying and holding, Canara Bank for such a splendid move. I think what he's rightly identified as the level of resistance, which is 130, that's a stiff one. But given the kind of momentum that you're seeing, currently in the stock, there is a bright possibility that, that level, that resistance level might be taken out today, and this, or not today, I mean, in the current rally, over the next couple of weeks' time. and the stock could head to 135, 140 plus kind of levels as well. Momentum very strong, volume building up. However, I would suggest a partial book profit, and the reason for that is I'm starting to see mild negative RSI divergences on the daily chart, which suggests that there could be some profit booking that would come in. So he wouldn't want to lose out on the high price. So I would suggest a 25% position that he could book profits on. Hold the rest 75 with a deepish stop loss at 120, and 130 in the current rally could well be taken out. I would continue to hold the rest of the quantity for 140 and higher levels.
Okay, we've got our next caller from Bengaluru. Udit is calling us. Udit, hi, thanks so much for calling us. How can we help you today? Okay, we'll come back to that in just a bit. Let's take the next question. Govinda Kumar is writing in and asking about PNB. He's bought 500 shares at a price of 101 rupees per share. The question is, would you hold or would you exit from the perspective of the next 1 to 2 years? So it's a pretty long-term time frame that he's got. Tapan, I'll come to you on this one, on the fundamentals. How does it look?
See, fundamentally, PNB has done recently well comparatively, and of course, whole PSU banks has done comparatively well compared to private banks. And last quarter results also, PSU banks may do has done well actually. And now this quarter also, I think PSU bank may actually outperform the private banks. So especially, I think SBI, PNB, Canara Bank, and all that. So still, I'm positive here. I can see almost a double-digit growth in PNB. Of course, their NPA now it is slowly and gradually reducing to below 3%. So that's a good news. And from here also, I think CASA will be expected on a much more positive side. Advance is almost 10 to 15% year on year. So they are working on that. And cost of fund is sticky, but yes, they are going to control it. See, valuation in front of you also PSU banks are comparatively cheaper to private banks. So I feel that here PNB, I think one should wait for one more quarter, just see how the things are. I think next 1 or 2 quarter will be too good. Then they can take a chance. But here I think he should hold the stock for a little bit longer time.
Okay, all right. So that's with regards to where PNB is concerned. We've got our next caller. Shailja is calling us from Hyderabad. Shailja, hi. A very good morning to you and festive greetings to you and your family. How can we help you today?
Thank you, and happy Diwali to all the NDTV team and panel members.
Thank you so much.
Today I have query on Tata Motors.
Okay.
I have 69 shares at the price of 776.
Okay.
So after demerger, it went down to 30 or 40% down. So I want to know whether, because I'm holding since 1 year, so I want to know whether to hold or else average at this price, need view, short-term view.
Okay, Shailja, got your question. And that 40% down that you're referring to is just price correction. So you will also be credited with the demerged entity shares very soon. So that's the kind of correction that you're looking at. Overall, we've seen a downtick of around 4 to 5% on the counter. But I'll take this up with Kush right now. Kush, what is the kind of trading strategy that you would adopt on something like a Tata Motors right now?
Tata Motors for the last quarter or so has been a positional buy for me, but since her question is very clear that she wants it for short term, I would suggest an exit. Of course, wait for the other entity shares to be credited, and then you can sell it off together, and the loss will not be as steep as it is looking right now. But on the whole, from a near-term perspective, there isn't enough momentum on the upside for the stock to come close to her buying price. So I would suggest an exit on Tata Motors. If at all she wants to be in this space, I would suggest look at something like a TVS Motors from the two-wheeler space or a Mahindra and Mahindra from the four-wheeler space. Those are the stocks that have momentum, have done well, and will continue to do well, even from a near to medium term perspective.
Okay, all right. So that's the view with regards to where Tata Motors is concerned. Of course, some of these auto names that Kush just talked about. But the next question is from Rajesh Maheshwari, who's writing us from Singapore and asking about Indian Bank. He's got 125 shares at an average price of 638. Wants to know if it makes sense to book profits right now or to remain invested from a short to medium term perspective. Kush, sitting on profits of around 16,000 rupees, would you recommend him to hold Indian Bank?
I wonder if Rajesh has been listening to our conversation. Indian Bank is something that we did discuss on the channel multiple times. It is one of the outliers in the space, as in that this one has moved quite earlier and quite higher even before the entire pack started moving. So yes, it remains a preferred pick. But if the view is a short-term one, then I would suggest a partial book profit because yes, you're starting to see some profit booking that is coming along the way, and you don't want to miss out on a good profit that you're sitting on. So book 50%, hold the rest. If your team is looking for a stamp verdict, it's a hold on Indian Bank. But I would suggest a partial book profit as well, because he's sitting on good profits and the stock is starting to just consolidate.
All right, we've got the next question on Syngene, and it's also a short-term question. We've got Sheshant, who's writing in from Hyderabad and asking about this one. He's bought at levels of 658 per share, which is higher than the current market price. He's got 70 shares, and he bought it about 4 months back. He's got a short-term outlook for the next 2 months, and he's wondering whether to hold on. Kush, what's the view?
Just an exit. There are multiple resistance levels. Multiple attempts of rising beyond the 20 and the 50-day moving averages have been fizzled out. You're starting to see some sort of an uptick, but that's not back heavy volumes. So that just does not build the case for a big upside. So Syngene, if it's not participating in a market which is doing rather well, then you shouldn't be holding on to a stock like that. So Syngene for me is an exit at the current.
Okay, all right. The next question then is on L&T, and Nikhil from Hyderabad is asking this question. Wants to know the next 45-day target. Is very specific on the time period. Kush, quickly on the charts.
45-day target difficult, but yes, been constructive on this one too. I would suggest a hold. I think from a near-term perspective, you could look at 39.75 and 4,050 on the upside. But I would keep a stop loss near the 37.75 mark, positive on L&T.
Okay. All right. On that note, it is time to hit the first rapid fire segment of 2. And this is where we throw as many questions at our experts as possible over the course of 2 minutes. Let's start with a question from Danish on Loris Lab. Loris Lab is the name of the counter, bought at levels of 895. The question is, would you hold or exit? Kush, what's the view?
Yeah, I'd hold. I'd keep a stop loss at 865.
Okay, Page Industries is the next one, and we don't have the name of the person, but 6 months view is what the viewer is sorting. Kush, your view quickly on the charts. BLS International. Sorry, Page Industries.
Yeah, Page Industries is an exit.
Okay.
Exit. BLS International bought at levels of 378. Balaji wants to know, would you book your loss or wait for a year or average right now? Kush, what would you pick?
No, I wouldn't average, but I would wait. The stock is seeing a rebound from oversold territories. Positional stop 250.
Okay, Tata Technologies is the next one. Vinay from Karnataka is holding 60 stocks at an average price of 500. Should he continue to hold? Tapan, your view?
No, he should exit when it comes up a little bit and go to other sector.
Okay, Tata Consumer Products, average price of 217, average since 2017, it must be said. Vishnu Swaroop wants to know whether to hold or exit. What's the view, Tapan?
Tata Consumer is a hold. Wait for the next one, I think it should go up.
Okay, Texmaco Rail is the next one. Jose from Kerala is holding at the levels of 170 and 1100 shares is what he has. Wants to know the 6 months view. Kush, on the charts?
Slightly bleak, but I would still suggest a hold with a stop loss at 125.
Adani Ports, very short-term views being sought by Prasanna. Kush, what would you say on the charts?
Very clearly hold. Here I would suggest a stop loss at 1435, and the breakout could take it past 1500 very easily.
Okay, MTAR Tech is the next one. Neelam from Jaipur is already holding 35% in profits. Wants to know the target and stop loss for the next 1 to 2 months. Kush, on the charts?
First up, it's a good idea to book partially, and for the next 1 to 2 months, I think 2300 and 25 are the targets, and a stop loss for this one is close to the 2050 mark.
Bhanushri wants to know about Anantraj, which has been bought at a price of 600 rupees per share. Time frame is not mentioned. I'll come to you, Tapan. Would you hold?
Yes, of course. So I think it will do from here, from here. I think it is valuation is quite appealing.
Okay, we did talk about Adani Ports in the rapid fire round. By the way, standard disclaimer, this is NDTV Profit, part of the NDTV group, which is owned by the Adani Group. We'll be back on the other side of this break to take more of your questions, so do stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कारपेट। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
She is a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कारपेट। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
A powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen. That will be flashing on your screen in some time. There you go. They're flashing right now. All right. Okay, we've got our next question from Aditya, who's writing us from Jaipur, asking about Bank of Baroda. He's got 27 odd shares of BOB, bought at the levels of 258 a while back, and wants to know if from a longer term perspective, can continue to hold or not. Tapan, your view on Bank of Baroda?
See, Bank of Baroda, I'm quite positive on the stock now, and that has done last quarter also. And if you see, they are saying that no, the double-digit growth, loan growth will be there for next few quarters also. They are going to target around 3 net interest margin. That is good. Balance sheet will be double in the next 5 years. And if you see they're quite undervalued compared to the private companies also. Overall, I'm positive on the public sector banks. So I think from here, I think the deposit growth will be more than 10%. So if you have Bank of Baroda, I think one should hold. I think next 1 or 2 quarters the result may be good, and it may provide a good upside from here also.
All right, Aditya from Jaipur in Rajasthan is asking, we have taken that question, all right. So we've got Uno Minda that we're talking about next, and this is a question from Balasubramanian, who's writing in from Bengaluru, and he's bought 60 shares at a price of 1,295. The price is lower at this point, but the stock is up about 2%. He wants to know the future prospects for this particular counter, and whether or not to add more at the current level in order to reduce his average holding price. He hasn't mentioned his time frame, so let me go across to Tapan on the fundamentals. Uno Minda, in the automotive ancillary space, one would assume that if the automotive sector as a whole is likely to benefit from the consumption push, the auto ancillary companies should benefit as well. Would Uno Minda be one of the picks though? I know that there are several options that you can consider.
Yes, Alex, I do agree with because as the automobile sector is booming, I think auto ancillary will be benefited out of that. And if you see, they've ramped up electric vehicle segment also. Again, the volume growth, the management of 15 to 20% is expected. Of course, the parts exports and localization push is already there. And see, from here, I think because EV is going and clean tech pushes there, I think that is a Uno Minda is quite specialized nowadays. And no, acquisition is also there in Vietnam, which is helping them to increase their production. So from here, I think the operating margin will be on a little bit on a high level in next few quarters. And of course, the drive is there. So of course, Uno Minda at every dips one can buy and hold for next, I think 1 or 2 years. I think it will give a decent return to him.
All right. Okay. We've got our next caller. Arun is calling us from Bengaluru. Arun, hi. A very good morning to you and festive greetings to you. Your quick question. Okay, I think we seem to have lost him. Okay, his question is on Bajaj Finance. Basically, he's holding 440 shares, bought at the levels of 609, sitting on profits of 2 lakh rupees. Tapan, your quick view on Bajaj Finance. Should he continue to hold?
Yeah, he should hold it because see, festive season is on, and because of GST cut and all that, I think this time the consumer goods, consumer durable goods, will have a good sale, and they provide consumer finance and all that. Even vehicle financing is doing well because automobiles is doing well. There also they have a good exposure. So I think overall, because of festive season, this next quarter will be good for even Bajaj Finance and completely overall NBFC only. So I think he should hold the stock for next quarter at least. I think decent return will be there from here.
In return on Bajaj Finance, and it had quite the day yesterday. In fact, if anything, is building on those gains today as well. Five-star business finance, also in the NBFC space. Yashwant is writing in from Hyderabad. Bought at a price of 625. He's asking for a period of 1 to 2 years. And no, ordinarily I would go on the fundamentals, but since it's dramatically below the buy price, I want to go to Kush on the technicals. Any opportunities that would be in for this stock? Is there any indication that it could bounce back?
So, Alex, there are green shoots. There are definitely early signs of the stock, starting to, make these bottom formations around the 505 mark. On the green days, on the days when the stock is trading higher, you had a volume uptick. So delivery marking is starting to improve. So yes, it's had a long period of underperformance, about 18 months or so. But now the stock is starting to see some kind of an uptick. So I would suggest, since his time horizon is 1 to 2 years, and he's already seen some sharp gashes on the stock, should continue to hold. Keep a stop loss at the 500 mark, which is the recent swing low. If that's broken, I think the rebound and the bottom formation structures will be disturbed. So yes, with a stop loss around the 500 mark, continue to hold 5-star. Within a year or maybe 2's time, he could well see his buy price and higher.
Next question is Next question is from IGI.
Yeah.
You want to take Morpin?
Yeah, we'll take Morpin Labs.
Morpin Labs, okay. So this is from Tejas, who's writing us from Mumbai and asking about Morpin Labs. He's holding 5,000 odd shares at the levels of 60, correct? And the stock is currently trading at 48. Wants to know if he can buy more to average out. He's not mentioned the time period, but Tapan, your view from a longer term perspective, if he can add more and average out?
No, I think he should wait for this quarterly reason and all that, because it has been underperformed a little bit. Of course, slowly and gradually they are going to go at a debt-free status, and QIP also coming for the fund expansion, fundraising. See, EBITDA margin is somewhat slowly and gradually picking up. So I'm not completely ruling out, but I think he should wait for the quarterly result as such, because still the execution from the revenue point of view, it's not coming as such. And of course, they are going to focus on medical devices and export growth, and management talk is quite positive, but still I will wait because the stock has fallen a lot. It may consolidate a little bit, and I think once the quarter result is good, I think he can enter and average it out.
Okay, let's talk about Paradeep Phosphates. If I remember correctly, post its Q1 results, the stock had moved up quite substantially. It is currently trading at 178, and we've got Dr. Venu Verma, who's bought at elevated levels, 210 rupees, looking for a 1-year target. Kush, what's the view?
Yeah, the stock's very clearly in a very, in a consolidation phase, not going anywhere. Volumes also not doing much. If we look at the silver lining in this, it's that the fall that the stock has had has been stemmed. The previous low was 165, and now the low that the stock has made is 172, which means a higher low formation in place. I'll take that as a silver lining. Since the view is for a year, I would suggest a hold, keep a stop loss at 165. The moment it comes closer to his buy price, he should exit, because there are multiple resistance levels around 195 to about maybe round that off to 200. So yeah, if I did get those levels, I would start exiting rather than wait for my buying price to come and see a profit. So yes, continue to hold, but exit at slightly higher levels.
You to hold and exit at higher prices, what Kush is indicating for Paradeep Phosphates. We've got our next question from Dwayapan Bose, and it's a unique name. I hardly can pronounce it, but interesting name. And he's bought Bandhan Bank at the levels of 164. 2,200 is the quantity that he has, and wants to know from a short-term perspective as to what the charts are indicating. Kush, your view?
Exit. The stock's not gone anywhere. Attempts of rebound have fizzled out. 200-day moving average, dearly the stock's trying to hold on to, but multiple attempts have fizzled. Again, let me just put out the concept of relative strength. If the stock is not performing when the entire market is, then there is very clearly weakness in the stock, and Bandhan Bank very clearly, is demonstrating that. So for me, it's an exit right now. He'd be better off switching to a Canara Bank, a PNB. Among the smaller names, or even in an Indian bank that we recently heard.
Okay. All right. That's a view on Canara Bank. KEI Industries, let's pull that up because it was one of the laggards in trade in the morning. I wonder if it's bounced back just a tad bit, but it's still lower. It posted its results after market hours yesterday. The stock has been bought at levels of 4,435 by Kusuma Reddy and holding at a loss of 1.2. No, that's incorrect. So holding at a loss of 36,000 rupees or thereabouts. I believe that's the view, yeah. Looking at the stock, unfortunately, Kushi has forgotten to put a stop loss. It's something that you should not forget to do. And in that instance, what would be the advice to her?
Has she really forgotten, or she just didn't want to? So that's how you roll, right?
Yeah.
But no, I'll take her. I'll take her word at face value. Of course, she would have forgotten. But I'll tell you what, KEI Industries is not something that I would be too disturbed about. Very frankly, the stock recently made a very sharp up move from 4,000 to about 4,400 odd levels. She did get stuck in this at the slightly elevated levels. But if you see the tendency of the stock, it has this a peculiar habit of slipping to the 50-day moving average and rebounding from there. Despite the kind of result reaction that the stock is showing, the day low is precisely at the 50-day moving average, and you're already starting to see some recovery. So I would suggest give it some time, maybe a quarter, a little more, perhaps. She would, there's a high probability.
All right, Kush.
Her buying price.
Okay, Kush. So hope that gives you a view on KEI Industries. By the way, we're heading into somewhat 2082, and we've been getting you the biggest market voices to help you chart that course. And so let's do something along those lines as well. Tamanna Inamdar is out and about in Mumbai to speak to a very special guest. Let me toss it right over to her. Tamanna, over to you.
Thank you for that, Alex. We are here at the Motilal Oswal headquarters in Mumbai and getting that festive feel on. I have, of course, the man that everyone wants to hear from, Ramdev Agarwal, with me. Ramdev sir, thank you so much for joining us on NDTV Profit. And if you're wondering what the spread is, so our idea was that we should have a meal together. Yes. I was told Ramdev sir only eats healthy, and coincidentally, so do I. So I just want to tell you what's on the table before we start our conversation. So we have salads here, we have some fruit, we have some nuts. Now, here's the theme that I want to take forward, sir. We are speaking at a time when people gorge on, Diwali is time to really let go. And the markets right now are also building up an appetite. Let me start with the question of how do you make sure this Diwali your portfolio is fit? There is not too much cholesterol of high valuations in what you have bought, and no junk food or junk stocks. How do you do a cleanup of your portfolio like you do of your diet and nutrition?
Yeah, even wardrobes. So actually, this is a terrific question, and it's not only Diwali stuff. I mean, around the year you have to do it.
Yeah.
You have to have a very healthy portfolio, and a healthy portfolio. One of the secret is that when I started in '95, when I read first time about Buffett, in my portfolio there were 225 stocks, and on this A4 page, it used to be 4 or 5 pages, 5 pages, And by the time I started removing, After first page, I start feeling hungry. It never went to the fifth page. So, it is very important that you have the portfolio which is small enough, which you can have a look at it every day.
Lean, like how?
Lean, yeah.
So no buffets.
No buffets and no, too many children. You have to have very, very planned family. Okay, so that's very important. And so that's first starting point. I mean, that's how I would rather say the way I do it. It may not fit everybody, but as per me, having a few so that you can spend time thinking about those stocks, because companies, they go through their own life cycle of prosperity and then decline. So you should not be over sitting, when the prosperity phase is over and when they're declining, you don't want to go to zero again. So from 1 you go to 1,000 and 1,000 to zero, no point. So the real fun is to buy the stocks which are going to go from 1 to 1,000 and have few of them so that you can ride it all the way.
So clearly 225 stocks is too much.
Too much.
What is the right amount? How much do you think should be an ideal portfolio?
I don't think you need more than 15, 25. Like if I look at our schemes here, Motilal Oswal, every scheme will not have, none of the schemes will have more than 30 stocks.
That's the cap you have.
That's the cap, because we are managing 30,000, 40,000 single scheme.
Yeah.
But if you have 100 crores, 50 crores, 5 crores, 10, I mean, in 10 crores, you should not have even 10 stocks, I'm telling you. The right number of stocks to have is as many stocks you know. If you know 3 stocks, should have only 3.
Okay, when you say no your stock, a lot of people who invest don't have the time to sit and deep dive into a stock or actually look at it so carefully. They have a lot of information and maybe not the ability to analyze as well. So how do you know a stock? Sometimes they look at, okay, what have big funds bought, what have big investors bought, and that's what they follow.
This is a fundamental issue. You don't have to know. If you are an investor in equity markets, when we started, there were no mutual funds. Today, you have brilliant mutual funds. They are doing better than most of the retail investors. They are actually performing far better than a retail guy, because retail guy doesn't have a reach. If I am managing 50,000 crores or a lakh crore in one single scheme, I mean, the company guy is waiting for my call. So, and of course, the call itself doesn't matter much. It depends on my understanding of the company and whatever is there. So I think it's a 24/7 job, and it is very competitive with a lot of money coming in. FIs are there. Now DIIs, you saw the today's paper. They have bought already 5 lakh crores in 9 months.
Yeah.
So if you do pro rata, I think we're talking about 6.5, 7 lakh crores, which is 2% of GDP. This is a sign of things to come. So it will become very competitive, and hence, unless you are a master, very passionate about picking stocks, don't bother about it. Go and buy nice mutual fund, good mutual funds. They will do the job.
Mutual funds, I'm not talking about any specific ones, और मैं आपके funds की बात नहीं कर रही हूँ, but mutual funds have not necessarily given great returns in the last 1 year.
Listen, when you have 15, 20 stocks, you're already making a mutual fund. When you buy, say, 20, 25 stocks, you are creating a mutual fund of your own. And what right it gives you that your mutual fund will do better than the mutual fund managed by professional? You just try. You look at the guys, how they have done. There are very few Rakesh Jhunjhunwalas and Ramesh Damanis of the world.
And Ramdev Agarwals.
Yeah, I mean, I used to pick up stocks. Now, I mean, I'm much more focused on managing the company. I mean, for me, the stock is Motilal Oswal only. So my bulk of the time goes in managing Motilal Oswal. So, but then you need to be very good at it, and there are very few guys, and it takes a lot of time. You have to read a lot of books, a lot of balance sheet, a lot of con calls, interactions. Keep watching the results. Where is the new style coming in, new high tide coming in? So it is a full-time job. I would think that average investor, like we are talking about 3 million investors coming every month, a lakh investor per day. You are not producing Rakesh Jhunjhunwalas every day 1 lakh. So they have, I mean, with due respect to all of them, I want them to make a lot of money. Very few people, they are able to beat index also in their portfolio, and there are a lot of junk because they know how to buy. I mean, you tell the guy and he'll buy, but they don't know when to get out. So then making money is about getting in and getting out both. So I think that's what the professionals do very well. And there is a tax shelter also if you buy mutual fund.
No, that's true. Yeah. No, so coming back to the point about high cholesterol in your portfolio, high cholesterol in the markets, where do you think markets are right now? We've had a few good days, no doubt, but the fact is quite off the highs. It's been very rocky. There's so many factors that we have no control about, frankly. And FIIs seem to have not too much interest in India right now. In such a long cycle of how you have tracked markets, how would you describe where we are right now?
See, where we are is consolidation phase. After seeing the highs last year, there has been an intense selling by FIIs, and who buys, who sells doesn't matter because number of stocks are same.
Yeah.
Okay, what matters is the value of the company growing. Now, value of the company grows at the pace at which the earnings grow. So if you take the entire country and as I say one index, Nifty is like 70% of all the companies listed in terms of market cap. If there is a 462 lakh crores of listing today, we are talking about 300 lakh crores of Nifty only. Now, Nifty as a stock will go up only if all the earnings they blow up. Now, earnings are growing at 5, 6, 7%. What do you expect? There's no firecracker.
Why do you think so? Because
that's what is the number.
No, but it's a more meaningful question. I'm asking why you think so because you see the GDP data looks great. High frequency indicators look quite positive. Yeah. Government has reformed GST.
No, high frequency data are now trailing. Now look at what we look at it. Now housing loan growth. See, roti kapda hai makan. Makan is the biggest capital investment by household. Okay. कितना बढ़ रहा है 2.5 I think last month was 2.9%. It's shameful number. I mean
despite interest rates coming down.
Despite it will take time to pick up, but 2.9% is what we are playing with in this quarter. So now with 2.9% growth in the housing loan, number of houses made are literally zero. Like it is same. There is no growth in number of houses being built. What it means is that demand for cement, demand for paints, demand for steel, they would all be very weak. And that's what tells in your, when you buy a house, you buy durables, you buy non-durables, you buy curtains, whole lot of things you buy. That's not happening. People are busy in running their life as it goes. So, I'm talking about as a nation. So we have to, it is for the policymakers to see why it is at 2.9%. I don't have any answer to that. Of course, what I can see is that the credit flow has it been tightened. That is one. Second is that are we paying too high an interest rate? Like my inflation has come down to 1.5% or less than 2%, and my discount rate is 5.5. So my lending rate is 7.5. So how much real interest rate you are paying? People cannot pay that. So I think those are some genuine questions. Even GST collections, they have, now I think monthly collections are up low single digits. So clearly...
And the growth in monthly collections.
Yeah.
But your base has also grown.
There is no base for a country. Nominal GDP keeps growing at 10 to 11% for last 45 years. Yeah. And it will keep growing at 10, 11%, 12% for next 45 years. So there is no base effect at a national level.
Yeah.
There can be base effect for the company or for the individual. There is no base effect for anybody. GST has to grow at the rate of nominal GDP growth rate or more. But that's not happening. Now if the GST or tax collection is not happening, obviously the economic activity is slow. So direct tax will also be slower. So direct tax collection, indirect tax collection is slow. Government coffers are not filling very fast. If government coffers are not filling very fast, the expenditure by government will also be slow because government has to spend whatever is the essentials, where they have the salaries and interest payments and all that has to go. What is left goes into your discretionary build-up, which is called capital expenditure and all. So that also is running slow. I was talking to a steel guy yesterday from my native place. He said, Ramdev, I have not seen worse steel market in last 30 years.
So then my question is there a bubble building up? Because valuations...
Why you go that quickly to bubble and all?
Achha. Maybe.
There are a lot of, you asked something about high frequency data, we talked about it. But a lot of good things are also happening.
Okay, let's talk about some of the good things.
So what are the good things happening? You saw the DI buying of 5 lakh crores.
Yeah.
So this is for 9 months. So what is going to happen for 12 months? We are talking about another 1.5 to 2 lakh crores. So that makes it 6.5, 7 lakh crores. That is full 2% of GDP. Now, when your performance is actually flat, performance is 4-5% year on year, isn't it? So people have faith in this market that it will come back, in the course of time. So now we have unleashed the power of retail investors in India, which we kept it under leash for 70 years. In 2020, when digital onboarding started with the digital infrastructure, digital payments, and we started getting 3 million customers every month. And even till last month, we have got 3 million customers, 2.5 to 3 million customers. Last year, we got 41 million customers in a year, which is more than 3 million per month.
So when the regulator, when SEBI came and tightened up on F&O, etc., did you see a big drop over there, and have then activity lessened accordingly? Because of course you have new unique customers coming in. Bharat is now discovering
that's why
the market.
Next, cash market is holding out.
Yeah.
But F&O volumes and all have been, the leverage in the market is getting removed, and that's why the market's also not doing well. See, when you remove the leverage, the one side you are buying, but other side the leverage money is going out. So what happens is that the market actually could have tanked if there was no DI buying. When you remove the leverage, and if there is no DI buying and FIs are selling, you imagine what would have happened. Just because the wall of money from retail is coming, even the withdrawal of change in the regulatory regime for F&O has not impacted the market. Now, once we are done with the from daily expiry to weekly expiry, hopefully there is no more tightening. Once we are set with that, then the natural flow, natural expansion in the broking and everything will happen.
No, so I was actually going to come to that. So I have a two-part question. One is philosophically, what do you feel about the thought that the retail investor does not know enough about futures and options, so should be protected? What is happening essentially what is happening at the core of it, the idea is let's protect the retail investor by making it tougher.
Sure. No, we must.
Does it make sense? Should we be protecting the retail investor?
Yes, we must be. We must try everything. See, if somebody wants to see, there are all kinds of retail investors. There is not one type. You cannot say this is a real retail investor. All types of people, ignorant, not so ignorant, very smart, very, very professional. Retired army guys, officers. They say, sir, now the best job is to 9 o'clock, I'm not available. The moment market opens, he is there as a professional trader. Yeah, so what I'm saying is there are all kinds of profiles. The guys who are good at it, let them do it. But the guys who are innocent, the person who doesn't know what he's walking into, those guys should be safe. Like if a small child is going into a swimming pool, he doesn't know that swimming pool is 5 feet deep.
So should we be treating investors, should the regulator be treating investors like small children?
To some, in terms of guidelines, yes, whatever educational thing they can do, they can run campaign like what we are saying in mutual fund sahi hai, like that speculation ke baare mein aap kuch kar sakte ho. So people should be cautious. Like people know that cigarette is injurious in terms of smoking, and yet people smoke. So what do you do about it?
Which comes to my question. What is happening right now is not just caution, it is action. You are making it more and more difficult to trade futures and options. Now there is a thought that weekly options will also be phased out slowly.
Quite possible. But it will have again its own implication. Again, leverage from the market, whatever little leverage is left, that will also go away. Then it will become a cash market. See, India is a very peculiar country. You must understand. Here, 50% of the market is, first thing is, it's a relatively small market for the world. In 125 trillion, we are just about 5 trillion. So, in a way, it's large, but third or fourth largest, but still very illiquid because 50% is held by promoters. Unlike in US and all, where 2%, 5%, 10%. There's no class like promoters. Here, people have 75%. They take pride in saying we own 80% now. We own 70% of Motilal Oswal. So now in this situation, the floating stock is very limited. So it is. So if you don't have the leverage money, the F&O and all, then the liquidity goes down big time. So when the big investors like say one mutual fund which are now 2 lakh, 3 lakh, 4 lakh crores, they want to buy even a percentage of their fund, which is 2,000 crores. How do you buy? The spike is very large, and then they want to sell.
Is that why value is being hunted in pre-IPO private equity?
Yeah,
this is something that you've gone big on as well, and Motilal Oswal has gone big on. So a couple of questions on this. First of all, why will this trend continue, and how do you spot those winners? Are there enough winners out there?
There will be enough winners, more than you can digest. I can tell you this. The issue is that it's not a free lunch anymore, because if the market is depressed at 10 PE or 12 PE, then you cannot go wrong. But in this market you can go wrong, but you'll go wrong also. But when market is at 10 PE, you pick up any of the junk, you'll make money. Okay, you don't need brains. And but when market is at 25 PE, you need a lot of brains, and that's where the difference is. So, and that's why I'm saying, retail investor, the innocent guy who's walking in first, he should not start with a stock. He must go to the mutual fund, learn a lot, and then slowly start.
That's why that wall of money is coming in.
Yes.
Mutual funds are well established here. But I'm just talking about what we're seeing, because when people make some wealth also, family offices and private equity is becoming the buzzword.
Yes.
यहाँ पर उतना मिल नहीं रहा है. You know, people now are not getting that kind of appetite or option or alpha that they're seeing in cash markets. Enough people are now looking at these.
नहीं बनता है, आपका थोड़ा पेशेंस भी चाहिए. Patience is the most important fertilizer for this market, for the investors to become very big. The पैसे बहुत हैं, and this is just about the beginning. I mean, money making in India has not even started. I'm telling you, the real game is starting now.
Really?
Yeah.
Where is that money being made apart from those who bought gold? They are sitting pretty.
All the ladies, congratulations. So yes, gold has done exceptionally well, way beyond my imagination.
Yeah.
But that's a very small asset class. I mean, if you have 100 crores, how much gold will you have? Maybe a crore, maybe 2 crores, 3 crores. You cannot be buying 100 crores gold. The whole house will be loaded with gold. So you know, what I'm saying is that gold is not my forte. I mean, the metals and all must be somebody else who might be expert. But I mean, fundamentally, gold and all these metals, they are what do you call inflation hedges.
Are you seeing it as a warning sign that gold has run up so much? Because it's a safe haven asset. There is uncertainty in the world. Some message comes from the US every morning and we don't know what it means. I
also don't understand anything. I am seeing what you are seeing. In fact, you are spending more time seeing all this. But my sense is people are running away from dollar. There is some fear. There is too much of dollar assets around. Apart from the dollar, what do you call, circulation, actually the market cap, see, once NVIDIA goes to $4 trillion, you have printed $4 trillion of liquidity in the system. So that money is a lot in the system. Of that, just about 1% of NVIDIA, somebody sells and says, let me get that much gold. You're talking about 400 million or something like that. Some crazy. You know, 1% is like $4 billion or $40 billion. $40 billion. Sorry, yeah. I mean, I'm losing the numbers. So $40 billion, you know, so that's the kind of number you're talking about. Yeah. So clearly, people are, I mean, there's a lot of geopolitical stuff and all, but things will stabilize. Things will stabilize, and the companies will do well. World is becoming very wealthy. Huh? Mind you one thing, with all this noise, world is silently becoming very rich. World is becoming very
Indians
rich.
also want to become very rich.
Yes, so we are becoming wealthier faster. It took 60 years to become $1 trillion economy. It took another 7 years for second trillion, another 7 years including COVID for third. Fourth came, between third and fourth came in 3 years. Now fourth to fifth will come in 2 years, and fifth to sixth in 1.5, and 7 to 8 will come in 1 year. 1 year.
So for the next 2 years, for the next landmark,
yeah.
What is, you know, in your top of mind for you? Because there are some winners. We've talked about Dixon, Eternal, etc. in the past.
हो गया.
अब हो गया, वो story खत्म है. Is there an AI story? Because that's the big lament, ना हमारा AI story.
For that, you better interview all the fund managers, those who are picking stocks.
No, what are you? I'm not telling you to pick stocks. I'm saying, are you seeing the top of mind stories there? Are they missing in India? We have one or two data center खेलना है तो एक दो option है. AI एक दो option है.
Yeah, what I'm saying is.
Semiconductor एक दो option है.
मतलब कुछ पैसे बनने वाला नहीं है.
कहाँ बनेगा?
हाँ, so कहाँ बनेगा जो पैसे कमा रहे हैं? Who is making money in India? Doesn't matter even if he's making shoes or selling shoes and not chips. See, by selling chips, if you have to take money from government, I would not like to buy that stock.
So you don't like this PLI incentive wala stocks?
No, but individually it is different, but generally, where is the money being made? If the stockbroker is making money, I would like to buy his stock. If AMC is making money, I would like to buy that stock. But if they're a very fancy insurance company but not making money, I'm not interested. So I want anybody who is making money. I don't care a damn about what is the theme. Who's making money? Now, because 3 million customers are coming every month, there's actually plenty of business in the stock market and capital market per se. All the capital market guys, all the capital market guys are doing very well. Whether it is depository, whether it is exchanges, whether it is brokers, asset managers, wealth managers.
But there is a regulatory cloud.
वो चलते रहेगा ये सब क्या आप रिटेल पैसे मैनेज करो इट इज बेटर इट इज मैनेज्ड आई हैव सीन सिचुएशन व्हेन सेबी वाज नॉट देयर टिल 92 it is a free for all I mean you imagine you bring your money so then the trust in the market goes down nobody wants to come here people go and buy plots they'll buy gold they'll buy some crazy stuff they'll not come to buy financial assets for financial assets to grow it is securitization you just give money on the faith so my legal system my listing system my insider trading system this should all be fantastic it should be best in the world I think we are one of the best in the world probably the best but we can be even better we can set a standard for the world
so your message as we wrap up this interview and we should get to our salad lunch which we never managed to have but as we wrap up our interview your message to the Gen Z investor who right now is very excited about crypto is very excited about whatever is fast and easy
they're not investors they're all speculators.
They're using their pocket money. They have nothing to lose, or very, very little. I mean, they want to try something new. What is your message to them?
No, I mean, see, first thing is you must understand whether you're speculating or investing. Don't confuse this. If you're speculating, you love it, do it. अभी आप जैसे दिवाली में 3 पत्ती खेलोगे, उसका मतलब ये थोड़ी ना हो कि आप बर्बाद हो गए. भाई ठीक है, 150 रुपया आगे पीछे हो जाएगा, उसमें क्या अंतर पड़ता है? But you had fun. So for fun you are doing it, or are you doing as a serious bet? You are putting 90% of or 100% of your net worth onto that as a margin money and all, then be careful. That's not the big. There for 100 guys, only one winner will be there. 99 will be loser.
Okay, so for
just
anyone.
Just listen to this statistics. In speculation, even if 2 or 3 guys win out of 100, it's quite a miracle. But in investing in India, I think 100 will win. 99 will win. I get you. You tell me pure investor in last 20 years. आगे तो क्या क्या हो you will not find anybody who has not made money somebody would have made a lot of money somebody would have made a little less money so this is the statistics your viewers young viewers they must not get into speculation without competencies and then I wish them that they are 2 out of 100 rather than 98 out of 100
No, so I was going to ask you this. For every 10,000 rupee of saving, I'm starting with a very small amount. What should the split be right now?
I would see, you're starting small means you are very young. If you are very young, you have 25, 30 years of accumulation phase for your wealth. Go and buy SIP. Best SIP you have. And keep dumping not only 10,000 but whatever you save extra. Just keep putting. You will not realize in 25, 30 years how much money you will have. You will be one of the richest person around.
So slow and steady wins the race.
Yeah.
That happens with your portfolio, with your health and with your diet. So
that's how I built Motilal Oswal and that's how we'll keep going from here.
Okay.
Not in hurry. We are not in hurry at all. The moment you are in hurry, you will lose.
Well, that's the big message coming in with this, Samad. Have patience, enjoy this festive season, but keep your discipline.
Enjoy being Indian. It's a blessing of God, at least for the guys who are in the stock market, to be in India.
Why is that, sir? Please elaborate.
Because there are only two compounded markets. One is, of course, US, and second is India.
That's where we are right now. Thank you so much, sir. Wish you a very happy Diwali. Thank you so much for joining us.
Very happy Diwali to you, your team, and all the viewers of NDTV Profit. Let them make tons of money.
Wonderful. On that message, thank you so much, sir, for speaking with us. Ramdev Agarwal ji with a great message. Have patience and watch for the companies who are actually making profit. Doesn't matter what else they do. That's really our theme here on NDTV Profit. So thank you so much for joining us on this special show.
चाहिए ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए साथ के सोलर पैनल। घर हो या खेत, होता है कार। सोलर मतलब साथ, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए साथ के सोलर पैनल। घर हो या खेत, होता है कार। सोलर मतलब साथ, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17 to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया, आपका काम क्या? आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to
Hello and welcome to KYC. I'm Anushi Vakharia, and the company on KYC's radar today is Marathon Nextgen Realty. Now, what I essentially want to know about this company, it's an interesting business development plan that they have. So firstly, how does the development of real estate shape with now the new Navi Mumbai airport coming in place? Along with that, what would be in the focus is the overall infrastructure development also. How that would boost the overall prices and the volumes that we'll see for this particular counter with the new airport coming in place. What would also remain in focus is the growth plans going forward. Now we've already looked at the QIP, so with that we have timelines of merger in place also, and with these unlisted entities merging into the listed company, what's the kind of valuation we'll realize is something that we should be watching out for. Apart from that, how will the merger improves company's overall land bank potential? Now the size is around 59,000 crore of GDP potential that we are looking at, so it's a considerable big chunk of land bank coming the picture in the next 12 to 18 months as per company's projection. So how will earnings improve going forward with this land bank coming in picture is something that we should be watching out for. But Let's first understand what the company essentially does. Now, just about the company, it is a real estate-based company which was established in 1978. So, long-standing presence is already that we are looking at. It operates across MMR regions, and if you just look at the main key land parcels, it has divided its segments in luxury residential with about 21% of mix over here, mid-size residential about 23%, and affordable also contributes higher to about 30% plus mix that we are looking at. They also have some bit of commercial portion is what we are seeing, about 25% or also, divided in mid-size and large size is what we are looking at. Now coming to the projects in focus, luxury, if you see, they mainly operated through their Monte South based brands. If you are looking at affordable housing is under Neo Homes is what we are seeing. Apart from that, what we are also looking at is commercial spaces with the branding of Future X is what we are looking at. Now, if you are just looking at overall large scale townships, also next zone is in focus, but they mainly operate in Bhandu, Panvel, Lower Parel, Baikala and Mulund regions is what we are seeing. And with the ongoing merger in place, these three particular land parcels will have more of these 400 acres or of so land coming in picture. So that's particularly interesting as well. In fact, if you just look at the proposed merger of these key promoter-led entities, they will we'll be looking at unifying about 418 acres of land, which roughly translates to about 4.2 crore of square feet of land area. And this is across Panvel, Bhandup and Dombivali that we are mainly seeing, unlocking an overall potential of around 59,000 crore. So it's a big overall potential that we are seeing. But with that, let's understand how the company's metrics shape up. So we'll be talking about the key metrics that we usually do with real estate. So if you're seeing that in picture, we have your income statement in mind. There's key operational metrics as well. But I'll start off with income statement first. Now with income statement, what we are looking at is a 25% of a growth. This is in the 3-year picture scenario that we are seeing. What would be interesting is the growth outlook forward. In fact, the projection is about a 20% plus growth going forward, and this is for the PAT number that we've seen. So just on basis on that, we've given it a neutral rating. Because if we just see FY25, we did see some bit of that decline in revenue as well. So how does that shape up going forward is something we'll be watching. Coming to the key operational metrics now for real estate companies, if you just look at the revenues, that is more on the lumpier side because of the recognition patterns. So in FY25, we saw about a dip of 26% as far as where the pre-sales number was concerned. While collections, if we see also, there was about a similar kind of a decline that we are looking at. However, net debt to equity on the other hand is on a positive trajectory. FY25, this has come down to about 0.46 times as compared to 1 time, more than 1 times of ratio in FY23. In fact, if you just open the first quarter presentation with the QIP proceeds in picture, they are currently sitting at a net cash position. Just to summarize what has happened in Q1 also, booking value was up around 16%, collections was up around 29%, and they've achieved a net cash position. So given that FY25, we look at degrowth in terms of where these metrics are concerned. First quarter, they've made up for that, and we should be watching out for more quarters for the launch pipeline also that they have in picture. So that's on income statement and key operational metrics that we are looking at. Now coming to the balance sheet, if you just look at the overall book value, that has seen a significant uptick. Of course, this is with the fundraisers also being under the picture. We are looking at a 1,187 crore of a book value. This is in context with this. If you look at the borrowing, 560 crore, we're looking at a significant downtick from the previous levels. If you just compare that with FY21's book value to borrowing that we are looking at. With the QIP of 900 crore in place, they've also achieved a net cash position. So a thumbs up is what we give the balance sheet as of now. Now, important would be to track the cash flow performance of the business going forward. In FY25, they had a negative cash flow balance of from operating activities of 25 crore, while net cash flow stood at about 8 crore. Again, with the proceeds coming in picture, which they'll be utilizing towards these land development projects that they have in mind, how cash flows shape up is something that we should be watching out for. But for now, we've given this a neutral rating. Return ratios as well. We are looking at a 13% ROE number, ROC about 15%, while it is about the 15% range that that we are seeing for ROC, we've seen a decline in terms of where the FY24 metrics are concerned, and this is also on the account of the profitability coming down in the previous fiscal as well. So important to keep a hold of how the metrics also go going forward, but for now we've given this a neutral rating. Shareholding is one interesting metric that we are looking at, and it's a thumbs up that we've seen. While if you look at the promoter stake, from 74% stake in March 23, it has come down to 56% stake. Of course, a lot of restructuring also going in the business. FII stake has increased significantly to 7% as compared to just 0.2%, while DI is also about 16% is the number that we are looking at. To just explain more about what's happened, I want to talk about the 900 crore of QIP that we've already been talking about on this show. So in June 26, the company issued about 1.6 crore of equity shares, and this happened at a QIP price of around 555 per share is what we are seeing. The fund usage would be investment in subsidiaries for about 160 crore. They repaid debt of around 360 crore. Along with that, they're also looking for acquisition of land worth about 300 crore or so. What was interesting with the key allotee names, we had Quant Small Cap and Large Cap Fund taking interest in this particular counter. Maybank Securities, Zeta Global Funds, and Sage One Flagship Growth were a couple of other counters that participated in this. Hence, we are looking at a spike in terms of where the FII and the DII metric is concerned. Coming to the seventh metric is the street cred. Now what we are seeing, the stock has not performed so well. If you just take the 1 year in conjecture, it's down about 8%, while 6 month also we are looking at a 13% of a return. So muted growth is what we are seeing for investor perspective. 3 years also about 163% is the kind of growth that we are looking at. So considering this, we've given this metric a thumbs down. But it's the outlook forward which is particularly interesting for the counter. Now they have about 300 crore of the QIP funds which will be utilized towards this land development and project acquisitions that we are seeing. But more than that, it's the listing, it's the overall merger of the unlisted companies and the listed company that we are seeing, which is going to unlock opportunities forward for the business. In fact, the projection is that in the next 2 to 3 quarters, they expect about 15 lakh square feet of launches, which roughly translates to a GDV value of around 4,500 crore. With this merger in place, there's also net value of incoming assets, which will roughly translate to about 3,100 crore. With this post-merger, the shareholding ratio will also go up to 74%. So you also have like favorable valuation in terms of a large bank coming back into picture. Along with that, even the shareholding for the promoters will increase back to 74% is what we are looking at. But this is the overall picture that we have. So if we just stack up all the ratings, we have overall given it a 5 on 8, considering that income statement operational metrics were neutral. Balance sheet, a strong growth picture going forward over here. While for return ratios, we've given it a neutral. Shareholding is particularly strong along with the outlook. While street cred is something that we should continue to watch out for it, since the stock has not done so well. If you take the 1 year in perspective, 5 on 8 is the overall rating that we have. But let's take this conversation forward with the management himself. We have Mayur Shah, the MD of Marathon Nextgen, joining us as well. Now, firstly, I want to start off this conversation by understanding this. You have a large transaction of land close to the airport. What happens to the overall real estate prices in the region? Do they rise, or does supply pick up because of these new projects in place?
See, Panvel, we are there, we're quite a long-term player for last almost 7-8 years. We are doing Marathon Next Zone as a mini township, where we already developed 4,000 flats, out of which, almost 3,700 units are already sold. So there is a huge demand of an expansion of Navi Mumbai from, Kharghar to the Panvel area in any way, because the affordability in Panvel is still much better than the Vashi and Kharghar area. So there is a demand for the affordable housings of, below between 60 lakhs to 1 crore is something which is the sweet spot of affordable housing, what we have in Panvel. So, and we are at Marathon, we are about to launch phase 3 of Marathon Next Zone, is close to 700 to 800 units. So there is a big demand, and with airport coming up, all these, the employment generation which is going to happen because of the Greenfield airport will be huge, in my opinion. And to that extent, the developments which are happening are not large scale. So definitely there will be a good demand and there will be some slight appreciation in real estate prices going further in next couple of years.
Mr. Shah also wanted to understand, now with the merger of these unlisted entities into listed company that we are looking at and the assets thereof, the expectation is that gross development value of the land will shoot up, and that makes the NPV of your projects also much better, and even the overall valuation becomes cheaper. So can you explain firstly, when does the merger take place and what are the timelines thereof, and second, what are your development plans?
Yeah, so you're right. Like, we have already filed the merger, and in the merger, the group entities where Bhandup we have almost 100 plus acres, Dombivli approximately 80 plus acres, and the Panvel region very close to the airport, another 190 acres or so. So altogether 400 acres of the land of a group entity is coming into the listed entity. And we were actually waiting for all these infra projects to really come up, particularly in Panvel, the airport, the sea link, and now the suburban trains. So in next 2 to 3 years, we'll be really launching the township project in Panvel also. Another township level project. One is already going on, which is on a 26-acre land. The another land which we are going to start very soon. So definitely these infra projects, all our lands which are located in a very good connectivity area. Even Dombivli land is located very close to the new bullet train station which is coming up. So even Dombivli is also gearing up with all the affordable housing projects there. And Bhandup is also right in the midst of the LBS, very close walking distance from the metro rail which is on the LBS. So all these locations of our land are very, very good and quite futuristic, and we see huge development potential coming in the listed entity post the merger is going to happen. The merger has really gone into step 2, like we'll be going into NCLT very soon in next 2 to 3 months, and we are hopeful that in 6 to 9 months the merger will be completed.
Okay, so when this merger does see the light of the day, what's the kind of earning growth potential that you see?
It's a very difficult to forecast those numbers, but in a percentage growth manner, we are quite, our PAT as on last year was close to 190 crore, and we are looking at steady 25 to 30% growth in our PAT going further with all this development coming in. And the listed entity itself right now has a huge potential of Project Monte South, and there is a project of Bhandup and Mulund. So those projects are also contributing to the top line, and they are all with a good margin. Like our the margins are quite high in Mumbai, and that's the reason you are seeing our PAT is quite high on the on the top line. So going further, another thing is that we are also looking at a very niche kind of a redevelopment, a cluster redevelopment projects in the South Mumbai. And, a couple of those projects are already tied up. At appropriate time, we will announce. So that also will boost the company's top line as well as PAT. So, it's a very strong, long marathon run is coming up in next 3 to 5 years.
But just want to understand that, are you being conservative with your projections, considering you've already retired a large portion of debt in the QIP plus a 25% earning growth? With that seems conservative on basis of that. So just want to understand that.
Yeah, marathon is always, whenever we have to focus something, we are very conservative, and, we are always under commit and over deliver. Because what I'm trying to tell you is that, see how these new regions demand will shape up, will really come to know in 2 to 3 years, and that is how, because we have projects lined up. However, the demand should also pick up in a strong way as these infrastructures have come up. So if the demand really goes up in a big way, then definitely we will overachieve than whatever we are committing right now.
Okay, thank you so much, Mr. Shah, for joining and sharing that outlook on Marathon Nextgen going forward. It's interesting. We are looking at a 25% of a growth multiple from year onwards. 400 crores of acres coming into land with this merger taking in place in the next 12 to 18 months that we are seeing, which roughly translates to a GDP potential of around 59,000 crores. So that's Marathon Nextgen in focus for you. But that's all the time that we had on this edition of KYC. Do stay tuned. Markets at 12 coming up next.
A powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility.
Good afternoon, you're watching Markets at 12. My name is Puneet Zaveri. With me is Mahima Vachajani, and over the next half an hour or so, we tell you some of the key stocks, some of the key stories and the key management that we need to talk about. But first, you can see that the Nestle numbers are flashing on the bottom of your screen. Largely seems to be in line with estimates, have actually beaten estimates with some counts as well. But to just dissect the first four numbers first, because you're seeing a very sharp reaction on the upside for Nestle right now. I'm joined by Mahima, and Mahima, the first four numbers largely seem to be in line with estimates.
Right, so overall revenue is a beat, slightly a beat is what we can see on the counter, which was not kind of expected, and probably that's something that the street is liking. Overall revenue is at 5,644 crores versus that of estimate of 5,350 crores. So I think that is something that the street is liking, up 10%. EBITDA was expected to be in a flat range, but it's seen a growth of around 5%, which is something that the street is lacking. But margins have taken a hit. Margins have come at around 21.9% versus an expectation of around 23%. And overall net profit was expected to be down by around 29%, but that's down by about 23.7%. This is largely because of the GST impact that they would have kind of penciled in this quarter. Because of the GST rate rationalization, they will have to bear the costing impact. Overall, if we see, I think even commentary-wise, this commentary seems to be positive because domestic sales has grown in double-digit rate, and this is led by volumes. This is the first time Nestle has come out and said that it is largely led by volumes. 3 out of 4 products group delivered strong volumes led by double-digit growth. Confectionery has also seen a double-digit growth rate. Powder and liquid beverages, another quarter of high double-digit is what we are seeing. Prepared dishes and cooking aids have seen a strong double-digit growth as well. Here also there is volume growth coming in. Milk products is a mixed performance. In certain segments there is growth. Certain segments there has been muted growth. Pet food business, high single double digits is what the growth has come in at. Overall, out-of-home business has also displayed a strong double-digit growth. Just to talk about Maggi noodles as well, the production line at Sanand factory in Gujarat has now, started at the full-fledged level, and they are the commentary coming in is that they are committed to that manufacturing unit in India as well. To take this ahead and discuss the fine print of these earnings, we are joined by Mayuresh Joshi, who is the Head of Research at MarketSmith, joining us now. Mayuresh, hi. A very good morning to you and thank you so much. Good afternoon to you and thank you so much for joining us. Your quick first take on how Nestle earnings have fared, because the stock is seeing that uptick.
Afternoon, Mahima. No, I think a decent set of numbers posted by Nestle, and as you pointed out, 3 out of their 4 product categories have delivered very strong double-digit growth, which is obviously getting reflected in terms of the expected performance heading into Q3 and Q4, as GST rationalization will impact the volume-led growth even more as we head into the next few quarters.
Mayuresh, with regards to where margins are concerned, they've taken a slight hit. This could be because of 2 reasons. One being the GST impact that they would have penciled in this quarter, and secondly, the inflation in cocoa as well as palm oil still continues, and even in coffee. Your view with regards to where margins stand, and will they see some easing in the second half?
That seems to be the case. So if you probably look at how markets have played out for the last quarter, the raw material cost has increased significantly, both on a quarter-on-quarter and a year-on-year basis. Also, the basis of this might be the high-cost inventory that they're probably carrying on into the system. Therefore, I think even on a half-yearly basis, the input costs have been significantly higher. However, I think if you go through the notes and the press release that they've probably given out, their expectation in terms of the commodity basket largely is of the bill that fish prices might soften with the onset of the flood season. Coffee prices are expected to stabilize with better crops expected in Vietnam and India. Cocoa also are expected to probably remain, a large part of it might remain stable, though edible oil prices might remain higher. So I think to offset this effect, the input cost might start coming lower, which might have a positive impact on the company.
Mayuresh, the second aspect is that this time they've said that the domestic sales grew at double-digit rate led by volumes. And last quarter for a lot of FMCG companies, we saw that there was a tad bit of volume recovery, and this quarter there was an expectation that yes, volume recovery further will happen. But any idea of the range that this volume growth could be in? Mid to high single digit was the expectation, but any number in mind as per your calculation?
I think it would remain in a higher single digit in my opinion, because I think a large part of that will be driven in terms of value-led sales as well. So I think the double-digit sales growth of 10.8% on the domestic front that Nestle has delivered makes us believe of a higher single-digit volume growth. But again, I think the kind of distribution network that they are probably improving, I think specifically for confectionery and the powder products in semi-urban and rural areas that they have put forth, I think this can start significantly contribute to volume growth as we head into the next few quarters.
Mayuresh, one last quick question. This sets the tone for a lot of FMCG companies that will post their earnings after this. Any quick takeaways or any learning that you have had from this Nestle earnings that will carry forward to other names as well?
The large part of the universe might still be tackling with the GST rationalization and the inventory-related issues that they probably need to sort out. So I think for the next 2 weeks might actually go back. But as this stabilizes, and as input costs gradually remain stable as well, my own sense is the volume-led value growth, which was clearly missing for the past few quarters, consumption trends which are clearly lagging, will start coming back. So all the elements that were put in place with reduced branding as an example, or reduced prices or additionally advertising and promotional expenses that these companies had to bear might start stabilizing, which might have a positive impact in terms of operating leverage on that.
Okay. All right, Mayuresh, thank you so much for taking out the time and giving us those insights. Of course, Nestle stock still seeing that uptick in trade today, Puneet. And this is after a long time that last quarter, I still remember when they came out with their earnings and the kind of pressure that the margins had, it did see quite a downtick, and the commentary was also not very positive. But this time they've said that there's volume growth, revenue and EBITDA is slightly upbeat, and I think the street is clearly liking that.
Well, definitely, and you are seeing a lot of those consumption patterns across categories. You know, chocolates, Munch, Kit Kat, they've given a lot of commentary today on Maggie as well. But thanks so much for joining us, Mahima, getting us that perspective on Nestle. And, you know, it's going to be interesting what happens with the stock if it continues that momentum till closing, because really strong growth in terms of revenue, volumes as well, and profits. You might be seeing a 23% downtick. That's largely because in the same time last quarter, you got that impact of almost 200 crores in terms of gain from one of the subsidiaries that got sold. So that is where the profit number lies. But strong numbers for Nestle, and as Mahima highlighted, if how this translates to the other companies as well, that'll be something to watch as well. So that's largely on Nestle. Let's quickly pull up something like an Ola Electric also very quickly before we move on to the management for the show as well. You know, stocks been in upper circuit today. It has been for the last week as well. Let's pull up the last week chart of Ola Electric and see the gains, because it has had a very interesting trajectory, to say the least, because from the high of 157 seen almost 7 to 8 months ago, stock went all the way down to 39 rupees per share. But over the last week, yesterday as well as today, you've seen an upper circuit of 5%. Today, there was news flow also on this particular company. They have launched, the battery energy storage system, and they are entering this particular market. It's something that Bhavesh Agarwal himself had also highlighted, that they want to enter this particular space. They've launched products from 1.5 kilowatt hour all the way up to 9 kilowatt hour, and this will help the company foray into a new category, to say the least. It will also help in using their own 4680 cells as well. So the starting of the prices are roughly from 30,000, almost 29,999, goes all the way up to 1,50,000, and largely again a new category to stay on course as well. So that's largely on Ola Electric. Stock is up 8% for this week itself, but there are quite a bunch of stocks that are reacting in trade. Let's quickly take a market check first before we move on to the show. We have seen that the Nifty again today is in a positive trajectory, similar to what we could anticipate yesterday as well. So the Sensex up 420 points, the Nifty 50 is up 131 points, and we are at a very interesting juncture, to say the least. 25,200 was a key support last week. We're now over 25,400. Let's look at the Nifty 50 heat map very quickly as well. We have seen that some stocks in the banking space, in the IT space, were a key focal area. Today, Nestle now has jumped to the biggest gainer in terms of the Nifty. Apart from that, we're seeing Titan. Axis Bank has been one of the ones where we did see roughly about 1,200 crores in terms of a provision which was created in this quarter. And despite that, the street is rewarding what they've seen on Axis Bank, multiple key factors, and we'll get Vishwanath in to talk about Axis Bank very quickly. We also have something like a Shriram Finance. HDFC Life post results is the second biggest Nifty loser. Something like an Infosys is also down 0.5%. Delta Corp also has been one of the other results which are flashing on the bottom of the screen. Stocks down almost post results as well. But let's now look at the Nifty Bank also very quickly, because you had a lot of results over the last week. You have a lot more coming in on Saturday as well. So on Axis Bank, Kotak Bank is the other biggest gainer. Something like ICICI is also one of the biggest gainers as well. On the losing side, IDFC First, Bank of Baroda, Federal Bank is the other one as well. But we had Mahima here in the studio. We also spoke to her about Nestle, but also let's get her back for a quick view on Eternal, because that is going to be a stock which will be in focus today on the back of their quarterly results. Mahima, tell us what are some of the key highlights that we should be watching out for from the Eternal results today.
Right, Puneet. So first, FMCG staple company has already come out with its earnings now, and now we'll wait and watch out for the first platform company to come out with its earnings. The expectations are that revenue may see a good rise of around 80% as per Bloomberg estimates. EBITDA may see just a rise of about 4%, and this is because of dark stores being added on this quarter as well. That will put pressure on overall EBITDA numbers. The margins are expected to be at around 2.7% versus that of 4.7% earlier in Q2 FY25. And net profit may see a decline of around 39%. Now, overall, what to expect? Of course, strong revenue growth coming in, and this will be largely led by Blinkit and Hyperpure. Profitability may decline due to expansion in quick commerce stores, that is dark stores, and of course the challenges that the food delivery segment has been facing. In fact, it's remained stagnated, and last quarter also saw a kind of decline in the overall numbers. Higher marketing spends likely to put pressure on margins as well, and Blinkit shift to the IP model, the inventory owned led model, could probably impact the margins and EBITDA and profitability number as well. Lastly, in terms of what to watch out for, expansion of dark stores, to what extent has taken place and whether it is in line with what they guided for. Secondly, recovery in food delivery, has that happened this quarter, considering this quarter is going to be a better quarter than quarter one. Quick commerce market share expansion, has that happened or not? Hyperpure revenue growth is something that we'll be eyeing, and to what extent. And lastly, they said that going out business will be the key driver for their business. The developments with regards to going out business and how well that business has grown in the quarter is something that we'll have to keep an eye out on. So this is everything that you would expect or want to know from the internal earnings.
Well, thanks so much for that, Mahima. But as promised, let's get a quick view on Axis Bank as well, because while the performance missed the mark, a steep 26% drop in profits was leading to the sharp up move in the share price. Vishwanath is joining us to give us a breakdown of what could have led to this positive outcome. Vishy, over to you.
So the second quarter at Axis Bank has actually been a lukewarm sort of a quarter for the private sector lender. So what we've seen in terms of the numbers, the primary thing that doesn't work is, of course, the net profit falling about 26%. And this is largely because of higher provisioning that has happened during this quarter. During the quarter, RBI had identified, as part of its FY25 inspection, had found out that certain crop loans were being extended by the bank in products that were already discontinued. So the bank has had to make about 1,231 crore worth of additional provisions, standard asset provisions, against loans granted within those products, because of which, of course, the net profitability has come down. The other issues that persist during this quarter is that while the asset quality numbers have shown an improvement, the slippages during the quarter, the gross slippages during the quarter, have trended higher compared to what was there last year. And another point that does not work for Axis Bank is the fact that the Q1 issues, the technical impact that the bank had described in the first quarter, the impact of that does not seem to have been limited to the first quarter and has continued in the second quarter. Now, what does work for the bank is, of course, the net interest margin. That at 3.73% is holding strong. Yes, it is a little bit lower than Q1. However, in the current macroeconomic environment, a 3.73% net interest margin is a good number. Similarly, on the loan growth front, the bank is seeing 20% growth in corporate lending, and that is, of course, showing that the bank is going to push very hard on growth going ahead. Apart from that, the bank is also guiding that the asset quality on the unsecured retail has actually improved. So therefore, the bank is pushing harder on credit card dispersals, credit card distribution, as well as personal loan dispersals. So those things are going to come in handy as the bank charts for growth in the rest of the financial year. Lastly, the bank has also talked about a push on the affordable housing bit, because the housing finance is one portfolio which has not really grown much for the bank. So for Axis Bank, the push on affordable housing is going to be a big positive. So that's the sort of wrap up of what the second quarter looked like for Axis Bank. We'll still have to wait and see what the third and the fourth quarter, which is typically the stronger quarters for the banking industry, what they show to us.
Well, thanks so much for that, Vishy. Definitely, Vishy will have a busy weekend, to say the least. But KA Industries, let's pull up that stock very quickly, is in focus. Now, you would ideally look at the results, see a 21% revenue growth, see a 30% profit growth, and be very happy as a shareholder. But that's not the case. Stock's down 5.5%, and the key focal reason is that one of their facilities in Sanand, which was expected to come into operations in quarter one of FY27, so still 3 quarters away, will now actually come in quarter 4 of FY27. So that was expected to have the high margin, wires, and that the EHV wires especially, and hence the stock is currently seeing a downtick today. But I had a chance to caught up with the management, Mr. Anil Gupta. He's the CMD at KEI Industries. And I started actually with this particular question itself of what happens to the business, what happens to the margins that was going to come with the EHV products. Listen in to what he had to say. We're now in conversation with the management of KEI Industries post their quarter 2 results. It was a strong quarter to say the least. Revenue has grown in this particular quarter by almost 20%. Profits also subsequently increasing by 31%. But to talk more about this, as well as what he's currently seeing on the ground, I'm now going to be joined by Mr. Anil Gupta. He's the CMD at KEI Industries. Mr. Gupta, very good morning to you, and thanks so much for joining us today. Let me first start off, in this particular quarter, the financials have been very strong, but the stock is under pressure today. And that largely seems to be your Sanand facility and the EHV volumes largely expected to be delayed by the end of FY27. Could you just clear the air on that, and if that has actually been delayed in this particular quarter that you announced?
Our Sanand facility is, results by far are to our expectation. Our Sanand facility is a bit delayed in the first phase by around 3 months because of the excessive rains and in this year, and also because of some delays by the contractors, which generally happens in this size of the projects. But first phase, we are going to commission start commercial production by November. And so far as the EHV facility, that is to commence by March 27. The reason being, we incorrectly estimated the construction of 158 meter tower took the timeline of 2 years. It is equal to around 60-story building. And so the even architect, contractor, and we ourselves did not estimate the complexities, technical complications in constructing such a structure. So, instead of commissioning that by June 26, now we are expected to commission it by March 27. That means a delay of 9 months. But it is mainly because of the purely technical reasons and the time needed to construct and build such kind of project.
And Mr. Gupta, we commend you to say it so clearly that it has been delayed, but there's everything that you're doing in terms of getting that. So thank you so much, firstly, for the clarification. Let me come across to your growth, which was also in terms of both in terms of the domestic as well as a very strong push in the export market as well. So could you talk a little bit about what led to the 93% growth in export market in this particular quarter?
I've been saying for last 4 years that we are continuously working on developing various countries for our exports. We are seeking technical approvals across the world in Europe, Australia, Middle East, as well as US, and we have been successful so far. And I see much bigger traction in exports in the coming years as and when our capacities are on board. And I hope that as soon as our Sanand facility is commissioned by November, we should see a much stronger growth in the company from fourth quarter in this financial year and subsequent quarters. There is no dearth of demand in export markets as well as domestic markets to the customers which we cater, and it will be visible gradually quarter after quarter.
And, Mr. Gupta, one of the other things is that, what was the volume growth that you saw in this particular quarter? It looks like based on the growth, it would have been somewhere on the mid-teens for cables and wires segment. Was it around that number?
Yeah, our volume growth in this quarter is around 15%. And we expect this kind of growth to continue. And the volume growth will increase once our new capacity comes up.
Let me also ask you in terms of the order book execution. Roughly about 3,800 crores is what your pending order book is. How long would you take to execute this based on the growth run rate that you're going at currently?
Normally, our wire and cable order book is close to 3 to 4 months. We execute most of the orders within 3 to 4 months, barring a very few which are based on price variation clause in respect of commodities, and only some EPC orders which are now around 400 or 500 crore rupees. They have a tenure of around 1 to 1.5 years. So that is and normally the orders which comes in the retail from distributor side, they are mostly executed maximum within 15 to 20 days from the stocks.
Mr. Gupta, could you also give us some perspective on the cables and wires division, both domestic and international you spoke about? So, this quarter, cables and wires institutional exports are almost up 117% at 425 crores. The domestic, though, is just up about 3%. So, what are you currently seeing on the ground? And do you expect that in Q3 and Q4, the domestic cables and wires segment should start having a little higher growth than the current run rate?
No, there is no dearth in demand in the domestic market. We have shifted, given preference to export markets and shifted a good amount of capacity to the exports. So it is only, we have, say, X capacity, say 100. How much we allocate it to export or how much we allocate it to domestic, that is our choice. But the markets are strong both ways.
So, can I assess that, when your new capacity comes up in the timeline that you mentioned over the next year or so, you will be looking at, continuing that export momentum that you are, but you'll also get some additional capacity for the domestic market as well now?
Of course. We will be gaining back our market share in the domestic market. Although I don't say that we are losing any domestic, share. But we will definitely grow in domestic as well as export market with equally strong footing.
So you also had raised 2,500 crores in terms of a QIP. How much is that still yet to be utilized, and what would be that used for eventually?
We had raised 2,000 crore in November 2024, out of which the remaining amount is around 760 crore, out of which 400 crore is likely to be used in this financial year in Capex, and the rest will be used in the next financial year, because this money was raised for Sanand plant and it is being utilized over there.
Just a couple of final questions. One was on your outlook on the copper price volatility, because it has been volatile even in the last 3 months. Do you expect it to now get in a similar range, and is it that a lot of your exposure is hedged towards copper and like industry standards passed on with a lag of 1 quarter?
See, we don't apply our mind much on these prices, because nobody knows about the movement of metal prices. What we focus is that we have enough inventory and purchases of metals with respect to orders booked by us, so that we don't lose on the commodity. And so far as retail sale is concerned, which is around 54% of our total turnover, most of the orders are executed from the stocks within 15 to 20 days. So we, for that much material is already available in stock when we are taking those orders, because we have around 26 depots across the country holding finished goods inventory for sales to the dealers.
And, Mr. Gupta, one final question. You'd given a guidance at the start of the year. I think it was 18%. Please correct me if I'm wrong. Does that largely maintain despite any kind of change in, the new facility coming in as well? And on outlook of your margins as well, I think you were targeting roughly between 10.5 to 11%. Does both of those numbers continue in terms of your projections for this year?
Of course, we maintain our guidance, which we have given. In fact, we are trying to better it. And similarly for EBITDA margins also, 10.5 to 11% we maintain. So far as next year is concerned, the growth will the growth in our sales will come from the new facility, because we are looking at a new capacity for continuous growth in our volumes, revenues, as well as the profits.
But how should we look at margins next year, sir? Because the extra high voltage cables which would have eventually come in by Q1 of FY27, I know it's pretty early, so if you can just provide some perspective, if we will be able to look at and rather maintain margins of what would be the FY26 level for the next year?
We will be able to maintain our margins irrespective of extra high voltage facility being delayed by almost 9 months because of the continuous improvement in our export markets.
Well, that was the management of KEI Industries. The EHV segment will be something to watch, the extra high voltage. How does that impact margins because of the delayed facility? Will be the other key question from the con call that we'll be watching out for. But viewers, that's all the time that we have on this edition of Markets at 12. Stay tuned to NDTV Profit for more.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
A powerful gathering of global leaders and thinkers. voices that will decode the edge of the unknown.
Hello and welcome to Profit Buzzers. I'm Anushi Vakharia and with me is Varsha Chandranani. Before we talk about the management in focus, let's have a quick look at how the markets are doing currently. Like markets also in light of Diwali are seeing a good day today. We are seeing gains of around 0.7% in terms of where the Nifty 50 is concerned. Nifty Bank also doing particularly well. Of course, Axis Bank in focus on the back of its second quarter results as well. We're looking at an uptick of around 0.8%. If you look at how the sectors are doing, Nifty Realty is one particular sector which stands out. Looking at the sector, we are seeing a gains of more than 1.7%. Your Nifty Auto and FMCG also not doing so bad. We are looking at an uptick of more than 1% over there also. Well, what's under pressure is something like a Nifty PSU Bank, but flattish kind of moves that we are looking at here as well. But let's quickly go to the point contribution table to see how the Nifty 50 stocks are doing. So right in the green, what we are looking at is Nestle, up over 4%, of course, buzzing on the back of its results, also which will be due anytime soon. Titan and Adani Ports also seeing gains of around 2%, while not doing so well is something like ONGC seeing flattish moves over here. So that is in terms of where the Nifty 50 chart is concerned. Quickly coming to the broader markets, what we are looking at in terms of where the Nifty Mid Cap 150 is concerned and Small Cap 250, we are also seeing similar kind of moves over there, 0.5% or 0.4% of an uptick. So this is in terms of what's happening with the benchmark in the broader markets. But what's in focus is Borosil Renewables, and this is after government makes prior registration mandatory for solar and wind components. In fact, Varsha, talk to us about essentially what does this mean before we go to the management.
Yeah, so this is positive news for the Borosil Renewables or for solar glass manufacturers. Now, why? Because government has made prior registration mandatory. Now, this is for importing solar and wind components, which includes your solar glass, PV cells and wind turbines parts. That means importers must register on a renewable energy equipment import manufacturing system before importing. Now, why this is being done? By the way, the rules are effective from November 1st, 2025, and why this is being done? To track imports and boost local manufacturing. So when I say boost local manufacturing, your Borosil is will be in will have a positive impact on the back of this. But what kind of opportunities will companies see? What are the growth plans when it comes to 3 to 5 years? Let's directly speak to management. I am here joined by Mr. Pradeep Kumar Kheruka, who's the chairman of Borosil Renewables. Hello, Mr. Kheruka. Welcome to NDTV Profit. I was just speaking about how government has made a prior, or rather how government has made mandatory to register when it comes to solar glass or PV cells. Just wanted to know how this policy shift or how this mandatory registration will actually be an opportunity for a company like Borosil. Sir, you're on mute, I guess.
Sorry, thank you for having me. The government has been following a policy of promoting domestic manufacturing by domestic industry. And this is, I think, a part of the same, it's a part of the same strategy, of the same goal of Indianizing the supply chain for products that are being made in India. So the idea is that each importer will have to register themselves with the government, and they will have to record their imports, whatever they have imported. And I suppose that this is probably going to follow that after importing the product, where has it gone and what has been done with it. Now, this is not related to merely solar glass. It's related to every single component that goes into the manufacture of the module. That includes solar cells and junction boxes, cables, everything. And why I'm saying, or why we feel that this is industry positive, it is positive for domestic manufacturing, because there have been whispers of some practices where sometimes an imported product has been used in domestic, so-called domestic production, etc. And different, people are very creative and people do different things. And so this is meant to one step towards making sure that everybody is doing what they say they're doing, and this will give the government an opportunity of tracking what happened to the imports, how much was imported, where it went, and so on. So I believe that this is going to spur domestic production across the board for every component, not just for solar glass, of course for solar glass as well. So I believe that is the motive behind it.
Mr. Kheruka, then on that, will this improve pricing power for domestic glass players like yours?
I would say that the pricing power is determined by the value of the imported glass. So at the moment, what is in place is a minimum import price for glass which is being imported from China, and that is determining the price the price for the user. And so I don't think that this will have any role in promoting a higher price, which it is not meant to. It will have a role in ensuring that there is closer monitoring by the government on the production of different components, the usage of different components, and who is doing what. So I think each manufacturer's activity will become a little more in focus by the government. And if their manufacturer is having some problem in sourcing his product from a domestic source, it is possible that the government may ask them what is the issue, why they are. So it's also to help manufacturers reach international standards. I mean, the domestic component manufacturers also need to reach international standards. And when there's a dialogue between the module manufacturer and the government, let's say, then the matter comes up in the front as to what are the difficulties, if any, that are being experienced by the user of such modules.
Mr. Kheruka, just want to understand, in terms of this benefit that we are looking at, can you quantify what's the kind of growth that we can see, how we can see an impact in terms of financials for your top line? What would be the opportunity?
I think the growth is going to come from greater investment in production. So I think most solar glass manufacturers, for example, are already selling all that they produce. But there are many other components like cables, junction boxes, copper interconnect, encapsulants, and things like that. And there the government would be in a position to know now who is importing how much and for what reason they are unable to switch to domestic production. So I think all the solution that the government finds finally is going to drive more investment in domestic manufacturing as such.
So, Mr. Kheruka, now just, we'll talk about some of your business highlights wherein, just wanted to know an update on your two new furnaces, our timeline for commissioning both of them by December 2026. So, are they on track?
Yes, they seem to be on track for commissioning by December 26. Construction work has started at site, orders are being placed. So this all seems to be progressing, along expected lines.
Also, is Borosil planning any kind of backward integration, programs or technology partnership per se to, enhance the efficiencies and of course to improve the margins?
At this moment, we are not actively looking at any backward integration. We are, of course, always on the lookout for improvement of production efficiencies, and we are catering to products which are new products altogether. For instance, in Europe, there is now a trend where the solar tile is the roof. This is made with thicker solar glass, with 5mm glass, and it's a tile which is a photovoltaic, a miniature photovoltaic module. So the entire roof is now this tile, and therefore it is not like you first made a roof and then put a solar panel on that. This kind of a product, if it is used as a roof in warehouses and so on in our country, could expand the use of solar modules enormously if this works out. So we are in dialogue with them. We're trying to understand what are their specific requirements. They've done a lot of research on this, and if we can have the benefit of this, hopefully it would be a new component, a new product altogether that would come for the Indian market.
Right. Mr. Kheruka, just on the export part, also want to understand what's the picture there. Are you looking for any joint development agreements there as well? Just want to understand the overall perspective in terms of export growth going forward.
In terms of joint development, it is that we work in tandem with our customer. There's no formal joint venture agreement, but we try to meet his demand. While meeting his demand, we understand the application. While understanding the application, we look domestically and see whether that application would have application in India. And for instance, this roof tile that I'm talking about would have a lot of application in India. It's very nascent for us, but it could be something very interesting as a new product altogether.
Understood. Also, Mr. Kheruka, so, considering the Capex that you are doing, I understand that the benefits will come post FY27, but when it comes to FY26 and of course FY27 also, any sort of targets when it comes to, revenue and EBITDA that you may have pegged in? So, any update if you could give us?
I don't make forward looking statements. We are doing well. I think I would just leave it at that. We are doing well. We are doing better than we thought we would. And to some extent, things are looking a little better than what they did the last quarter. And with everything falling in place and everything going well, we should be doing quite well for the next year as well. If the production comes on stream by December, then the last quarter of the next year, should see higher sales and higher, maybe a little higher margins. So that's about maybe 14 and a half months down the line. We're hopeful.
Okay, we'll leave it at that. Thank you so much, Mr. Kheruka, for joining and sharing that outlook on Borosil Renewables. Interesting play that we'll see from FY26, 27 onwards as well. But with that, let me also welcome in our fundamental guest for the day, Mr. Chokalingam, founder and MD of Economics Research, joins us as well. Mr. Chokalingam, I hope you heard the commentary from the management. It's an interesting set in terms of what's happening. The stock is also buzzing in terms of this particular news update that we are looking at. Just want to understand your take on this particular counter.
Yeah, definitely one should congratulate them for making a solid growth in revenue in the last 4 or 5 years. Consistently, it has been growing. Also, second, they are engaged in the futuristic business, no doubt about it. The only concern is that the stock price has already played out very successfully. Last 2 years at the bottom line also, they are not making profit, and profit margin is also in a single digit. Yes, expansion, can improve the margin in the long term. As he mentioned, beyond 1.5 year, things can improve. So therefore, at best, I would give a hold rating. I would wait for a couple of quarters to see some progress on the margin. Then only I would consider buy rating for the stock. Otherwise, it's just a hold for the long-term investors.
Okay, well, that's the view for Borosil Renewables. So, but let's talk about the big earnings in focus, and Axis Bank, right at the top is what we are looking at. What we've seen in the second quarter is that there was a 26% of drop in profits, but if we look at the overall momentum of the stock, it's in positive that we are seeing. Vishy joins us with more details on what's worked, what's not worked for the company.
So the second quarter at Axis Bank has actually been a lukewarm sort of a quarter for the private sector lender. So what we've seen in terms of the numbers, the primary thing that doesn't work is, of course, the net profit falling about 26%. And this is largely because of higher provisioning that has happened during this quarter. During the quarter, RBI had identified as part of its FY25 inspection, had found out that certain crop loans were being extended by the bank in products that were already discontinued. So the bank has had to make about 1,231 crore worth of additional provisions, standard asset provisions, against loans granted within those products, because of which, of course, the net profitability has come down. The other issues that persist during this quarter is that while the asset quality numbers have shown an improvement, the slippages during the quarter, the gross slippages during the quarter have trended higher compared to what was there last year. And Another point that does not work for Axis Bank is the fact that the Q1 issues, the technical impact that the bank had described in the first quarter, the impact of that does not seem to have been limited to the first quarter and has continued in the second quarter. Now, what does work for the bank is, of course, the net interest margin. That at 3.73% is holding strong. Yes, it is a little bit lower than Q1. However, in the current macroeconomic environment, a 3.73% net interest margin is a good number. Similarly, on the loan growth front, the bank is seeing 20% growth in corporate lending, and that is, of course, showing that the bank is going to push very hard on growth going ahead. Apart from that, the bank is also guiding that the asset quality on the unsecured retail has actually improved. So therefore, the bank is pushing harder on credit card dispersals, credit card distribution, as well as personal loan dispersals. So those things are going to come in handy as the bank charts for growth in the rest of the financial year. Lastly, the bank has also talked about a push on the affordable housing bit, because the housing finance is one portfolio which has not really grown much for the bank. So for Axis Bank, the push on affordable housing is going to be a big positive. So that's the sort of wrap up of what the second quarter looked like for Axis Bank. We'll still have to wait and see what the third and the fourth quarter, which is typically the stronger quarters for the banking industry, what they show to us.
Well, thank you so much, Rishi, for all the details. Well, the stock is up almost 1.7%, but let's also listen into the Axis Bank CFO Puneet Sharma talking about slippages. To listen in.
This is the July to September quarter. So if at the end of the July month, I was to slip because of the technical impact, I would get recorded as gross slippage. Consequently, the customer upgraded themselves on July. So on August 1, if the customer upgraded, the customer would be recorded as recoveries and upgrades. So we are not netting off same quarter recoveries from the gross slippage number. So there could be customers that would have, purely because of interest application at month end, slipped for the night and gotten upgraded because they serviced the very next day. Hence, my request that we should remain focused on the net slippage, because that is a reflection of the performance for the quarter, and net slippages is what drives the provisioning cost.
Well, Mr. Chokalingam, just wanted to have your view when it comes to Axis Bank. The stock is up, though it did not meet Q2 estimates. Also, if you see provisions, they rose almost 61% year on year, but the stock price, if you see, is in positive. What is your view?
So the provisions have increased despite the net NPA percentages being 0.44%, which is really good. So the move to increase the provision, I think market has taken positively because reported profit performance is not so good. Still, market has not punished the stock. That's mainly because of aggressive focus on the quality of assets. But the only area of concern is that the credit growth.
Okay, there seems to be some issue in terms of the audio feed of Mr. Chokalingam. But let's talk about a couple of other stocks which are reacting on the basis of their earnings, and once joins us with more details.
Thank you for that, Anushi. First, let me start off with L&T Finance. Now, the company has reported a Q2 set of numbers. The retailization stands at 98%. The retail book for the company was up by 18% on a YY basis. The total book size, in fact, they have crossed that 1 lakh crore mark, and it is up by 15%. There has been a healthy growth in the quarterly retail disbursements, and the housing finance and gold loan books saw strong disbursements as well. Also, if we talk about the farmer loan disbursements, it fell on YY basis, and the company is planning to add 200 new gold loan branches as well. If we talk about the results, the revenue was up by 8%, the net profit was by 6%, and the advances were up by 15% as well. Company recently also conducted their earnings call, where the company has said that the pressure on yields is expected to come down in near future. They are expecting the NIMs in the range of about 10 to 10.5% versus the 8.5% right now. They are expecting the H2 FY26 to be better for the entire BFSI, and lastly, they are targeting the credit cost in the range of about 2% for FY26 as well. Moving on to HDFC Life, they are now again a strong set of numbers. The annual premium equivalent for the company has grown at 9% as well. If we talk about the net premiums, it is up by 13%. The value of new business has advanced by 8%. The VNB margins, the value of new business margins, came at 24%, and the Indian embedded value also grew by 14% as well. Also, the Motilal Oswal has maintained a buy on the stock with a target price of 910 rupees. They believe that the Q2 FY26 performance was in line. Now, this was also they have also believed that the protection and ULIP segments have been showing strong traction post the GST rate cuts as well. Lastly, at solvency, they are targeting that the solvency will be improving to 180 to 185% from the current 175% post the debt raising in second half of FY26 as well. Third on my list is HDB Financials. Now again a poor set of numbers. The asset quality has taken a hit. The credit cost has remained elevated. Net interest income has been in line and the profit has missed the estimates. Also, Motilal Oswal has maintained neutral on the stock with a target price of 820 rupees. They believe that the weak Q2 FY26 was due to the muted AUM growth and the elevated credit cost, and the NIM expansion has been aided by the lower cost of funds as well. They are also expecting that the rise in credit cost has been driven by the commercial vehicle stress amid monsoon disruptions as well. And lastly, they are expecting a strong rebound in second half of FY26 with festive demand and recovery in retail lending as well. So this is how the overall picture is panning out for the BFSI pack as well.
Okay, well, thank you so much for that, Vansh. Mr. Chokalingam, our conversation just got interrupted. You were talking about Axis Bank. Along with that, we have a couple of other names in the financials also in focus, HDB Financial Services, L&T Finance. What is your take on this? And also, please complete the answer that you were alluding to earlier.
Yeah, sorry for the interruption. Axis Bank, the management focus on quality of asset is really good, but the only area of concern is that the credit growth has been around 11%, although the corporate credit, as your colleague has mentioned, has gone up by 20% year on year. The overall credit growth is not far above the industry growth. So that is one area of concern, and also the stock trades at around 2 times price to book value. So therefore, it is fairly valued compared to banks like SBI. So I would give a hold. Instead of buying Axis Bank, I would suggest consider buying a bank like SBI, State Bank of India.
And your view on the other two stocks as well, L&T Finance and HDB Financial Services?
Yeah. So, these NBFCs are not likely to post, impressive profit growth, at least for another 1 or 2 quarters. The whole industry, including banks and NBFCs, the credit growth in the industry has moderated. There is a dearth of, the deposit also. The growth in deposit is also not growing. So that should also affect NBFCs. And public sector banks are better positioned because they still have access to cheap, low-cost deposits. Some banks have even 40 to 50% of the total deposit coming from low-cost deposits. So in difficult time like this, where even the consumer demand for, the loan from NBFC has moderated, I believe one can focus on PSU banks like Bank of Maharashtra, Central Bank, State Bank of India, rather than going and buying aggressively these top NBFCs. The profit growth has moderated. Even price to book value is reasonably priced. So if at all one has to consider, one can consider stocks like Shriram Finance within the NBFC, which is relatively very cheap in terms of price to book value, that I think can come back in the short term itself.
Thank you for that view. A big thumbs up when it comes to Nestle India as the FMCG major post a strong double-digit growth in its Q2 revenue. The company saw robust volume growth across key products including Maggi, KitKat and Munch. Joining us now with more details is my colleague Mahima, who closely tracks the FMCG space. Mahima, over to you.
Right, so Varsha, as you rightly mentioned, a big thumbs up is what the street is also giving the counter, right? Overall, and this is because it's the highest ever quarterly revenue that Nestle has recorded this quarter, and this is despite of the kind of GST rate rationalization impact that a lot of FMCG companies have been talking about. Despite that, a 5% revenue growth is what we've seen. EBITDA, a 10% growth in terms of revenue is what we have seen. A 5% growth in EBITDA is what we have seen. Margins have taken a hit, of course, but largely in line with what a lot of analysts were expecting, slightly below the expectations, but not in terms of an overhang that could put pressure on stocks. The net profit, however, is down by around 23%, but the expectation was that it will come down by around 29%. So slightly better where the net profit downtake is concerned. And of course, there was an exception item of around 91 crore of gain in terms of selling of subsidiary in the last quarter, which also has an impact. Now, in terms of key highlights, as I mentioned, revenue and EBITDA have been beaten estimates. Margins have taken a hit, and this is because of inflation and GST rates. Domestic sales has grown in double digits, led by volumes. Now, this is the first time they've said that there's volume growth that has led the domestic sales, and 3 out of 4 products have delivered strong volume-led growth, is what the management commentary is. Segmental performance also. Largely confectionery products plus powdered and liquid beverages and milk and nutrition products overall have seen a double-digit growth. Milk products and nutrition products, of course, was mixed slightly, but pet food has also recorded a high double-digit growth in terms of the volumes. Out-of-home business has displayed a strong double-digit growth here as well, and export has also seen a high double-digit growth. Lastly, in terms of GST, the management is working closely with the partners to implement GST as soon as possible, and they've said that GST 2.0, with GST 2.0, they're expecting to stimulate consumption, drive affordability, as well as contribute to growth. Lastly, commodity outlook, they've said milk prices are expected to soften going forward. Coffee prices are anticipated to stabilize, and overall, edible oil prices are also expected to remain firm, but may see a further uptick, which could probably put pressure on the margins going forward. So this is the overall view of what's happened with Nestle in Q2.
Thank you so much, Mahima, for all the details. Well, Mr. Chokalingam, I mean, indeed a great quarter when it comes to Nestle, and that's also seen in the stock price. Now, what should investors do from now? Should they hold the stock, or they should, buy additional quantities, or should take a fresh position? What are your views?
You are absolutely right. The great numbers on top line, but unfortunately that is not reflected on the bottom line. Even before extraordinary income, if you see year-on-year basis, there is hardly any significant growth in profit before extraordinary. And the stock also trading at around 75-80 PE on a trailing basis. I think, even industry stalwarts are not expecting any strong double-digit growth in the volume. For that matter, the media reports that even in value terms, FMCG industry may not grow in double-digit. I think, extremely conservative investors, can consider holding the stock. But otherwise, I believe in the large cap space, one should look at banks where industry is expected to continue to grow in double-digit, or the telecom industry, or engineering capex oriented. These are the 3 sectors, and also within two-wheeler industries, something like a Bajaj Auto. These are the companies and sector which should do much better than the FMCG for the next 2 to 3 quarters. So I would give a sell call on Nestle.
Okay, a sell call on Nestle. Well, thank you for that view. Well, viewers, a time for a quick break. We will be back. We will be right back. Lots of news lined up on the other side.
A powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that
Welcome back to Profit Buzzers right here on NDTV Profit. We still have Mr. G. Chokalingam with us, also being joined by Osho Krishan. He's the Chief Manager Technical and Derivative Research at Angel One. Osho, very good afternoon to you. Thanks so much for joining in. Let me actually first take a quick question with you on Nifty, because it has just crossed and touched that 25,500 mark. It's been a remarkable move, to say the least, over the last 2 to 3 days. Do you think that this is sustainable, or you're seeing some more rally in the Nifty 50 right now?
A very good afternoon to both of you, and firstly, thank you for inviting me at the show. Well, before I initiate any kind of advice, I would like to firstly say Happy Diwali to all of you and all the viewers of NDTV. Now, coming to the view on Nifty, no doubt in the recent period, we have seen a very strong consolidation, and today we are witnessing a consolidation breakout. And also on the technical front, it has been a very favorable development, because Nifty has broken the sloping trend line of the coinciding with the lifetime highs and the recent high, calendar year's high. And from there onwards, we are witnessing a very strong breakout. So this might be seen as a very strong momentum in the coming future. But overall, I am expecting a target of nearly 25,630, which is the calendar year high, and also coincides with the bearish gap on the daily time frame chart. Overall, the undertone is definitely very bullish, and I'm expecting that from here onwards, dip should be augured very well, and the dips has sustained on the higher end. So now the support is approximately around the zone of 25,200, and the upside range is near about 25,650 to 700 as the immediate target. So I'm expecting that any kind of dip towards 200 can be seen as a buying opportunity, while on the higher end, 650 to 700 will be seen as the first and intermediate target for Nifty.
Thanks so much for that, Osho, and season greetings to you as well. But let's quickly pull out what Larsen and Toubro is doing. It's one of the big brokerage calls of the day as well. Stocks up 0.8% as well. Let's quickly look at the 1 year chart also to give us some perspective, that because it has outperformed the Nifty consistently over the last 5 years. Stocks actually almost just 9 to 10% in terms of the last 1 year, but there has been the latest update. Firstly, on Jefferies, let me put that out. They maintain their buy target price of 4,345 rupees per share, and they've highlighted a couple of points. outperformed the Nifty over the 6-month, 1-year, 5-year chart, and you can see that the percentages over 1 to 200%, and that's of course counting in from what we saw during the pandemic when the Nifty 50 fell. We've also seen that they were highlighting 2 key points. They believe the company is on track to either make or actually exceed their guidance in 2026, and they are expecting the company's core E&C EBITDA margins to also be 20%. And that's going to be one of the key positives for the stock. Since it's not done too much in terms of the last 1 year, let me actually go to Mr. Chokalingam. Mr. Chokalingam, we've actually asked you about L&T quite a bit, but 2 key updates that have happened over the last couple of weeks. Of course, the brokerage note, as well as the company actually selling out its stake to the Telangana government for the Hyderabad Metro. That will, of course, whatever strain it was putting on the financials will not be there now. What do you make of L&T? Do you continue to be bullish on the stock, as well as what you will be watching out for from the Q2 earnings for the company?
Yeah. So I am very optimistic on L&T. We have a coverage on the stock. We have been recommending it. You are absolutely right. Selling up that metro business to Telangana government would be margin accretive. Its margin should improve. And second, the kind of orders it is procuring outside India is really phenomenal. Almost every second day you see the management announcing orders. And third, the management commitment to build new businesses and over a period of time and then make very big on their own, something like a data center, realty, semiconductors, nuclear power. The kind of commitment and statement which have come from the management gives me a lot of credibility, because they have delivered in the last 15 years. They have been delivering, and whatever they commit, the success of the delivery rate is quite high. So considering all that, we have a target price of around 4,050. So I believe they would be able to achieve. And I expect in Q2 also a very decent, double-digit growth, year-on-year growth in the profit. Lastly, the technology segment used to account for almost 50% of the profit, which has come down a lot. So that is positive time like this when IT service sector is going through a lot of stress in terms of revenue growth and profit growth. So net to net, I think it's a very impressive large cap stocks.
Certainly, got that view, and fair point, Mr. Chokalingam. But Osho, would you concur with the view? Do you see that L&T has all it takes on the charts as well to make it to the 4,400 to 4,500 mark?
See, technically, there is a very strong breakout on the multi-month breakout can be seen on the monthly time frame chart of L&T. So I'm expecting that from here onwards, there is very high potential for the counter to test the zone of 42 to 4,300 on a very short-term point of view, because there has been very strong consolidation over a period of nearly 18 months. The counter has been hovered near the zone of 36 to 3,800 on the higher end, and freshly it has started gaining strong traction. So even on the daily time frame chart, there has been very strong rounding formation, and on the monthly time frame chart, there has been multi-month breakout. So I'm having a very bullish view in L&T, and I'm expecting that in a very short-term point of view, 42 to 4,300 will be the immediate target that one can expect in this counter.
Right. Thank you for that view. But let's talk about some of the stocks which are buzzing. This is on the back of earnings. Q2 FY26 earning. Let me start with a company called Huhtamaki India, wherein a good set of numbers, I would say, but the only problem here was the revenue, if you see, is down, but the EBITDA, if you see, EBITDA is up almost 211%, and EBITDA margins, if you see, are at 8.9% versus 2.7% last year. Now, what has led to this sharp increase in EBITDA margin is this was because of the product mix, the change in sales mix, and of course the cost efficiencies that the company has seen, and they're planning to address competitiveness and focus on the long-term growth. Next on the list is Kewal Kiran Clothing. Again, if you see, let's pull up that stock, let's see what that stock is doing. It was down in morning at least. The stock is down, there you go, 2.1%. Now, if you see overall, there was a good growth when it comes to revenue, which was up 14%, which was led by volume expansion and higher realization. But if you see over here, the net profit is down almost 31%. Now, why? Because last year, if you see, the net profit impact was because of the higher other income. And this quarter, that is Q2 FY26, company has seen a lower other income, which has led to, impact in the net profit, and that's why you're seeing the stock is down almost 2%. Last on the list is MRPL. If you see here, the revenue was up, good set of numbers overall. The revenue was up almost 30%. EBITDA margins are at 6.6% versus 1%. So a good uptick when it comes to EBITDA margin, and net profit is at 627 crore versus loss of 271 crore last year. Well, Mr. Chokalingam, let me come to you on that. Out of the three stocks that I mentioned, that is Huhtamaki India, Kewal, Kiran Clothing, and MRPL. Any view that you have on three of them, and your favorite picks among them?
Huhtamaki, in fact, we had a buy recommendation. We closed the call successfully. The biggest problem is that since 2018, Huhtamaki is not able to scale up their revenue. It's almost, they have a December year ending. So if you look at 2024 over 2018 year ending, there's no meaningful growth at all. That's the only major problem. Even now, the quarterly results, if you see, there is no uptick in the sales. It's only because of, as you rightly mentioned, margin improvement. And it can improve further because oil price is down and they use the input all oil derivatives. Maybe very long-term investors can hold it, but then I would rather prefer for some correction before once again, recommending this stock. MRPL one can hold. Only thing is whenever oil price comes down a lot, MRPL, Chennai Petroleum, they have inventory adjustment and unimpressive performance. But then still, in the longer term, from current level, one can make money. Kewal Kiran, I would not recommend. In fact, I am negative on entire textile sector, which cater to both the domestic market and the external market. Because of the pressure on the external market, even on the domestic front, textile industry will face a lot of problem. So I think textile industry would be the most one of the underperforming sectors. So I would avoid anything related to textile, even if it is catering to the consumer-oriented industry.
Understood. Well, Osho, how are charts looking when it comes to, especially Huhtamaki India, because the stock is up almost 15-16%. Should investors, hold the stock, or they should book profit? What are your views?
See, for this counter, there has been some kind of traction that is being seen from the current financial year. Before that, the counter has seen a very drastic plunge from the zone of nearly 440 towards the zone of 160. But looking at the recent development, there is a possibility of further movement in the counter, although the counter is not very liquid in nature, so it will be high risk kind of a zone. But overall, I'm expecting that looking at the technical fronts, near about 300, 320 is the zone that one can expect in the counter in the coming period. But again, that will be high risky trade. And if someone is already holding the position, then only it will be advisable to stay invested in this counter.
Got the view, Osho, but we have seen that the IT space will largely be in focus. Actually, the numbers also flashing for Mastech on the bottom of a screen right now. Revenue is up 2.8%, 940 crores is what the company has done. The EBITDA as well has grown at a decent pace. 97 crore is what they've reported in terms of profits, and largely it's important because this one is largely having a lot of exposure in the UK. So a lot of exposure in the government contracts, specifically in the UK. So a lot of the tariff impact wasn't actually applicable on something like a Mastech, but we'll deep dive into it as well, because the EBIT now flashing also on your bottom on the screen has been a decent performance by the company in this quarter. We'll of course look at the fine print. How has NHS as well as UK government contracts been for the company, but a decent performance at least on the top 2 to 3 numbers that seem to be visible. There you go, 128 crores is what they've done for EBIT on a consolidated basis. We look at the other key factors like constant currency amongst others, 13.6% margins is what they've done. But Infosys as well as Wipro and LTI Mindtree actually are all set to announce their results today in the second quarter. Before we get, what is the key aspect of this results, let's get my colleague Jasmeet on getting some key perspective of what to watch out for from all these 3 companies. Jasmeet, over to you.
Well, Red, thank you for that. In terms of Infosys, let's quickly understand what to watch out for. A good set of numbers, firstly that. Secondly, in terms of CC growth, brokerages are penciling anywhere between 1.8 to 2.2% growth. While we also see this is a seasonally stronger quarter for the company and the deal ramp-ups to add up on the top line. Well, if you look at what will cause the margin to expand would be on the back of the forex tailwinds as well as in terms of operational efficiency. Well, we also see that the comments on with regards to the financial service is something to watch out for. Now, in terms of key numbers, if you look at the revenue is expected to rise by 4% while the EBIT is expected to rise by 6.38%. Margin to see an expansion of roughly 50 basis points while the net profit is expected to rise by 5%. Now, while in this particular company, the guidance is something to watch out for, given that the management has already maintained that guidance and brokerages are penciling in the guidance to be maintained at that level, but some are also of the view that the guidance will be narrowed and the bottom end would be increased. So that's something to watch out for. Now, in terms of deal win, we are expecting a deal win to be between 3 to 4 billion for this particular quarter. Now, next on my list is Wipro. While if you look at the overall Wipro's performance, the guidance is again in focus, given that brokerages are penciling the guidance to change and narrow down for this particular quarter, but that's something to watch out for. Now, in terms of the key things which will be in focus would be the CC growth is expected to be muted for this particular quarter. Now, with regards to the other commentary on the hiring, the AI, as well as on the overall aspect of how the management is ramping up with regards to AI, is something to watch out for. Now, in terms of the margin, this could see some tailwinds from the forex charges, but again, the deal ramp up to hinder the margins as it will involve certain costs. Now, if you look at the overall guidance, currently it states at -1 to +1 for this quarter, but going ahead, we could see how this guidance changes as the management had changed the guidance for Q2 in the previous quarter and given a better guidance. Now, with regards to LTI-Mindtree, we again expect a good set of numbers from the company, as is the revenue seeing an uptick of 4%, while the margins to expand by 64 basis points. Now, in terms of net profit, we see a rise of 2.3%. So, all in all, a mixed set of results for Wipro, but for Infosys and LTI-Mindtree, we expect a positive move.
Got that. Thanks so much for that, Jaspreet. Mr. Chokalingam, just one question on Infosys. The profit estimates seem to be building in a lot of optimism in Q2, over 7,200 crores, and that's also with anticipation of deal wins of over $3 billion. Do you expect that if this number actually comes, the street will view that very positively tomorrow?
Yeah, definitely the street will, take it as a positive one. So among all the large cap stocks, in fact, Infi looks far better than other stocks. But however, last 2-3 years, I have been maintaining consistently one stand that the wealth creation story in the large IT stock is over. And there is no change in my view because, analysts can have a lot of predictions, forecast improvement, but the fact of the day is that all these companies are not likely to break this single digit growth syndrome. They could continue to maintain anywhere from 3 to 5-6% year-on-year growth in terms of dollar revenue, which is not going to change at least for next 4 to 6 quarters. So therefore, these kind of stocks are good for conservative retail investors. Otherwise, it is always better to look out for the sectors which are deriving a lot of revenue from the domestic market rather than IT sector stocks.
Thank you for that view. Few of the stocks are actually in news. This is on the back of order wins. You have the likes of BEL, wherein the company has received order worth rupees 592 crore in October so far. Even you have KC International, wherein they've received almost 1,000 odd crore order in the international transmission and distribution business. The order is for 380 kilowatt substation in Saudi Arabia, and the year-to-date order intake, if I were to talk about, stand at around 16,000 crore, which is up 20% year-on-year. Then we have MTAR, wherein they've received orders worth rupees 67 crore, and the orders received from their existing international customers. So 3 stocks which are in news on the back of order wins. Mr. Chokalingam, any view on BEL, KC International or MTAR?
Among these 3, I would prefer KC International. It has got an excellent track record of securing global order and growing consistently. And the stock price also corrected a lot. Valuation is slightly stretched, but I think it is justified for medium to long-term investors. So therefore, I would prefer or rather recommend only KEC among all these 3 stocks.
Your view, how are charts looking when it comes to, BEL and MTAR?
Firstly, for BEL, then this counter is into a very strong consolidation and having a kind of a bullish outlook on the technical front. The counter have seen a very strong cushion from the zone of breakout levels around the zone of 370, and from there onwards we have seen a very strong bounce also. So I'm expecting that in the coming period, once it breaches the zone of 420 on a decisive manner, then from there onwards we can see some kind of positive traction coming back in the counter. Overall, the trend remains on the positive front. So any dip should be augured well for a buyer, while on the higher end, breakout above 420 can provide a boost towards the zone of 445 to 50 from a very short-term point of view. Now, the other counter, MTAR Tech, has seen a very strong movement in the recent period, and it has already surged towards the resistance level. So I'm expecting that there is possibility of some kind of consolidation around the current levels. 22 to 2250 is a very strong resistance level. So one should wait for a cool off in the counter and then can look for buying opportunity. Although technically this counter is also looking very positive, but one should wait for some kind of cool off or correction in the counter to start accumulating position.
Right. You know, a new company when it comes did its debut on exchanges today, that is Rubicon, with a premium of around 25-26% at least in the start of the day. There you go, the stock is up almost 27%, a good start. You know, when it comes to Rubicon Research. And of course, if you see the reasons behind that, why investors are actually betting when it comes to Rubicon Research, is one is of course a strong generics portfolio that the company has, and they are actually venturing into I would say specialized products through the acquisition that they did. So majorly these are the two reasons why, you know, investors are betting on this company. You know, the issue, if you see, was subscribed 109 times, of course, on the day 3, and this was led by non-institutional investors and retail investors and employee reserve. But onto the SWOT analysis, you know, what are its strengths? If you see, they have strong R&D capabilities, they have good, robust sales and distribution network, and of course, strong track record when it comes to the compliance. But higher revenue contribution. So this company is majorly into US. They provide generics to US. So this is a kind of a good thing also, because you have, when you provide you know, drugs to a regulated market, you have a higher margin. But of course, dependency on US is also one of the weakness that the company has. Of course, intense competition and pricing pressure are some of the other weakness that the company has. But expansion into niche therapeutic areas and geographic diversification are some of the opportunities that Rubicon Research will go through. And but you know, regulatory and litigation risk are some of the threats that the company has. But this is not the only company, you know, Puneet, who saw listing today. You also have Canada Robeco AMC also, which got listed today.
And what was interesting is that, you know, the stock started roughly 6% up. So of course below the kind of strength we saw in Rubicon. But then it has just continued its positive momentum, up 16%, and valuation largely seemed to be in control for this one, because there are other AMC companies listed which were trading at a much higher valuation, but largely 16% up move is what we are seeing on the stock. I just want to highlight a couple of points. It was one of the stocks that saw a healthy subscription largely on day 3, so 9 times what got subscribed. It has AUM of 1 lakh crores. Largely 86% is coming from the equity side. So you will start to see that benefit. So revenue of 400 crores, profits of 200 crores is definitely a very strong profile. But Mr. Chokalingam, let me just come to you for a quick view on Canara Robeco. Because, you know, we have seen that the AMC plays, the capital market plays are back in action. And you had something like a Canara Robeco that came at quite a decent valuation. Do you have a view specifically on the AMC stocks? I know you don't cover IPOs aggressively, but this one was an interesting one. Quite an established brand name, a lot of exposure in the B30 cities. Your view?
Unfortunately, I have not updated myself on this particular AMC, so I am not able to give any view.
Anything on the AMC side that you have any view on? HDFC, AMC amongst others, do you like that space?
Certainly. I mean, you know, the kind of investor base, even last week, over 7.5 lakh new investors have come in. Of course, you know, the flow might moderate into the AMC, but then this is a structural change which is happening. The investor base has grown about 22 crore. You know, it used to be around 5 crore for 140 years, but there's a massive structural change. So definitely one should hold all AMC stocks for the long term. I'm pretty confident that they all would create a significant amount of return if somebody wants to wait for minimum 1 to 2 years.
Got that view, Mr. Chokalingam. You know, since it's a recent listing, I'll spare Osho on this one. But Osho, as well as Mr. Chokalingam, thanks so much for joining in, giving us perspective across a bunch of stock spaces as well as sectors. But, you know, we were speaking about Canara Robeco. We actually had a chance to caught up with Rajneesh Narula. He's the MD and CEO of Canara Robeco AMC. He also said that the road ahead for the company is quite positive. He expects growth of over 20% post-listing as well. Let's listen in to what he had to say about the sunrise sector, which is the AMC one.
Post-listing as well, we expect growth to be upwards of 20%, which is what we always budget for internally whenever we make our plans. And to me, this is a sunrise industry. We believe in the growth story of India and of course of the Indian markets, and we want to participate in those markets. We also want to be a vehicle through which the investors, the broad-based investor community, invest through as well. So to me, it's a great opportunity, and as can be borne from the number of players that are actually coming into the industry, they obviously find the opportunity very good.
Well, viewers, that's all the time we have on this edition of Profit Buzzers. From myself, Varsha, everyone who put the show together, thanks so much for watching. Small Cap Buzzers comes up next.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
A powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushi Vakharia. And before we discuss a whole host of small cap companies which are in fact buzzing in trade today, let's take a quick check in terms of how the markets are doing. So now in terms of the benchmark indices, if we are seeing good momentum is what we are looking at. It's a 0.8% of an uptick that we are seeing markets at the levels of 25,500 in the festive mood as we speak about. In fact, Nifty Bank also we are looking at gains of over 0.8% or odd. So of course in focus also on the back of a couple of banking results. Axis Bank in focus on this particular one. 1% of an upside is currently what we are looking at the day's highest level is what we are seeing. In fact, Axis Bank also seeing gains of over 2%. We did decode as to what's worked and what's not worked for the company. But that's on the banking side that we're seeing. Let's pull up the point contribution table to get a sense in terms of what's working and what's not working in the Nifty 50 pack. So in terms of the point contribution that you'll see a lot of these banking names right at the top. HDFC Bank, ICICI Bank, Kotak Mahindra Bank in focus. While what's not working so well is TCS, Shriram Financial Services, along with that Sun Pharma, which are in red. In fact, if we just look at Nifty 50 also, we have a couple of other earnings also in focus. Nestle reported a robust set of numbers and is in focus on back of that. Focus would be on Eternal as well as it reports its earnings today. Currently for Nestle, we are looking at a 4% of an upside as well. Let me also bring up L&T to see what's happening there. There was a brokerage call from Jefferies wherein they've upped their target, seeing a 16% of an upside from the stock. Currently not doing so much, about 0.6% of 0.8% of an upside is what we are looking at. But in terms of the overall breadth of the market, if you are looking at, let's see the advance decline ratio, we'll see advances outperforming in terms of where the declines are concerned. In fact, we are looking at around 1,500 advances or in comparison with about 858 declines or so. So it's majorly a 2:1 ratio that we are looking at, advances outpacing, and that is what is reflected in the overall broader markets as well. Because if we just look in terms of what's happening with the broader markets, mirroring some bit of those moves from the benchmark indices, Nifty Midcap 150 up over 0.6%, while Small Cap 250 is seeing gains of over 0.3% as well. Let me also pull up BSE 500 to get a sense in terms of the stock-specific action over here. So in terms of BSE 500, right at the top, we have Craftsman Auto, which is up over 6%. Power Industry also, we are looking at around 5% of gains. We are looking at Privy Specialty Chemicals, and that is on the back of Sunidhi, the brokerage house Sunidhi initiating coverage on this particular counter. While what's not working so well is KEI Industry. The stock is in fact 7% down today, and this is despite the overall robust set of numbers that we are looking at. It's essentially on the timelines that they've now given for their capacity expansion plans, which are now delayed to the fourth quarter of FY27 in comparison with the first quarter of FY27. It's what we are looking at. KIOCL, another day of correction that we are looking at, down about 4%, while Hatson Agro and EPL also clocking about 3% of a downtick is what we are looking. But apart from that, a couple of other stocks which just recently reported their numbers. I want to quickly pull up those names as well. Swaraj Engines, Mastech, if we can just see how the stocks are doing, as well as Indian Bank. They just came out with their results in the last half an hour of trade or so. So focus is on those particular counters as well. Mastech, in fact, up about 2%. So that's the overall picture that we are seeing in terms of what's happening with the benchmark indices and what's happening with the broader market indices. But with that, let's shift focus towards the small cap story. And in this one particular counter, which is interesting, is Concord Control Systems. Now, what they've done is they've deepened their partnership with Progota. In fact, they've increased their stake to 46.5% to accelerate Kavach-based deployment. And this is mainly for the Kavach 4.0 rollout that we are looking at. Of course, to discuss more about what this essentially means for the company, and along with that, overall outlook, order book, we are joined in by Mr. Gaurav Lath, the joining managing director of the company. Thank you so much for taking out the time, Gaurav. I just want to start off this conversation by understanding the key rationale behind you increasing the stake in this particular company that we are looking at. About the overall coverage opportunity is also what we are seeing.
Thank you, Anushi. Thank you for having me here. It's a complete pleasure. So at Concord Control Systems, we see Kavach 4.0 as much more than a project. It's a national mission to make Indian Railways amongst the safest in the world. And we have built a lot of in-house capabilities in terms of R&D, manufacturing and system integration. And our decision to increase stake in Progota from 26% to 46.5% is very strategic. Progota is a strong technology partner with deep expertise in railway signaling and automation. And that these are the areas which actually complement our own strengths at Concord. And by increasing our stake, we are just reinforcing our commitment to building an integrated ecosystem for safety and control systems, not just for Indian Railways, but for future global opportunities as well.
So on that, you've recently received a first order for this Kavach 4.0 that we are looking at. This is in focus with Progota that we are seeing. Want to understand the overall opportunity that you're seeing from this particular segment. If you can quantify in terms of revenue, how much will this contribute going forward, let's say in FY26 and FY27?
See, Kavach is a very large long-term deployment. It is overall a demand of more than 78,000 track kilometers and 13,000 plus locos. And currently the demand exceeds the supply, and that's the opportunity we are building for.
If you can just quantify in terms of numbers, what's the kind of growth size that you're looking at from this particular segment?
So the targeted market would be about upwards of 45,000 crores in the next 5 to 6 years. And we see ourselves well positioned to be a relevant player in this ecosystem because of our domain expertise and loco subsystems strength. And we feel that it will significantly contribute in our numbers as well.
Got that. So of this 45,000 crore of opportunity that we are looking at, there are about 5 vendors currently which are approved for this Kavach 4.0 that we are seeing. Just want to understand a couple of aspects. Firstly, how is competition faring out? How are margins, with these more of these Kavach orders coming in? If you can just help the viewers or the investors understand in terms of margin perspective, in terms of revenue potential, what is the size that we are looking forward? We just want to understand your success ratio with these vendors already in place.
So Indian Railways really wants speed and scale in deployment of Kavach, because it is not only a system which has to be deployed, but it is important for the Indian Railways to become safer in terms of travel. And new vendors bring capacity, innovation and competition both. And I think in terms of revenue perspective, the current players plus new players like us will be contributing to the extent of at least 10 to 15 billion rupees in the next couple of years.
Okay, so that's the opportunity that we are seeing. But with that, also want to get a deeper sense in terms of your other segments also. What's the kind of outlook that you're building in there? If you can help us understand the overall domestic business outlook, if you have export business as well, if you can break that down for us.
So our growth story is basically built on 3 key pillars. One is safety, the sustainability and system integration. Kavach happens to be one of the front-running opportunities, and as the rollout expands across the Indian Railway network, it gives us a long-term revenue visibility and a strong order potential. The second is our next generation zero emission locomotives, which we feel is a global opportunity, and as a player we are well positioned to create multiple opportunities in India as well as globally for these zero emission locomotives, which are basically locomotives which are converted from the conventional fueling to alternative fuels which are critical, like hydrogen and battery based. And the third opportunity which contributes to our is our revenues and bottom line is we are a trusted supplier for loco subsystems. From all the electronics which are used into a locomotive, we are one of the key suppliers for that, and that will give us stability as well as recurring business base. So together with these 3 verticals, we feel that both the top line as well as the margin expansion will happen from times to come.
Gaurav, just on that, what is interesting is the 40 to 50% of a projection that you have in terms of top line growth for the next 3 to 5 years. Firstly, want to understand the key growth driver of these segments that you've spoken about. And with this growth guidance in place, also want to understand where does the current order book stand at?
See, the growth drivers have basically played out from our inorganic growths of acquisitions. Last year, Concord acquired a company called Advanced Rail Systems, where we are making all these loco electronics and subsystems. That has contributed significantly in our growth, and today we would have an order book of upwards of 250 plus crores, which is to be delivered in the next 15 to 18 months. And that gives us a stable growth trajectory to conservatively meet our targets and projections.
Very interesting. What I'm also seeing is in terms of margins, you've guided for a 22 to 25% range. Last year, your margins stood at about 23%, but from 21 to 23, we've seen about margins in the range of 13 to 16%. So what has particularly led to this kind of an uptick? Is it the acquisitions that you were speaking about earlier? And what would be the drivers going forward?
So we are pivoting as a company which is not only a product supplier to Indian Railways, but more of a research-backed, R&D driven railway innovation company. And with that in mind, the more use of technology brings high value, high margin opportunities. And as you keep innovating products, the margin profile improves as a whole.
Lastly, Gaurav, just want to understand your overall Capex plans for FY26, and even if you can give us a longer term picture in 2-3 years, what's the kind of Capex that you're looking forward to?
See, as a company, we are always looking for strategic opportunities, and we are always exploring partnerships, investments that can strengthen our core focus on railway safety, signaling, and creating a smart mobility solution. And our approach with all of this is to bring scale. And once you are focused on scale, at times there is a certain requirement of inorganic acquisitions, mergers, and with all of this you certainly require Capex from time to time.
Right, and what would that number be?
Anushi, very difficult to give it a number, but I think we're always ready to grab opportunities, and since we are currently part of some really important projects of Indian Railways, we feel that we will keep deploying as and where we require to grow, because see, when you talk about Kavach also, or DPWCS, which is again one of key technologies which we are rolling out in the entire country, you are basically not only making a project being executed, you're basically making Indian Railways safer and move with speed. And for all of that, we have to increase our current capacities and build on that. So we are really looking forward to do that in near future.
Okay, well, Gaurav, we'll leave it at that. Thank you so much for joining and sharing that outlook on Concord Control Systems. Kavach 4.0, of course, an important development for the country is what we are looking at. So that's with regards to the recent update on this particular counter. But with that, let me also welcome in our guest for today, Mahesh Oja, market expert, joins us to talk to us about various of these small cap companies that we'll be discussing. Mahesh, I just want to start off this conversation now. We're looking at our 40 to 50% of a CAGR growth as per the management. This is with a margin guidance of 25%. While there were concerns in terms of slower offtake in terms of Kavach 4.0 orders, we've recently seen a couple of companies being eligible for the same and recording the same. Just want to understand your overall view on this counter, or if you have any alternate picks in the railway space that are also working in this Kavach space that we're looking at.
Definitely the sector opportunity, a lot of opportunity in sector. So I think there is a lot of opportunity in Kavach 4 and as well as for Concord. But education is the matter in the particular segment. So I think in a longer term, if anyone looking for a longer term, the longer term outlook could be a positive. But from my perspective, education will be matter. So we have to wait and watch type of strategies. But yes, in longer term, I think sector outlook is positive as well as Concord. From this sector perspective, HBL, we have already HBL we are looking. So HBL is still, if any downside in HBL, then they can look on the same.
Okay, well, that's with regards to Concord Control Systems and other covered stocks that are on the radar. But let's talk about a couple of earnings in the small cap space which are reacting positively. And right at the top, we have Huhtamaki India. We are looking at strong set of numbers. Varsha joins us to discuss what's happening.
For that, so yes, good set of numbers when it comes to margins. Although the revenue, in terms of revenue, company did see decrease in revenue of 4%, but the margin uptick that you're seeing was led by cost efficiencies and the change in the sales mix that the company has seen, and also they plan to, address competitiveness and focus on the long-term growth. On to the four numbers, revenue was down 4%, EBITDA was up 211%. Good uptick in margins, which is at 8.9% versus 2.7% last year. Well, this company offers a wide range of packing portfolio as well. Now, next on the list is Kewal Kiran Clothing, wherein this stock, if you see, is under pressure. This is on the back of Q2 numbers, because if you see, though there was a good growth in revenue, this was led by volume volume expansion, and of course the sales realization that the company has seen. But the lower other income has actually impacted net profit for the company. So revenue was up 14%, while margins were flat at 20%, and net profit was down 31% because of that lower other income. On to the Vision 2028 that the company has, they want to increase their sales to almost 1,500 crore in FY28 versus 1,000 crores in FY25, with 17 to 18% of operating margin, and they're also targeting 900 exclusive brand outlets. Just to add about this company is into branded ready-made garments and the finished accessories that the company has. So overall, because of the lower other income, which has impacted net profit for the company, and that's the reason we are seeing pressure in the stock.
Okay, thanks for that, Varsha. So we are looking at one positive set while the other is not doing so well. In fact, Kewal Kiran, if you are looking at, it's down 3%. But let me go across to Mahesh. Mahesh, your view on both of these stocks?
I think Huhtamaki is looking good, and if you are looking from a longer term prospect, I think 320, 325 level could be coming 1 year horizon. Yes, the stock is giving breakout type of pattern. So I think this stock can be looked out for a 1 year horizon. If you're looking, 320 plus level could become easily after many days the stock has run. So definitely we can see some more upside answer. From KKCL perspective, I think if any downside nearby 490, 510 could be ideally a buying opportunity from a target of 575, 580 range. But yes, the numbers are not so good, so we have to wait for buying level. I think 490, 510 range could be a buying opportunity.
Okay, so that's with regards to both of these counters. But Mahesh, a couple of just earnings that have quickly come out. Shah Metallics is there, wherein they've just, South Indian Bank is one counter which is in focus. Along with that, even Indian Bank, they just reported their results. Have you had the chance to look at any of these banking names and any counters that you like?
See, in banking, I think Bank of Maharashtra could be a better placed, and I think Bank of Maharashtra has a lot of opportunity for upside. From South Indian Bank, yes, any dip towards 30.50 range, then they can look on the same. From Bank of Maharashtra perspective, I think 25-30% can high in 1 year horizon. So Bank of Maharashtra could be a good pick from a 1 year horizon. And if you're looking from a South Indian bank, then 30 to 30.50 range could be ideally good buying opportunity.
Okay, thanks for that. So now let's talk about Bharat Seeds. Now this counter has been buzzing since the last few trading sessions. In fact, if you just look at the 1 month move, the stock is up over 45% in trade today. What's happening with this counter? Puneet joins us with more details.
Well, thank you for that. It's definitely been one of the major counters to watch out for. Largely operates, as you rightly said, in the seating space. So for one of these auto ancillary companies, and all of them have started to get that benefit now. Now it is a joint venture, and Maruti Suzuki actually has a 5% stake also in the company. So there is where the positive aspect lies, with getting that consistent order inflow from a lot of these players like Maruti Suzuki amongst others. Now there was a product range where you speak about from the two-wheeler space all the way up into the four-wheeler space is what it operates in. Almost 95 to 96% of the company's revenue comes from that space, so that is a key benefit for the company. Now stock has been of course reacting very positively, up almost 9.6%. It is also an indirect beneficiary of the GST rate cuts. So amongst the seats, they also manufacture a lot of interior products, and they've started to have some exposure to the railways, but continues to have two-wheelers and four-wheelers as one of the major revenue growth drivers. Now the key aspect is that this will get a benefit, as I rightly mentioned, of the GST rate cuts. It is expected to see that over the last 3 years the revenue CAGR has been at almost 16% for the company. What could be that going forward will be the other part, but it has also been boosted by a 40% CAGR at this point of time in terms of profit. So as the revenue has grown, so has the utilization, and that subsequent operating leverage benefit has come in for Bharat Seas. So that's largely on the product profile as well as what the company has grown in terms of the financial indirect benefit of the GST rate cuts. But how does the H2 pans out? That'll be something to watch out for.
Okay, well, thank you so much for that, Puneet. Mahesh, coming to you. So as Puneet was speaking about a 40% plus of a PAT CAGR growth that we can be seeing. Along with that, there's tailwinds in terms of the GST rate cuts as well. What do you make of this company? Is there a positive view in place?
Yes, definitely. We have already suggested many times in lower level policy. From these level perspective, I think 275, 280 range could come easily. Still looking from a positive side. I think any dip towards 210, 190 range could be ideally buying opportunity if you're looking from a new fresh buying opportunity. Yes, definitely they can hold for 275, 285 range. I think still outlook is positive. I think we may see some more upside range in the basket.
Okay, well, so that's for Bharat Seats. Target being 275 to 285 is what Mahesh was suggesting. But let's talk about Ramco Systems now. The stock, if you look at, is up more than 5% in trade today. Even the 1 month return has been particularly strong for this counter. Jasmeet joins us with more on this update.
Well, right, thank you for that. Let's quickly understand the stock performance over 6 months and 1 year. If you look at the 6 months value, it's nearly 52%, while over last 1 year, it's up nearly 40-odd%. If you talk about the recent news, company had recently backed an order with Workday Global Payroll Connect. What this would help to come to deliver a multi-country model across the globe. Now, well, how would this benefit the company specifically would be a faster implementation and lower marginal cost, while it would also help them to reduce the considerable governance and unify the overall system of them. You talk about what does the company do? Well, company operates in the ERP software solution space, and they provide operations across customized ERPs, global payrolls, and MBO applications. Now, in terms of key financials, the FY25 revenue was standing at 591 odd crores versus 526 crore in the previous year with season uptick. In terms of margin, we see the margins were negative in last year, and this year we saw an uptick of 13% of them. It will be interesting to watch out how the Q2 pans out for the company going forward.
That Jasmeet. Mahesh, your view on the stock?
See, the stock has done a lot of from last few months. So I think any cool down nearby 550, 540 range, that could be ideally good buying opportunity. But yes, if you are holding, then I think 650, 660 range could come easily in near term. So outlook is still positive, and we have seen a lot of positive news in counter. So we are still positive on the same. But yes, if you are looking a fresh buy, then wait for some cool down. If any cool down nearby 550, 540 range could be ideally good buying opportunity.
A quick question. Now we also have Eternal's earnings which will be slated later today. Want to get your quick view on this counter?
I think Eternal can post good number, and we are optimistic for some more upside in Eternal.
So if numbers are coming good as per our expected number can become good, I think 365 to 370 range could become in near term. Outlook overall, we are seeing outlook positive for eternal, and if you're holding from a longer term perspective, I think 420, 425 range could also become. But yes, from number perspective, I think margin expansion could come in eternal.
Well, thank you so much for that, Mahesh, and thanks for discussing all those small cap stocks which are buzzing in trade today. But that's all the time that we had on this edition of Small Cap Buzzers. Stay tuned. India Market Close coming up next.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
She is a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She is a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility.
watching India Market Close here at NDTV Profit. I am Mahima Vachrajani. With me is Sharad Dubey and Hiral Dadia. Well, let's take a quick look as to how the markets are doing. And of course, festive greetings to all the viewers out there and to your families as well. The festivities are being celebrated by the markets as well. The Nifty 50 at its day's high point, up 0.8% and has crossed the 25,500 levels after July 10th. The last when we saw Nifty crossing the 25,500 level was on 10th of July in 2025, and it's been 3.5 months now since we'd not seen that mark on the Nifty, but today it has crossed that level. Nifty Bank also at its 2 months high, up 1%, well above that 57,300 levels. Let's try to pull up the heat map and see as to what are the counters that are actually contributing to this gain, largely led by two consumption names. Your Nestle on the back of strong earnings, better than expected earnings, up 3.6%, followed by Titan seeing gains of about 2.5%, probably ahead of Dhanteras. A lot of these counters could see gains. Kotak Mahindra Bank up 2%, Tata Consumer up 2% as well. So banking name and consumption names, fairly doing well. Axis Bank also doing well on the back of its earnings, but some counters that are facing pressure. Eternal has turned into the red ahead of its earnings, down 1%. HDFC Life also down 2%. SBI Life and Shriram Finance are some of the counters which are down 0.7% each. Infosys, TCS down as well. Infosys also ahead of its earnings. Let's try to pull up the sectoral heat map and see as to what the sectors are doing. Green across the board for sure. Nifty Realty, second day of great gains on the entire index, up 1.7%, followed by Nifty FMCG, largely pulled up by the heavyweight that is Nestle. Consumer durables also up 1.5%. Nifty Autos also up 1.5%. Private bank is where the actual gains in the bank Nifty is coming in from, up 1.3%. Overall, I think the lower gains are being seen on Nifty Pharma, Nifty PSU banks and Nifty IT, but it's good to see that green across the board. Let's try to pull up the advanced decline ratio because that will give us an overall sentiment of how the broader markets are doing. Well, the gap has slightly narrowed, but still in the favor of the bulls. There's 1,500 odd advances versus that of 872 odd declines. So largely in that 2:1 ratio, but still, Sharad, in the favors of bull. And that's what the broader markets are also indicating.
Right, Mahima, but do remember that benchmark indices are actually performing better than the broader indices, and that's why you're seeing that ratio 2:1, that advanced decline ratio coming in. But Nifty small cap and Nifty mid cap indices, both of them, you see there has been a correction happening. Nifty small cap has been actually coming down from the day's high itself, but still up in the green. Not to panic, and over the last two trading sessions, if you look at it, there has been a significant up move coming in the broader indices as well. But will this sustain in the closing session? That's the question to be asked for. But there are certain stocks which should be in focus. Our KEI Industries stock is down almost 6 odd %. Of course, our numbers were there, but numbers were largely in line to mixed set of numbers. But the valuations, that is a street concern which the street is showing. But BLS International Services, another strong up move coming in, stock up almost 14% after they're getting a new order from Ministry of External Affairs. And also EV segment, we have Ola Electric and Ather Energy, both of the stocks doing really well, both of the stocks jumping. Ola Electric is stuck in upper circuit of 5% and Ather Energy also at 7%, and we have an exclusive profit intelligence which we'll be getting it. Now let's move on to our guest. Kush Bora is joining us. He's the founder of kushbora.com. Good afternoon, Kush. And Diwali celebrations are continuing for the markets. And I would like to push, this Nifty and Nifty Bank, both of them, they look technically sound, trading out the key moving averages. What would be your view right now?
Hey, hi, Sharad. First of all, very good afternoon to you. Yes, of course, there's like a rocket that has been just shot across the Nifty and Bank Nifty candles, right? So yes, big moves, good moves, very interesting ones. In fact, if you pull out, the Nifty index chart for the last 4 months, you'll see that the June high that was made and then subsequently the one that was made in September, there was a falling trendline resistance that's actually been broken now. That came at about 25,400. We did briefly mention that yesterday also. Yes, that's the one. So now I think the market is looking at an uptrend and having conquered 25,500, which was the level that we discussed yesterday. I think 25,800 and 26,000 very much in play. However, not to spoil the party, but just to set a word of caution in. the PCR, the put call ratio for Nifty is at 1.42, which is substantially higher than the overheated territories of 1.3. So my suggestion now, yes, this momentum could continue. You're also starting to see FIIs turn net buyers in cash segment, although for a very small quantity, but it's it's buying and that's better than the selling figure, right? So yes, continue to be long on Nifty, but on declines. I would be comfortable going fresh long on Nifty around 25,350, 25,400 levels. The star of the show continues to remain Bank Nifty. It started off a little, a little slow in the morning compared to the Nifty, but then now it's catching on and how, right? So it's once again overtaken Nifty in terms of the percentage gains. All-time highs not too far off. I think you could see that perhaps tomorrow if this rally sustains, or if not tomorrow, then in the coming days. I think you should continue to remain more bullish on Bank Nifty. Any decline towards 56,900, 56,800, that gap that was created this morning, in the opening, should be taken as an opportunity to go long. Just a last word. I think it's the expiry effect also that we keep missing out often, right? Thursdays are expiry for Sensex, and that is perhaps what you're seeing play out in the market today. So buy on declines on the index.
Buys on decline would be there for both the indices, and interestingly, private banks do remember a lot of important earnings are coming in this week as well. And of course, Axis Bank, we saw numbers coming in, street cheering those numbers, and that effect actually is also going to the other private banks as well. Kush, quickly, what would be your quicks? What would be your picks?
Sure, both of them on the long side. The first one is Paytm, has had a good run, continues to impress on the upside. 1300, 1325 are your targets. 1250 is where you place that stop loss. The other one is Granule, something that we iterated or rather discussed yesterday as well. Had a brief up move yesterday, now consolidating with a positive bias. So for levels of 580 and 590 with a stop loss around the 560 mark, Granules still remains a long.
Those are the picks that Kush has on his radar today. But moving on to the stock of the day, we were actually thinking as to, from the pool of stocks that are buzzing today, what could be the stock of the day? And arguably, I think the stock that deserves this title should be Nestle today, because the kind of moves that we saw post its earnings are quite significant. And it has held that kind of gains since the announcement of its earnings. Why is that? Of course, key highlights. Revenue and EBITDA has beaten the street estimates, and that's something the street has liked. Plus, the company has come out and said, that it's largely driven by volumes, and that's something that the street is liking. Margins, of course, have taken a slight hit, and this could be on the back of GST rate rationalization impact that this quarter will have, and of course, inflation in cocoa, coffee, as well as palm oil prices. This has been the highest ever quarter in terms of domestic sales, and so that is also something which the street has probably liked, and domestic sales grew at a double-digit rate led by volumes. Like I mentioned earlier, 3 out of 4 product groups posted a double-digit volume growth for the counter. Now, if you take a look at the numbers, revenue saw an uptick of 10.5% versus an expectation of around 5%. EBITDA was expected to be flat, but has seen a growth of almost 6%. Margins have come down to around 22% versus that of 22.9%. And net profit has been down around 23.7%, but the expectation was that it will come down at around 29%, and that has not happened. So that's also something that the street has liked. Of course, there was an exceptional gain of around 91 crore on slump sale of 2 businesses in the previous quarter last year, and that also had an overall impact on the net profit in Q2 FY25 numbers. Now, in terms of segmental performance, overall KitKat has seen a good growth. In fact, confectionery item as a segment as a whole has seen a good double-digit growth, where Munch and Milky Bar grew at high double digits. In terms of where beverages stand, that was your powdered and liquid beverages, that also saw high double-digit growth. In terms of milk and nutrition products, again, a mixed performance there, but where the out-of-home consumption business is concerned, a double-digit growth was seen here as well. Exports also witnessed a high double-digit growth. Moving on in terms of where management commentary is concerned with regards to where GST, they've said they're working closely, very closely with the partners, that is the retailers, wholesalers and distributors, to implement GST as soon as possible, the GST rate rationalization as soon as possible. And in terms of commodity outlook, they mentioned that milk prices are expected to soften after festive season, so that will have a positive impact on the margins. And overall, in terms of where brokerages are concerned, CLSA has said the strong result with better than expected profitability is what they saw. Good surprise on the top line is something that Morgan Stanley has come out and said, and of course they've maintained their stance overall on the counter. So this is with regards to where Q2 numbers of Nestle are concerned and how they've fared. Kush, I'll quickly come to you on this one. Last quarter, when Nestle had come out with its earnings and commentary, the stock did nosedive, and this was because of the pressure on the margins. But this time, it surprised the street and has seen an uptick of around 3.5% and held that kind of gains. Your view now with regards to where charts are concerned?
Yeah, surprised and how. I think, this is a very good move. 1245, 1250, that was the zone that the stock had a very, very tough time crossing for the last about, a good part of 6 months. Today, it's comfortably above that. In fact, if I just dial the clock back a little and look at the September 24 highs, that fall when it started, in fact, for the entire market, but Nestle in particular, the retracement 61.8, which is technically a very important retracement level, that itself comes at 1250, 1255, that zone for Nestle, and today it's above that as well. So yes, in this kind of an uptick, it's taken out very important couple of technical resistance levels. Now, all we need to see if it indeed, can hold on to these gains for the last hour or a little more than an hour and close above the 1250 mark. If that happens, I think the trend could turn and the stock could, continue its up move closer to the 1300, 1335 mark. But this would also, provide a tailwind and a positive boost for some of the other names in the sector, namely Britannia and Tata Consumer. These are the two stocks that I have a keen eye on. Any kind of a push in this sector, and these two would also become buys from a positional standpoint. So Nestle, yes, very good moves. 1250 to watch on the closing level.
Okay. Kush, with regards to where some of these names are concerned, if you can pull up the BSE 500 and see as to what are these counters, that are actually kind of contributing the gain towards, the broader end of spectrum. You have your Apar Industries, which is up 6.5%. You also have something like Privi Specialty Chemicals, which is, of course, on the back of a brokerage note as well. You also have something like a Craftsman Auto, which is also seeing good gains. Overall Realty on the back of its earnings. Any of these counters where you think that now that the momentum is there, it is here to stay and you can make a fresh entry probably?
So I'll stick to the first two that you mentioned, which is previous specialty. Now, the reason being that, today what you're seeing is a breakout above that 2650 mark. But the journey started some time ago, which is end of August. The stock has been an outlier in the sense that, it hasn't really corrected, in a big way with the markets all the way from 2200 odd levels up until, this 2650, 2700 mark. It's been a rank outperformer. I think this momentum in previous specialty on account of relative strength as well could well continue. So if you had a position, you could hold, but if you didn't, you could still enter for levels of 2800 and 2900, 2600, 2625. That zone will now start acting as a stop loss. Very interested by the moves that Apar Industries is making. The stock has a tendency of gaining big, for a few sessions and then cooling off. Today could be one of those sessions, but I would hold my horses before I buy. 89.75. That's the level that I would look for. If in this up move that level is taken out, it's some distance away, but if that is taken out and if it closes above that, then you could be looking at a 1 month high and the near-term supply zone will be taken out. So Apar Industries, I'll have a keen eye on, but buy above 89.75. Privi, you could continue to hold or even add a fresh.
Well, yes, important development coming in for Privi Specialty, and of course the flavor fragrance theme, that is something to watch out for. They are commanding high margin and high premiums in the industry as well. Thanks, Kush. But let's go on to Manoj Kumar Dubey. He's joining us. He's the chairman and MD for IRFC. The company has come out with its numbers also. They largely look mixed, prima facie. Good afternoon, Manoj ji. So first of all, festive season's greetings to you and your entire company. I would like to just ask about the numbers over here. The net profit has jumped almost 10% on a year-on-year basis, but if you look at the net interest income and even the total income, that's on the lower side. Mixed set of numbers coming in. What would be the reason for this?
So, good afternoon, Sharath. Thank you for the good things that you spoke about and the queries also. So, the good things. We came out with very good numbers in terms of our PAT, which is nearly 10% above what we did last year.
This is consecutive to what we did in Q1 also, where our PAT grew in double digit. Our NIM has also grown from 1.4%, which we had last year, now it is around 1.55%. The one thing that you mentioned, which is quite visible about our revenue, so let me put the reasons for that. It is more of a technical than about the business. We have our assets from Indian Railways, where for the projects we have got 5-year moratorium. So once the moratorium period ends, we enter into an agreement, and then the revenue is recognized as per the accounting principles of Ind AS. This year, for 1 year, since the projects were not completed, so this moratorium has been extended by a year. So that has shown some impact on my revenue recognition. So it is more of technical nature, and that is why you see that our PAT has grew up in terms of double digit, more than 10%. So interest portion has been recognized, but the revenue recognition is not shown in the accounting things. Going forward, when next year we sign this agreement also, along with the next year's agreement of projects where the moratorium is ending, we will find that in Q1 and FY27, the revenues will also be showing very good growth. So that's the answer for that question.
Okay, Mr. Dubey, hi. Mahima also joining in the conversation. You mentioned that your NIMs have also expanded to that 1.55% mark. Just want to get a sense as to how is this metric evolving for you, because borrowing costs going forward is going to ease, considering the potential rate cuts that will also come in and that have already happened. What is your view with regards to where NIMs are concerned?
So Mahima, we spoke after Q1 with you. And the same story is going forward. So you see, we are on diversification mode within the railway ecosystem, that we call it typically IRFC 2.0, where from a single client model of railways, we are now diversifying into the whole railway ecosystem. So what we have really achieved now, last time I talked about we were going to achieve, now we have already achieved, is what we are finding that the margins that we are getting in the railway ecosystem is nearly 2x to 3x than what we used to get in the railways, where it was a cost plus model and we were only getting fixed 40 bips for rolling stock and only 35 bips for projects. Here the margin is, because we were used to work in a very low NIM kind of thing in cost plus model, so we are finding ourselves in a very good position where my NIM is improving, and this improvement, more and more this diversified assets will be added to my asset under management. You will find that every quarter onwards our NIM will be improving, and that will have a very positive impact on my PAT also. That is why we have given the guidance now for the PAT also, that we would like to grow on year-to-year basis in double digit for our PAT.
Okay, Mr. Dubey, the other aspect is, in the first half of FY26, your sanctions stood at around 45,000 crores, if I'm not wrong. And the guidance for full year is around 60,000 crores. Do you think that now is the time where you would probably revise your guidance, because you've already reached that 45,000 mark?
So you see, once you deliver more, the asking is more. So
yes.
This is how my team laments to me, that since we have delivered so good in first half, then since the TV is asking for better numbers, you are talking about better numbers. Yes, on serious notes, we are very happy where we are today after the end of Q2 and H1. The response from the government's ecosystem, where there is a linkage with the railways, is too good. For the fact that we are offering something which is very competitive for the government sector, which was not earlier being offered. Our low overhead cost is absolutely giving us a lot of legroom to deliver something for the government arena. And going forward, as morning shows the days, if we have done 45,000 crore of sanction estimate signed between the two parties by the end of H1, I'm sure that the team is going to beat the guidance that I have given as the CEO for 60,000 crore. Going forward, yes, I think this story of going up and up so far as pipeline is concerned will be seen in the company for next 3 to 5 years clearly.
So Dubey, is there a number, internal number in place beyond that 60,000? Because you said you'll beat that guidance. The team will beat that guidance.
Absolutely, absolutely. I mean, with the numbers that we have now after H1, this guidance will be surely beaten. Where we land up, let's see. I'm sure it is going to land up more than that. Yeah. But I'm not going to put any more numbers now, having given a number in the beginning. And Q3, when we meet, maybe that we'll be quite ahead of what numbers we have given, then we'll have a review.
Well, yes, Manojji, one more question I have is, of course, by Q3, this number looks like this can be beaten for FY26 if you just go at these current levels. But you had spoken about looking for business outside the Indian Railways. Now, basically, the investor community thinks this is a proxy. Railway financing company, railways, the way railways goes. But now let's break it down into the segments, which are the high margins. You have spoken earlier with Mahima also, that increasing NIMs was something which your focus is on. But which are the particular segments where your financing has actually jumped up? If you could just elaborate more on that.
Sure. So it is all in public domain. If you have followed us on the exchanges, you see, majorly we have funded to the power sector because now, Indian Railway is completely electrified. So the demand and consumption of electricity on renewable sector as well as on the thermal sector is quite high. So wherever there is a linkage with the supply of the electricity to the railways, we have played a role. NTPC was our first client in thermal as well as renewable. We have done more than 14,000 crore with them. Then selective Gencos who are very good in their balance sheet size. There also we have won the bid in Chhattisgarh, in Haryana, in Maharashtra. We went for the bidding and won the bid. Apart from that, we are having forage in ports also. And railway ecosystem, many SPVs are operating. Earlier, we never went to fund these SPVs. Now we have taken a kind of mission mode where we are refinancing the high-cost loans of the SPVs that where railways PSUs are one of the main promoters. Like we did in Angul Sukinda in Orissa, where Concor and RBNL, two of my siblings, are the promoters. There we refinance them at a cheaper rate. But for us, it is very attractive because from 40 bips that we used to work for the railways, it is quite higher than that. We have done one for Bharat Bijli Nigam, where NTPC and railways are the joint promoters. There is something with DFC, Direct Freight Corridor, is on very advanced stage, where a World Bank loan we are trying to refinance. This is also in pipeline. And there are many more other SPVs of the railways where either we have funded or we are on the pipeline. So these are the whole gamut where we are having a look. We are also having a look on multimodal logistic parks. There is queries and we are looking into those assets also. So as I mentioned, anything which is having a forward, backward linkages with the railways and any supply to the railways they are doing, in the government parlance right now, we are giving them the opportunity to join us for our lending, and for them it is the borrowing. And what I emphasize is that in the competitive bidding in the government sectors also, we found that we are making 2 to 3x of what margins we used to get in the railways. And that is the whole positive things and sweet spot for this company going forward, doing business in the government ecosystem, having linkages with the railways also, but the pie is very big for the fact that Capex in the country is nearly 70% is handled by government sector itself. And that is our clientele. So I believe that the way we are getting the queries, there is no dearth of business going ahead.
Right, Mr. Dubey, one last question for you. You've guided for, correct me if I'm wrong here, a 5 lakh crore AUM by FY27 is what you're aiming at. What will be the levers and segments where this AUM growth will be coming in from? Because you said that you're diversifying more into Indian Railways infrastructure as well, and adjacencies of railways as well, and they are high margin levels as well. So two things: what will be the levers that will cause that 5 lakh, that will lead to that 5 lakh crore AUM? And then how will the margin expansion take place, let's say 2 years down the line?
So that's a good question, and the answer to this is, if you are following our asset under management, we were having a dip in the last 2 years for the fact that there was no disbursement at all to the railways. Now that we have diversified, this quarter we have changed the traction and now it is showing upward movement in terms of asset under management. And the way we are signing the agreements, we are pretty sure that going forward, every quarter you will find increase in our asset under management. Now the target of 5 lakh crore, today we are at 4.62 lakh crore. Going ahead, within a couple of years, we believe that we'll be nearing somewhere around 5 lakh crore. Regarding the NIM and the PAT, yes, all these businesses which are coming for diversification, as I mentioned repeatedly, that the margins are 2x to 3x, sometimes 3.5x also. And whatever business in the future will come from the railways, that will come on the cost plus basis where 40 bips margin will be there. Taking two into together, we are looking forward to 50,000 to 80,000 crore of diversified businesses every year. That's the kind of pipeline we are expecting. So this pipeline will give me a margin of, as I mentioned, a high margin. And whatever businesses in the future is coming from the railways, there the margin will be fixed of 35 and 40 bips. Taking two together, we are very hopeful and confident that the NIM will be growing steadily up. Maybe taking all together will be somewhere between 1.6 to 1.7 very soon.
Thank you very much, Manoj ji, for sharing the plans going ahead for the company. And of course, the numbers are also doing really well and almost trying to beat their guidances if you look at on a half-yearly basis. Thank you very much and season's greetings for you. Of course, looking at the stock, the management is bullish for IRFC, especially if you look at the guidance going ahead and the AUM numbers, but stock not doing much in the day's trade. It's actually corrected from day's high levels, but in a small range, trading around 120 to 125 marks. So IRFC is something which we would be looking out for going ahead. But Hyundai India is getting up for an aggressive product mix with 26 new models in its pipeline across the segment as a part of its long-term India strategy. So we'll be actually focusing in this, and the company will also introduce its Genesis luxury brand by 2027, marking a bold push into the premium space. My colleague Paneet spoke to Tarun Garg, who will be the first Indian CEO to head the Hyundai Motor India. Listen in.
I think there's just a sense of energy, which you have been showing since listing. I think post the first couple of quarters, even in your conference calls, there's been that energy, and always something that you mentioned, the Indianization of Hyundai in India. That's been one of the focal points, right?
Absolutely, because of course we were always Indian. If you see the kind of models we have launched, it's not always that in fact okay, there was a model doing well in Korea, let's bring that. No, I think the idea was always to bring India specific models, so that is a part of Indianness. Of course, localization, if you see the vendors, today our localization stands at 82%. So in our campaign, Shah Rukh Khan being our brand ambassador now for what, 27 years, again reiterates that fact. Of course, more and more expansion now with the Pune plant coming in. So you can see that Indianness was always there, but the IPO was like the icing on the cake. Yeah. And today, like you heard, that more localization, more new models, 26 launches, 7 new nameplates, cleaner fuels, 8 hybrids, 6 CNGs, 5 EVs,
go on and on. But let me just start with a couple of key aspects of what you just mentioned. One is that you've actually come out and told the street about a revenue as well as margin guidance. I think it's the first time that an Indian automaker is doing that. You're roughly at around 69,000 crores last year. You want to go to 1 lakh crore by FY30. Will that be led by new model launches, as well as where's the confidence coming from to come out and say that in your first year since listing?
Look, frankly speaking, we have always grown in India, and the volume, selling close to 600,000 in the domestic market, and of course exporting as well. So the confidence is always there. If you see the launch plan, 26 model launches, 7 new nameplates, blah, blah, blah. So 7% CAGR is what we are looking at in terms of volume, which should give us, this kind of a 1 lakh plus, 1 lakh crore plus revenue. We have always believed in quality of sales, a balance between volume and profit. Now that we are listed, I think this is our responsibility towards the shareholders. So very, very important aspect of thing. In terms of technology, we have access to all the technology which HMC has. So you can see that there are, otherwise the OEMs are either inclined towards CNG or electric or hybrid, but here is one company, Hyundai, who has announced that we are going to be in all kinds of cleaner technologies. In fact, more than 50% of our sales would come from the cleaner fuels in fiscal 30.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
A powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown.
Welcome back to India Market Close, and interestingly, we are seeing the markets have actually done well, holding that 25,450 to 500 mark as well, Nifty. But to actually get in more details is joining us. We are having Nirav Asher. Good afternoon, Nirav. Markets are looking strong over the last two trading session as well. And of course, the private banking names, they are in news right now. Axis Bank came out with its numbers. The street was surprised with their numbers. So I'd like to just start with that itself. You know, the private banking space. Are you seeing more value here? Will we see some more up moves coming in? What are the important fundamental triggers, you know, you should be looking at, especially in the private banking space, since Axis Bank is out this weekend also will be very busy?
Good afternoon and thank you for the invite. As you rightly pointed out, I think a private sector banking space is a space which is being watched very, very keenly at this point of time. And I think if one were to look at Axis Bank numbers, then I think on the face of it, there was a provisioning of 1,231 crores, which is an exceptional event, one-time provisioning which has been induced by Reserve Bank of India. So if one were to remove that, then I think it's been a very strong set of numbers. From a valuation perspective, Axis Bank is looking quite strong any which ways. It trades at just about a price to book value of 2.2 times and a PE multiple of around 12 times. So I think valuation wise, it is looking quite attractive at this point of time. At the same time, we've seen some good momentum in Kotak Mahindra Bank also. There the valuations are looking a bit stiff, but still on the road to recovery.
Okay, all right. So that's with regards to where some of these banking names are concerned. But, you know, it's time to put the spotlight on top 3 newsmakers of the day. Jasmeet joins us with a whole list. Jasmeet, I think BLS International and Ola Electric is probably there on your list. What else does make to your list?
Thank you for that. Starting off with Ola Electric. While the stock is buzzing on the back of a product launch, company enters into battery storage service systems while the company launches Ola Shakti. While this particular object is priced at 30,000 rupees per piece as an introductory price, and this will be used to store the energy in the market going forward. This is the first step for the company entering towards the storage space, where the company also says that India has enough energy to manufacture, but in terms of storage, we are still lacking. While the second one on my list is BLS International. If you look at the company gets an order for 3 years to establish visa centers across China. The order is from an MEA, and this will boost companies' visa presence in other countries. Currently, company has over 70 plus presence in over 70 plus countries at the moment. While the next one is Jindal Stainless Steels. While the company signs a $150 million pact with Harsova Environmental, and this one will double the slag and capacity in advancing the circular way. So these three stocks are buzzing in trade today.
Thank you so much for bringing us those details. Nirav, I'll quickly come to you on all of these three counters, each, because Ola Electric, of course, on the back of the product launch. BLS International is an interesting one because it nosedived, earlier this week, and that was because of MEA barring them from entering into Indian missions for the next 2 years. Any new contracts, in fact, in the next 2 years. And Jindal Stainless is another counter which is also seeing good gains on the back of that partnership. Your view on all of these three counters?
Well, I think Ola Electric was beaten down very badly, and the stock has nosedived to around 50 rupee levels. And now I think they have entered into the storage business. And it's a very big market, 1 lakh crore market, BESS, battery, energy and storage systems. So I think there should be some relief as far as Ola Electric is concerned at this point of time. But having said that, the quality control issues are definitely there, which need to be addressed at any point of time. And at the same time, Ola Electric has slipped to the number 4 position. So I think market share gains also is something which they have to focus on. So it's a long road ahead as far as Ola Electric is concerned.
Interesting view coming. Yeah. Yes. Nirav, interesting view coming for Ola Electric. But there is another player also, the peer Ather Energy, recently listed. Kush, I would like to take your view on the technicals. Of course, the stock is actually outperforming Ola, but Ola itself is in a 5% circuit. But Ather Energy, look at that stock. They are maintaining the day's high level. Stock is up 7% and has almost doubled from its IPO pricing as well. And recently in September, they did actually outplace Ola when it comes to sales. Ather Energy, how does it look? If I'm a shareholder in Ather Energy, would there be a good option to actually take some profit off the table?
In fact, Sharad, I would suggest continue to hold because, despite the kind of run-up that the stocks had in the last 4 sessions alone, from 600 to about 685 right now, the overheating is not really visible because it's coming, on the back of some profit booking along the way. Volumes also fairly high right now. So I think you could continue to hold. When the momentum is so strong, rather than booking out profits early, I usually suggest a trailing stop loss strategy. And that's exactly what I'm going to do here. 665 is a good level. If you have a position, continue to hold with a trailing stop loss around the 665 mark. And there's no choice between Ola and Ather Energy, because if you see since inception, if the team could place that chart side by side, you know how both these stocks have performed. So Ather Energy stands out, and you should continue to hold with a trailing stop loss around the 665 mark.
All right. Okay. So that's with regards to where both these names are concerned, that is Ola and Ather. But moving on, some of the stocks that are buzzing in trade on the back of Q2 earnings are Indian Bank, Borosil Realty, as well as Quick Heal. And Vansh joins us with all the details as to why these counters are buzzing. Vansh?
Well, thank you for that, Mahima. So firstly, let me start off with Indian Bank. The company has reported this set of numbers. Now the numbers are slightly stronger. The asset quality has improved and the provisions has also declined on a year-on-year basis as well. If you look at the numbers, the net interest income is up by 5.8%. The net profit is up by 11%, and the provisions are also up by 7% on a sequential basis. However, the provisions are down by 33% on a YY basis as well. Also, if you look at the asset quality, the gross NPAs have inched down sequentially at 2.6% versus 3%, and the net NPAs have also inched down at 0.16% versus 0.18% as well. Moving on to the Borosil Realty, now again a strong set of numbers. Booking value for Q2 FY26 stood at about 1299 odd crores, which is down by 10%. The booking value for the first half of FY26 is 2900 odd crores, and the operating cash flows for the company stood at 645 odd crores, and the net debt to equity of the company stood at 0.02x as well. If we talk about the results, the revenue was up 34.8%, the EBITDA was up by 25%, and the net profit was also up by 29%. Lastly, if we talk about quickly, a stronger set of numbers, the revenues, we saw a revenue uptick and the profit turned positive after 2 quarters. The growth was largely seen in the retail business, and the international revenues contributed to the growth in Southeast Asia and the Middle East as well. Also, if we talk about the government business, the momentum there is picking it. There is a pickup in the momentum. The enterprise business continues to see the share of cloud services, which has increased as well. Lastly, if you look at the financials, the revenue is up by 45%, and the EBITDA stood at 5.94 crores versus a loss of 12.69 crores as well. If you talk about the margins, it stand at about 7%, and there was a net profit of 7.91 crores versus a loss of 5.51 crores as well. So clearly, strong numbers on all the fronts for Quick Heal as well.
Vansh, thank you so much for bringing us those details, and strong moves coming in on all of these counters. Nirav, your quick view on Oberoi Realty and anything that you're liking in that real estate space. Sharad did a very interesting piece yesterday where, traction is back in the entire space, and we've seen 2 straight days of gains, almost around 3%, if I'm not wrong. Anything in that space that you're liking fundamentally? Most of them have also come out with their Q2 business update as well.
I think in the realty space, we continue to like Godrej Properties and DLF, and we also like Ajmera Realty and Marathon Gen Next. And I think very strong set of numbers, stellar numbers coming in from Oberoi Realty. Very strong brand proposition, a very strong execution of the projects, and a strong balance sheet, a deleveraged balance sheet with substantial cash reserves. So I think should continue to do well. Oberoi Realty.
Well, yes, Oberoi Realty is the pick from Nirav, and today in our show also at KYC we had discussed Marathon Nextgen Realty, which Nirav has also spoken about. Kush, anything you are looking in a realty space where you see the risk-reward ratio is still favorable? This is just 2 days of gains which we are talking about. Yesterday also we had spoken about it. But then if you look this entire year itself, Nifty Realty Index is still down by almost 10% this year itself. So is there more value to it? And if there is, which are the stocks we should be focusing on?
Absolutely. So when you talk about risk-reward ratio, Sharad, I think there is still some upside to be had in an Oberoi Realty, even a Lodha for that matter, because a lot of these names are starting to rebound, with these bottom formation structures in place, volumes also ticking, moving higher in the last couple of sessions. So yes, this pack could outperform in the next couple of quarters. Does it mean an immediate momentum? I'm afraid not, because they now stand up against some of the key resistance levels, and it could take some effort to cross that. But yes, from a risk-reward standpoint, Lodha and Oberoi stand out. The only one that has good momentum, has done well, and we've spoken about it yesterday as well, as Phoenix Mills. Almost about 5-6 sessions of gains, 6th one today, if it closes in the positive. What a run this one is having, and despite all of that, the volumes keep inching higher every day. So yes, if you have a position, continue to hold. If not, I think 725, 750 levels very much on the cards, just because of the momentum that Phoenix Mills has.
Okay, all right. So that's with regards to where technicals are concerned for all of these real estate names. But on to our bull versus bear segment today. We are putting spotlight on KEI Industries. The stock, try to pull that up, is down almost 6% in trade today. And to help you understand as to what's gone wrong and what's working for the company, we're joined by Puneet, who tracks this counter very closely, telling us as to what the bull versus bear case looks like for KEI Industries.
Well, thank you for that. It's definitely a stock under pressure despite quite positive results in this particular quarter, but that's largely based off a news flow and a key update regarding its capex plans that it gives. Now, when you look at the first bear case, and that largely expands that the phase 2 of its Sanand expansion has now been delayed to Q4 of FY27 versus Q1 earlier. And that's one of the key reasons. It was expected to have the high margin EHV segment, which is going to be boosting the growth next year. That has gone down by almost 3 quarters now, and will possibly have a larger impact going into next year's margins. But this quarter, there has been a sustained performance by this particular segment. It's up 83% on a YY basis in terms of revenue, and hence that's the first bull case. But largely the Sanand phase 2 expansion getting delayed by almost 9 months is a key focal point on the stock today. When you look at the second bull and bear case, we've seen the Phase 1 also, which was expected to come this year in November, has now been delayed by 4 months as well, but that's expected to have a smaller impact compared to the Phase 2 delayment. But Q2 was a very strong quarter for the company, 21% growth in revenue, 31% growth in profits. So definitely a beat in terms of numbers. Just got caught in this particular news flow, and that's why the stock's down almost 6%. When you look at the third bull and bear case, we have mentioned that the cables and wire export has been growing exponentially. 425 crores in terms of the export for this segment. It's up almost 117% on a YY basis. But what the company actually did was use a lot of its domestic capacity or its capacity for the export market. They've promised that once the phase 1 of Sanand starts, the domestic growth will also start to show growth, but that'll be something to watch out for. And finally, in terms of valuations, stock currently trades at 45 times price to earnings for FY26. It does bake in a lot of positives, and now because of the delayment in plant for Sanand, we are seeing the negative reaction. But when you look at the other aspect, it trades largely in line with peers, but Polycab has been outperforming in terms of growth. So that'll be the other aspect to watch. Investors preferring any one particular player. Someone like RR Kabel, we saw strong reaction post Q4 and Q1, could be another value play in the cables and wires segment. So that's largely the bull and bear case. It's going to be a choice that investors will have to make, that the high margin EHV segment will be delayed for some time, at least in terms of an exponential growth. But KEI does have a very strong parentage and a historical advantage as well.
Thank you very much, Puneet, giving us the entire 360-degree view when it comes to KEI Industries. But of course, KEI Industries, there is RR Cable as well as Polycab, cable wire players. They're expecting this quarter itself to be actually a stronger quarter based on the infra demands, which is actually picking up, and the cable wire players. Actually, on the number side, they have actually done well. Let's just pull up stocks, Polycab and even RR Cable. All of these stocks are in the red. Of course, some rub-off effect coming in, but RR Cable on the other hand is on the green side. Kush, on technical charts, out of these three names, any cable wire player, anything you're liking?
Surprisingly, it is KEI Industries. I mean, we did have a call on this some time ago, targets were hit. But now what's happened is that, with this kind of a cash, the risk-reward ratio on KEI Industries becomes extremely favorable. And in fact, if you see, the stock has a tendency of hitting the 50-day moving average and then rebounding. And lo and behold, if you see the low that the stock has made today, it is pinpoint precisely or very close to the 50-day moving average again, and you're already seeing some sort of an uptick from those low points of the day. So yes, while the uptick may not be a V-shaped kind of a recovery, but with this kind of a fall and the stock taking support and already seeing some sort of a rebound from a positional standpoint in terms of risk-reward ratio, I think I would still go with KEI Industries. The other names that you mentioned, RR Kabel, Polycab, they're still consolidating. This one has a good traction. I think this news perhaps will be digested by the market in coming days. So I would keep a stop loss at the 39.75 mark and enter the stock for higher levels of about 4,300 and 4,450.
Okay. All right. So that's the technical view with regards to where KEI Industries is concerned. But Nirav, your quick view on the entire cables and wires space, and what would your preferred pick be?
Well, I think this KEI is a classic case of valuations having been stretched to the limits. And I think a minor hitch definitely has created some problem on the valuation front. But I think likely to rebound soon. And the surprise gainer in today's market is APAR Industries, which is also up very smartly in trade. So I think this could also be one potential beneficiary going forward of the opportunities which are likely to emerge. But apart from this, I think Polycab is also looking quite exciting in trade.
Interesting pick. APAR Industries also coming in the cable wire segment, but there are also interesting stocks which are being carried out by our research team. Some of these stocks that are buzzing in trade today are Share India Securities, Worldview Renewable. Varsha joins in with more details.
Well, I'm going to talk about two stocks, starting with Share India Securities, where the stock has seen an intraday high of almost 20%, wherein the company has approved 50 crore of NCDs issue on private placement basis. Next on the list is Worldview Renewables. If you see, stock touch intraday high of almost 11%. the volumes are traded at 7x of its 30-day average. Now, the news over here is that company has received an order of solar power project which is of 156 crore, and the order is from leading renewable energy company, and the project is scheduled to be completed in the financial year 26-27. So overall, these two stocks are actually buzzing on the back of news as of today.
Well, thanks a lot, Varsha, for bringing these stocks in focus. Nirav, I have a question for Waaree Renewables. Lately, the stock has been in the news flow with a lot of orders coming in, and of course, there was a correction around 3 to 4 months ago in this entire pack. But now, slowly, we are seeing some consolidation, and then sudden up moves are coming in the counters. Fundamentally, do you think these stocks, they'll be able to actually justify the valuations going ahead? Because there's a lot of order book announcements coming in, but the cash flows, the actual numbers, they have yet to come in this industry. So what's your view on that, Nirav?
Yeah, I think some time back there was a slowdown in the ordering momentum in execution. Overall, there was a slowdown. So I think at least that momentum, the ordering momentum has picked up. The orders are being rolled out, and execution also is picking up pace. So while this journey will be full of twists and turns, but still I think believe that the valuations are looking quite rich or stretched at this point of time.
All right, Kush, your quick view on Waaree Renewables. What are the charts indicating?
I think it's a little overstretched from a near-term perspective, and this is not for the faint-hearted. If you see the last 6 days move, the smallest move that it's made is 2%, and the biggest one is today about 12.5%. So yes, it is fairly volatile. If you have a position, the near-term trend is bullish. You could continue to hold with a trailing stop loss around 1200, but I wouldn't suggest a fresh entry at the current levels.
Okay. All right. So the other counter, that has been in focus today, in fact, was one of the contenders of for stock of the day as well as Axis Bank, because the expectation was that the stock could see some pressure, but it's zoomed in trade. I think the street is liking the numbers, to shed some more light as to what has happened this quarter and why the uptick in stock. We have my colleague Vishwanath Nair joining in to give us more details as to how Q2 has fared for an Axis Bank.
So the second quarter at Axis Bank has actually been a lukewarm sort of a quarter for the private sector lender. So what we've seen in terms of the numbers, the primary thing that doesn't work is, of course, the net profit falling about 26%, and this is largely because of higher provisioning that has happened during this quarter. During the quarter, RBI had identified as part of its FY25 inspection, had found out that certain crop loans were being extended by the bank in products that were already discontinued. So the bank has had to make about 1,231 crore worth of additional provisions, standard asset provisions, against loans granted within those products, because of which, of course, the net profitability has come down. The other issues that persist during this quarter is that while the asset quality numbers have shown an improvement, the slippages during the quarter, the gross slippages during the quarter, have trended higher compared to what was there last year. And another point that does not work for Axis Bank is the fact that the Q1 issues, the technical impact that the bank had described in the first quarter, the impact of that does not seem to have been limited to the first quarter and has continued in the second quarter. Now, what does work for the bank is, of course, the net interest margin. That at 3.73% is holding strong. Yes, it is a little bit lower than Q1. However, in the current macroeconomic environment, a 3.73% net interest margin is a good number. Similarly, on the loan growth front, the bank is seeing 20% growth in corporate lending, and that is, of course, showing that the bank is going to push very hard on growth going ahead. Apart from that, the bank is also guiding that the asset quality on the unsecured retail has actually improved. So therefore, the bank is pushing harder on credit card dispersals, credit card distribution, as well as personal loan dispersals. So those things are going to come in handy as the bank charts for growth.
All right, so that's with regards to where Axis Bank stand, but eternal earnings flashing on your screen right there, fresh. The revenue has seen a crazy uptick. I think from a 4,800 crores to a 13,500 crores is where the revenue number has come in. There you go, 8,650. The estimate was that it will grow at around 8,665 odd crores, but it's nearly double of that estimate. Let's try to pull up the EBITDA numbers as well and the net profit as numbers as well and margins. EBITDA has come in at 239 crores versus that of 235 crores of estimates. So largely EBITDA in line with what the street was expecting. The net profit has come in at 65 crores. So that's something that the street will probably not appreciate because it's down. The expectations were to come in at 107 crores, and this is largely probably because of their expansion of dark stores. EBITDA up 5.8%. The stock though is recovering and how? Up 0.5%. It did slip in red, now in the green, and this is probably on the back of the top line growth that Eternal has seen, which is way beyond what the street was expecting. It's interesting to watch the recovery in the counter. I'll try to take this quickly with Nirav. Nirav, it's just come out, I understand, but any quick view on Eternal that you are seeing? I mean, we've seen a sharp recovery in the counter, and the top line has definitely beaten the street estimates.
Well, I think as far as the consumption story is concerned, markets would like to look at the top line growth and would like to be a little liberal as far as the optical profitability PAT levels are concerned. So I think the market would be enthused by the jump in the top line. The revenue growth has been quite encouraging. So I think markets would definitely give it a thumbs up. That's my take at this point of time.
With regards to the segments also, if you take a look, the food delivery, we've talked about this, has remained stagnant in the past few quarters as well. This time also it's grown at around 2,400 odd crores versus 2,000 crores earlier. So slight uptick in terms of the food delivery segment, but overall, if you take a look at the Hyperpure numbers, that has come down a tad bit on a consolidated level basis. It was around 1,400 crores in Q2 FY25, which has come at around 1,023 odd crores in FY26, but quick commerce has seen a sharp jump, and that is where the boost in top line is coming in from 1,156 crores to a 9,891 crores in the quick commerce space. The going out business, however, has slightly inched up from a 154 crores to a 189 crores, and this includes your district business as well. But overall, I think the beat is largely driven by Blinkit, and that's been the case so far for Eternal earnings for the past few quarters as well. Kush, your quick view. The recovery in the counter is, quite visible and significant. 1.5% is the gains that has come in now in the quarter, and this is in the last few seconds or just a minute is what we are seeing. Your view quickly on the charts?
Yeah, and if you didn't tell me the results were out, I would have said it's more of a continuation of the trend that's been going on for Eternal.
Yeah.
Very solid medium-term structure. I think this could well push the stock to 375, 390 odd levels, perhaps even closer to 400. That's the kind of momentum it is in if you have continued to hold. Fresh position I wouldn't advise because it's coming closer to overheated territories. So buy on dips, but if you have a position, you could well continue to hold Eternal for targets of 390 and 400 levels.
All right, so that's the view coming in on the entire Eternal. Of course, we'll try to, get an overall view as well with regards to where, the Eternal numbers go. Now, seeing gains for 2.4%, the stock is definitely zooming in trade. And largely, of course, this is on the back of the kind of top line beat that has come in. But of course, the interesting thing to watch out would be as to how the dark store edition has come in. But yeah, I think we'll take that up with the analyst himself, Sandeep Abange, who is the lead research analyst, consumer at Midcaps LKP Securities, joining us now. Sandeep, hi, a very good afternoon to you, and thank you so much for joining us. Your first take on Eternal numbers.
Yes, thank you so much for having me. Prima facie, the numbers look great. And we have seen good amount of beat in the top line, and we will have to watch out on further commentary. But overall, prima facie on the revenue growth part and also on the EBITDA as well as on the PAT front, the company the numbers look good, and we will be watching out on commentary on usually on the dark stores and also on the GOV and NOV growth, how it has been in this quarter. So yeah, the prima facie numbers look great.
Deep, I think the two reasons as to why we've seen that downtick in terms of profit and versus the expectation, of course, first one being depreciation, and this could be on account of higher addition of dark stores. Of course, that commentary will be awaited and we'll know once the shareholders letter is out. The second one being employee benefit expenses have inched up quite a bit. Your quick view with regards to how you are viewing these costs, because they have been inching up quite a bit. Depreciation I can understand, but employee benefit costs going up. Any rationale with regards to this counter?
On the employee benefit front, it's mainly the expansion of dark stores. And also on the hiring of overall new people in their team. So on the employee expenses, majorly we were expecting somewhere around a 20-30% jump, but the overall jump has been quite high. So we will get more clarity from the management in the con call on this part. But yeah, the overall PAT, the stress on the PAT was majorly on the high depreciating cost, which was mainly, like you alluded, due to the dark stores and expansion in the dark stores. And also their ad expenses have also gone up significantly. So that also has been one of the reasons.
Sandeep, even the going out business is something where losses have been incurred this quarter. I mean, it was sitting on profits of around 18 crore Q2 FY25, but this year there's a loss of 57 crores. So I believe this is where now they've started to burn cash. Is that understanding correct?
Yeah, see, going out business is still, once we have seen the Paytm acquisition, so these numbers have been added. And that has majorly played a role in terms of the overall decline in the PAT. So overall, the going out business is still in that experiment stage, and they are still experimenting newer cities and adding new cities on a quarter-on-quarter basis. So we believe that this is a very long-term business. And overall, the main focus should be on the quick commerce as well as on the food delivery. Going out, they have been experimenting a lot lately. So hopefully, things should pan out well on the long-term side on the going out business.
Okay. All right, Sandeep, thank you so much for bringing us those details. Of course, we have to wait and watch out for the commentary coming in the shareholders letter as well as in the con call. Thank you so much for taking out the time. We're also joined by Sunny Agarwal, the head of fundamental equity research at SBI Cap Securities, joining us now. Sunny, hi, a very good afternoon to you, and thank you so much for joining in. Your first take on eternal numbers.
Yeah, good afternoon. And I think again on top line, it seems a bit as far as eternal is concerned, especially on quick commerce side. So I think the numbers are slightly ahead of estimate. And in terms of on the operating expense side, so we have seen a Q-on-Q uptick in our employee expense. Again, that may be because of the expansion which the company has taken or has alluded to on the quick commerce side, and the same is the case with an advertisement and promotion expense. So I think the company seems to have spending a lot more money to promote its quick commerce as well as the food delivery business. So there also we have seen a significant uptick as far as expenses on ad and sales promotion is concerned. So below the EBITDA, we have seen again an increase in depreciation and finance cost. That may be partly due to the dark store expansion as well as because of increase in rental expense, which is now because of Ind AS 116. That also forms a part of finance cost and depreciation expense. So I think overall, increase in expenses likely because of the store expansion which the company has undertaken and have alluded to also during the earlier analyst call. in terms of profitability or store level or per customer level data, we need to wait for shareholders later.
Yes, Sunny. One more question is there. Of course, the stock, you just look at it, the stock is going nosediving again from its day's high levels. We saw a sharp recovery coming in after the numbers were out, but Mahima is actually giving us the details in some time for the shareholders letter which will be coming out. But Sunny, let's look at the details. Of course, the prima facie, the revenue pad, these numbers have actually beaten the estimates. But if you look at it, are there any internals which might be a concern for the street? Because we are seeing the stock is actually falling. It's down almost 1% now at the 350 levels. Sunny, what are the important concerns which could be there if you look at the internals, or what could be going wrong for the company or a concern?
Again, I think one of the important parameter which the street will be looking forward to will be the path to profitability or ramp up in margins on especially on a quick commerce side. So we have seen the company going very aggressive on Capex front as far as quick commerce business is concerned. So I think it seems to be playing out well, at least from getting more GMV, which is more sales because of this store expansion. But at the same time, the company need to ensure that operating leverage is something which should start kicking in post this expansion, which can lead to an better margins on quick commerce side, because ultimately the quick commerce has become pretty large in overall revenue share, and that is a business where it will look forward to in terms of contributing to the profitability. So I think the path to profitability on a quick commerce side is something which it will be looking forward to.
Okay, all right. So that's with regards to where internal is concerned. Sunny, thank you so much for taking out the time and speaking with us at NDTV Profit. In fact, the shareholders letter has come out and a few takeaways that are noteworthy and probably why the stock is now tanking in trade. Where they have come out and said that overall EBITDA, adjusted EBITDA loss was at 5 crore in this quarter versus that of 18 crores earlier. But I think the main key takeaway is that transition to inventory owned model is still at 80%. Which is not come in at 100% yet, and probably one of the reasons as to why there's possibility of that pain in the counter. Food delivery growth rate has bottomed out, and there is recovery path is something that they've said. The guidance with regards to where dark stores is concerned, they have revised to that 2,100 mark. That means that probably, the company will still face challenges with regards to where profitability is concerned, and margins will remain under pressure on account of Capex going up, and that is probably that's something that the street is not liked. In terms of the overall commentary coming in, otherwise, of course, Blinkit has achieved the highest ever revenue growth in terms of the last 10 quarters. Quick commerce losses have shrunk 4% QOQ basis, and food delivery growth rate has bottomed out, as mentioned earlier as well. Hyperpure restaurant business is expected to become profitable in the next 2 quarters is what they are saying. The company is defending GST demands on delivery charges amounting to 441 crores. That is also something that they've come out and said in their shareholders letter. So of course we'll give you a detailed link of what they're saying in their shareholders letter in some time, but it's time to slip into a very short break. But on the other side, we'll get you top buy today, sell tomorrow calls, so do stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility.
Welcome back to India Market Close, and you're watching NDTV Profit. And right now we'll be joined by Amardev Singh, Senior Vice President of Research at Angel One. Good afternoon, Amar. Season's greetings to you as well. Of course, before we ask you about the market, the stock which is buzzing in trade, that is Eternal. Of course, the numbers came in, numbers were beating street estimates, but the shareholders' letter came. Now, of course, there are some internals which the street is not liking, especially on the costing front, on the path to profitability. The unit economics might be questioned as well. But I just want to take a quick view on the technical charts for Eternal as well. What are the key important levels to watch out for? I assume the medium-term basis, the levels are still decent for Eternal.
Yeah, I would say that you are right. Actually, if you look at the trend, the stock has delivered very strong returns from almost 200 levels to currently around 350 odd. So clearly, the rally has been very sharp. So the correction, if there is a correction, that's definitely a healthy sign. I would say the stock on the downside has some sort of support coming around the 320 odd level. So that's a level of support where you could witness some sort of buying. And overall, if I look at the momentum on the charts, on the long-term charts, as well as on the intermediate-term trend, that's clearly positive. So I would say on correction, it can be a buying opportunity. But yes, on the upside, the levels currently, say 350, 360, now that's going to act as a zone of resistance for the stock in the short term.
Okay, so buy on dip strategy would be there for Eternal, as the chart suggestions are actually still positive for the company as well. This is a call coming in from Amar. Amar, also I'd like to ask you about your technical picks. Which are the important picks which you would be actually focusing on? Which shares are your picks here today?
Yeah, so the first one is Bharat Forge. So if you look at Bharat Forge, what we are seeing here is that the stock has been in for consolidation. A significant rally was there, and then a significant correction also towards the 1,000 levels the stock had corrected. And now we are seeing some sort of consolidation and an up move. And also what we're seeing there on the charts is that the volumes have been significant. On specific days, it has been extremely high. So that really shows that there's some buying interest which is coming in the stock. So this is the first stock one can look at Bharat Forge buying at the current levels or towards 1270 levels for an upside target of 1375 and a stop loss of 1213. And the second stock that one can look at is United Spirits. This is again one stock I would say has corrected significantly, has formed a very strong support level on the long-term charts. It's definitely in consolidation zone if you look at. So the stock is tied between the current levels. So if you look at 1300 being a strong support zone, and on the upside towards 1360 is a resistance zone. So the stock sustaining about 1360, 1365, the stock could witness a sharp move towards 1463 levels. So that could be the target for a stop loss of 1297.
Okay, all right. So those are United Spirits and Bharat Forge are the two counters that Amar has on his radar. But, as we speak, Eternal is nosediving again. It did see an uptick of 2% and now down 3%. So interesting moves coming there. I think probably the two things that Street has not liked, and as Sharad was pointing out, that the shareholder letter has said that the food delivery segment has not recovered to the extent that they were expecting it to be. And secondly, I think they have raised their guidance of dark store to that 2,100 mark, which was earlier 2,000. So 100 more dark stores to be added by the end of this year. That will require, more capex, more cash burning, and at the same time will put pressure on EBITDA as well as your profitability. So the path to profitability not being clear is something that the Street probably is not liking. And plus, we've also seen quite a significant run up in this counter in the past couple of days. And considering valuations were never cheap for this counter, now that kind of pressure is coming in on the counter, now down 4% as we speak, Sharad. So yes, quite an interesting move out there.
It's a very topsy-turvy.
Yeah.
Initially, it went up from days low, almost 3% up, and again 4%. Such a volatile counter.
Yeah, such a volatile counter just within a matter of seconds. But moving on, it's time to put spotlight on some small cap buzzers, and Anushi joins us with a whole list. Anushi?
Right, so a couple of stocks that you should be watching out for, and this is on basis of results also that we are seeing. Right at the top we have Hyundai India in focus. Now it is buzzing on the back of its second quarter results. Now if you see the volumes of this particular counter, 66 times the kind of volumes that we are seeing compared to its 30-day average, and this is with an overall intraday high of 17% that the stock is marked. Now what's happened here is that if you just look at the numbers, the margins have expanded to 9% as compared to just 3% a year ago. Net profit also saw about more than a 200% plus growth, while revenue saw about a 4% of a downtick. So what's leading to these kind of margin expansion that we are looking at? Sales mix change in that is something that has aided this profitability along with cost efficiencies as well. Also the company's plans to address competition going forward is something that they'll be focusing on their margin trajectory with. Coming to the second counter in focus is Kewal Kiran. Now here what's happened is the volumes are up over 2 times, while the stock did see an intraday low of around 6%. Again, the peg remains the same. It's the second quarter results in focus here. Revenue, while that was up around 5%, margins have come down sharply to the levels of 2% as compared to 21% that we saw. Even a net profit saw about a 31% of a downtick. Now, while revenue growth was led by volume expansion, lower other income did lead to that profit hit that we are looking at. Coming to another interesting counter is Bharat Seats now. Now, this stock is up over 45% in the last 30 days period if we look at. What the company essentially does, it's a joint venture of Suzuki Motor Corporation that we are looking at, Maruti Suzuki India as well. It manufactures seating system, that is what we are seeing. It manufactures interior component of automotive and surface transport is what we are looking at. The stock up over 10% in trade currently is what we are seeing. Ramco Systems is the last stock in focus. Now here the stock is marked an intraday high of around 9% as well. What we are looking at is that over the 1 1-year period also the stock has seen strong gains of over 40% or also. Recently, if we see, the company is certified with Workday Global Payroll contract as well, and this is to deliver multi-country payroll for global enterprises is what we are seeing. Of course, this would benefit in terms of where the lower integration costs are concerned. Along with that, even it aligns with low code configurability for the company as well. So these are a couple of counters in the small cap space that should be on your radar.
Thank you so much for bringing us those details. Amar, any of these counters on your list with regards to where charts are concerned, any of these looking attractive to you?
So if I look at stocks, Ramco is one stock is looking somewhat positive. Ramco Systems, it has had a major breakout. So if you look at the stock on the charts, so the stock was earlier unable to breach the 560 levels or so. So it's trading above that level, and the stock has a potential to rally. So if you look at the stock has a potential to rally above 600. It could rally towards the 750 levels or so. And the structure of the stock is very strong on the long term, and some of the technical indicators from an intermediate term are also very strong and bullish. So this is one stock one can definitely keep a close watch on. As far as support for the stock is concerned, the stock has got very strong support coming around the 520, 530 levels.
Okay, all right. So that's with regards to where some of these counters are concerned. But moving on to previous specialty chemicals. Now, Sunidhi has initiated a coverage on this counter with a buying price of 3040 as a target. Varsha joins us with more details as to what makes them bullish on this counter and what are the targets and what justifies this kind of target for the counter.
Well, 21% of upside potential is what we are talking about. Now, this company is into aroma specialty with 20% of global market share when it comes to top their 20 products. Now, let's see why Sunidhi has has initiated a buy coverage on the stock, because one is that they're expanding the capacity from 48,000 metric tons to 54,000 metric tons by December 2025 to meet the global demand, and 250 crore to 300 crore of Capex has been aligned. Now, this is with respect to high margin products, which will of course improve their margin and will lead to growth. Also, if you see, their JV is expected to boost margins for the company and deepen their global FMCG client relationship, and they're targeting 5,000 crores of revenue and 1,000 crores of EBITDA in next 4 to 5 years. In fact, Sunidhi is actually expecting revenue, EBITDA and PAT CAGR of around 23%, 22% and 28% respectively from FY25 to FY28. So backward integration, strong financials and global partnership are some of the reasons why Sunidhi has actually initiated coverage on the same.
Varsha, thank you so much for bringing us those details. Amar, your BTST calls for today, what would you go ahead and buy today?
Yeah, I would say one stock that looks good to me is from the FMCG space, and that is Marico. What we are seeing in Marico is that the stock was in for consolidation, and today the stock is witnessing some sharp up move, and the good part is that the stock is taking out a crucial zone of resistance there, which was around 720 odd levels. As far as if I look at the intermediate term trend, there the stock is moving from the oversold territory. So this is one stock one can look at buying at the current levels with an upside target of 756 with a stop loss of 703.
Well, interesting BTST picks coming in, but let's move on to our special segment, Profit Intelligence, and we are talking about two important stocks, Ola Electric and Ather Energy. What is the reasons driving behind these stocks, and importantly, which stock is faring better when we pit against both of these giants in the electric two-wheeler space? They are riding high. Ather Energy has hit its record high levels for the fourth straight day of gains, and Ola Electric, that stock is also locked in an upper circuit of 5% as they have launched their BESS solution, that is the Battery energy storage solution. That's the buzzword coming in the entire EV space. But why is the street bullish on the two-wheeler EV segments? Of the BS's theme, they are gaining traction. DI is buying and seeing and across the counter. That's what I'm hearing from the broking houses, and also a domestic mutual fund investor is also actively buying. There's a path to profitability. That's where the improvement in unit economics is what the street is looking like. But let's look at why the street is more bullish on Ather Energy. Today itself, the market cap of Ather Energy has crossed Ola Electric's market cap, and we had taken it during the day. Interestingly, the September sales, that's the first month you look at it where Ather Energy has surpassed the sales for Ola Electric. These are the numbers, and of course when these numbers change, the market share also changes. And we could understand that overall the sales for the September month, they have changed the market share. If you look at it, that Ather Energy has come at roughly 17%, while Ola Electric, that stands at 13%. There's a big decline coming in if you compare it on a year-on-year basis. Also interestingly, from the IPO price, the journey is very different for both the stocks. Ather Energy, it's doubled, while for Ola Electric, the IPO price was at 76. Still, it's recovering, but still down 34% and path to profitability or profitability. Right now, both of them are in losses. Ola Electric coming in at 2,276 crores for FY25, while Ather Energy stands at 812 odd crore rupees. So you see the entire two-wheeler EV space, which are only focused on this, is buzzing in trade also. And of course, Amardev, I would like to just take your view as well. Technically, which are these two stocks? Which one is much more better?
So if I look at Ather Energy first, definitely it's been on a roll. It's been a multi-bagger, and the stock has rallied post it breached the 350 levels. If I look at some of the technical parameters, continues to be very strong. We've seen some significant volumes also there in this particular stock. And if I look at the other stock, Ola Electric, which you've talked about, so what's happening here is that the stock did rally towards the 74, 75 odd levels and 71 levels, and from there it corrected, and again it's witnessing a bounce back. So if you ask me, as far as the trend is concerned, I would say Ather is anytime stronger as compared to Ola Electric on the charts.
Right, so that's with regards to where Ola Electric is concerned. But I would really like to circle back to Eternal, because it's just very interesting as to how the moves on this counter has come in, and there's a lot of commentary that's coming in from the shareholder letter, which is kind of causing the pressure on the counter. They've come out and said that multiple headwinds, including soft discretionary consumption impact of quick commerce growth, is something which is volatile, and this will weigh on near-term growth. The food delivery growth also is something that they've talked about and have said that on account of this, it is going to slower down going ahead. Hyperpure, of course, they've said that in the next 2 quarters they will be making it profitable, but Hyperpure's non-restaurant business is something that they're going to clearly shut down. Plus, I think there's also a caveat here, which is that the overall impact of the inventory change model is not accounted for this quarter. That is something which probably the street has not liked, and which is why that sharp reversal is what we saw in the counter. So just to give viewers a perspective as to what happened with Zomato in the past few minutes. But quickly, if we can try to pull up some of the names that have been doing well in trade, and in fact, if we can try to pull up the BSE 500, we talked about the counters that did well, but counters which continue to remain under pressure. And if we can try to again pull up the BSE 500, there you go. We talked about KEI Industries, which, something that's faced pressure includes counters like KIOCL, Tata Investment, as well as some counters like Max Financial, Eternal in that list, a Nifty 50 company in that list. But Amar, I'll quickly come to you for something like a KIOCL and Tata Investments. Both of these counters have seen a run-up, but have also come down, right? Quite significantly. Profit booking seen there. Your quick view on the charts?
I would say Tata Investments definitely. Overall, the trend is positive, but we are seeing some sort of consolidation. It is strongly supported around the 880 levels, 80 levels. From there, we could witness some pullback, but it seems that the recent rally which has been there has hit a top. So I would say it's more of a consolidation, but buying on dips is what is recommended.
Nirav, one last quick view on Axis Bank. We couldn't take that view because Eternal's earnings came out, but quickly, your view on the earnings?
Well, I think it's on the road to recovery, and the valuations are looking quite attractive at this point of time. So it definitely warrants a buy from a medium to long-term perspective.
Yes, that's an important view coming in, but our markets are on the close, looking at it. And thank you very much, gentlemen, Nirav and Amardev, for joining us at NDTV Profit. But let's look at the markets, how they're closing. Nifty, of course, a second straight day of gains coming in, Mahima. And of course, that important level of 25,500 levels, that is significantly going up. It's almost up 1%. That's ending the day at the day's high level. Of course, yesterday we saw that in broader indices. Nifty Bank also 1% up, 600 points gain coming in. And interestingly, if you look at it, Nifty Bank has actually done pretty well. Especially the private banking names is coming from the numbers. Now let's look at the overall Nifty heat map, how actually it just pans out. What are the top gainers coming in? The sea of green coming in. Look at the FMCG pack. It was the stock of the day. Mahima had pulled out. That was Nestle. That stock up 5%. But the consumption names are there coming up with the private banks as well. A lot of red cuts, not so much. Eternal, that's the stock keeping all of us busy. Stock down 3.5% and might be ending at the day's low as well. Now let's just pull up how the sectors have actually performed. Today also, largely you see all the sectors are in green. Mild profit booking coming in the Nifty PSU banking space, but the FMCG Realty pack, they have been doing well. Of course, Realty has been buzzing on the last two trading sessions as well. Also, let's look at the advanced decline ratio, and we are talking about the small cap and the mid caps actually coming down, but of course that ratio has actually come down going ahead. But net the benchmark indices have actually outperformed the broader indices. But broader indices, what are you looking at?
Right, so as you rightly mentioned, the broader end of spectrum did not do as well as how the benchmarks have performed today, and that's reflected in the advanced decline ratio as well. Throughout the day, the gap has narrowed. The mid-cap 150 up, that's the chart I'm talking about. The gap has narrowed for advanced versus declines. But yes, the mid-cap 150 seeing gains of about 0.5%. The small cap 250 also, if you can pull that up, seeing gains of just about 0.3% versus that of a 1% gain on the Nifty 50. But let's try to pull up the BSE 500 and see as to what are the counters that have done well. You have your Privy Specialty Chemicals up 7%, Craftsman Auto up 5.6%, Oberoi Realty on the back of earnings up 5.6%. There's good gains coming on Whirlpool also. That's an interesting move coming, 5% upside. Apar Industries up 4.7%, Nestle in that chart as well, a Nifty 50 counter here and a Nifty 50 counter there as well because it's down 4%. There's Endurance which is down up 4% and Polymedicure up 4.3% as well. But on the downside you have your KI Industries, KIOCL, Eternal, Tata Investment, Max Financial, EPL as well as Delivery and Realis seeing downtick of anywhere between that 3 to 6% mark. But let's try to see as to what are the cues that you need to watch out for tomorrow. Let's try to pull that up if we can. You have your interim dividend where these counters will trade ex-dividend, your Anand Rathi as well as HCL Technology. Anand Rathi for 6 per share and 12 per share for the other one. The Rolex rings stock split will also happen tomorrow. Face value from 10 rupees to a 1 rupee. So that stock adjustment is something that you need to see. Listing space, you'll see Canara HSBC Life Insurance listing tomorrow. You'll also see some earnings post-market today. Big IT names, Wipro and Infosys coming in with their big guns today. Cues for tomorrow, of course, earnings that you'll be watching out for tomorrow. A big one, Reliance Industries. L&T Technology is something that also will come tomorrow. JSW Steel, JSW Energy. So JSW twins here. Polycab India, Tata Technologies, CEAT, AU Small Finance Bank are some of the earnings that we'll be tracking tomorrow. Bank of India, Central Bank of India, CESC are also some of the names that you'll be tracking. CRISIL, Dixon Tech, India Cements are also some of the names that will come out with their earnings tomorrow. But with that, we are completely out of time on this edition of India Market Close. But do stay tuned. More news and updates on the other side.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change. A path to renewal. A leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the
If there was 1 year there we need a Saal Mubarak in the last 4 or 5 summers, I think this is it, right? So, Naye Saal ki Shubhkamnaएं, Nuttan Varshabhinandan, Happy New Year, whatever you call it. The question to Rhythm Desai is, will the new Samvat usher in a Happy New Year for Indian equity investors and maybe for global markets as well? Because he's a keen eye on the globe. And Rhythm, thank you so much, of course, for joining in as we do every year now for the last so many. And I wonder if a lot has changed between the last 5 months that we spoke 5 months ago and now, because the world still seems to be one tweet or a Truth Social post away from uncertainty. Is it possible to aspire a Happy New Year when such circumstances surround us?
First of all, to all your viewers, Shubh Deepavali and Nutan Varashna Abhinandan to the Gujarati viewers. And before I start, I want to tell your viewers that you did an amazing interview with Manish and Ramesh, and everybody should see that.
Okay.
That's a one-on-one on how to invest, because we may not get into that territory, but those are two geniuses from our stock market, and it was a brilliant interview, as you always do. Okay, so yeah, the world, see, Neeraj, uncertainty is part of life. Okay, I will tell you something. When I was walking into this room, one of my colleagues walked past and she said, "Oh, so you're doing an interview?" I said, "Yes, maybe the last one of my life." And she said, "Why would you say that?" So I said, "This morning could have been the last one of my life." The point is, uncertainty is so underestimated. And we only feel it when it creates events around us. When we lose a near or dear one, when the markets move a lot. But life is uncertain. So there's nothing unique about the circumstances today. It has always been uncertain in the stock market. I think the epitome of uncertainty is the stock market, and it remains so. Do I have any idea what will happen in the next 12 months? No. Did I have any idea 12 months ago? No. What we do is lay down a framework so that you can think through it. And the most important thing that you can do is sit through that. Because sitting tight and doing nothing is the best way to accumulate wealth.
Okay. So
everything else is only going to destroy wealth. If you behave randomly to random events that are happening all the time, it's very hard to make money. Or rather, I shouldn't say make money, but very hard to create wealth.
That's true maybe for wealth, for life, everything. By the way, you had me scared for a minute out there. I was wondering, why is it that I'm not getting a chance to talk to Rhythm again? But okay, no. Well, long life, all 20 fingers crossed for that. Long period in the equity markets for all of us to gain from your wisdom. But so let's talk about the framework then, Rhythm. What's, to your mind, the framework as we look forward to the next 12 months?
So the framework is as follows. Coming out of COVID, I think the government and the central bank tightened. And I'm referring here only to India right now. We'll come to the world a little later. Because of the fear that inflation will surge. It was the right policy to do. Because coming out of COVID, there was so much pent-up demand. It was likely that inflation would have surged. And my God, were they successful. Okay. Supremely successful. India came out of COVID with the least inflation problem relative to the whole planet. Everybody else was grappling with much more inflation, including China. So that was a hugely successful policy. But as usual, when you are very successful, it takes time to turn the ship, right? The ship doesn't turn as quickly. The ship is of that nature. India is a very big country and you can't turn this thing around at will. And so we arrived in 2024, and because of extraneous circumstances, it was an election year, spending got curtailed, and we had a really bad monsoon, in terms of heavy rains. So by the September quarter, real rates were high, and the fiscal deficit was annualizing at 3.4%, down from 6%, so it had halved. So invariably it caused the economy to slow. And I think a decision was taken that we need to pivot. It takes time to move the ship. The pivot happened in February with the RBI policy, and it has been followed by a cumulative interest rate cut, CRR cut, infusion of massive liquidity, deregulation of lending, and a big stimulus from the government, which is very sweet because it's not inflationary stimulus, but it's disinflationary. Nevertheless, all of this put together in stock market terms is what we call as reflation, which is India, after many years, is trying to get its inflation higher. So we've been in a disinflationary mode, policy mode, since 2014, because at the time we were running double-digit inflation, so we had to bring it down. It took many years for us to bring it down, and then it has gone and swung to the other side as it usually does, and now we're trying to reflate. Reflation is super good for equities.
Okay.
It's super good for profits, super good for revenues. So the one framework that people should have is that the next 12 months ought to be a whole lot better than the last 12 months. It'll be a whole lot better.
Okay.
Now the caveat is the world, so we'll come to that, but that's the framework. When the central bank is reflating, you don't fight it. It's stupid to fight a central bank that has got its foot on the pedal for reflation, and the government is cooperating with it. So it's a combined policy. And this is also being marked, almost not noticed, because I was meeting a set of institutional clients last week, and they're not even noticed the amount of reform that is happening at the state level. Just take the case of Maharashtra government. Okay. It has allowed labor to work longer. It has allowed establishments to be open 24/7, and it has launched a capital subsidy scheme for GCCs. You look at what Telangana has done to its electricity sector, and we don't have the time here to go through details, but the state level reform is at another level now. And I've been saying this, that there's only that much the center can do. Unless the states cooperate and also do their bit, it's difficult to lift this. But let me say this here, that we were running a template for 6.5% growth because we had to curb inflation. I think now the template has shifted to 8% growth. And I'm not don't get fooled by the real growth of the last quarter. It's nominal growth that matters. So nominal growth with modest inflation is the mix for equities. So we're going into a period where real growth probably goes to 7.5, inflation goes to say 3.5 or 4, and therefore we have nominal growth of somewhere between 10 and 11, which will support earnings growth in excess of 15%. That, I think, is the framework for the next 12 months.
Yeah, but this is great if it happens, right? But we indeed see growth at 7.5. So you think this whole push of the central bank plus the consumption push that the government has given leads to that 7.5% growth, or is there something else on the global side that needs to fall into place?
The world obviously is a messy place. I said that last year also, and I'll say it this year, and I'll keep saying this until it all falls apart. Okay. Because I don't know when it will, but it is heavily indebted. It is aging, and on top of it, we clearly have a crisis of confidence with respect to the medium of exchange or currency.
Yep.
So that is certainly brewing in the background, and this started with the reneging of contractual obligations that came out of the Ukraine-Russian war, and continues to be the case. And that's probably the reason why there is such a big bid on gold. You cannot actually just ignore that.
The one in 2022, right?
Yeah. So you cannot ignore the bid on gold, and it is clearly, I have the chart which I have been using for 25 years, which is Sensex in gold terms. It's gone like this.
Oh, yes.
Right? And you can buy, this is just about the least amount of ounces you get with the Sensex as you have in the last, say, 40 years, with the exception of the low in COVID, the low in 2008, the low in 2000. So those were all crisis moments. We have no crisis here. So we are kind of trading at crisis valuations, near about, in the equity markets. And it matters because somebody said, why would you measure this in gold terms? Well, it ought to be measured because gold is still the quintessential store of value. And therefore it is important to rebase all assets in gold terms. And very briefly, I'll say gold is not an asset. An asset, by definition, is something that yields an income. So equities, because it gives dividend; real estate, because it gives rent; fixed, bonds, because it gives you interest; a fixed deposit, because it gives you interest. Gold gives you nothing. It's a store of value. It can be a medium of exchange, but it's a very onerous medium of exchange. It's very hard to store and carry gold in your pocket and buy a cup of coffee with gold, and those things have not been done now for many centuries. Right? It was at one point in time gold was used as a medium of exchange, but today it is very hard. So therefore it's important to look at asset prices relative to gold, or in gold terms, because gold is the quintessential store of value. It's no different from looking at the Sensex in dollar terms, because dollar is supposed to be a store of value, or INR terms, because INR is supposed to be a store of value. Well, it's not such a good store of value, but it is still a store of value. The INR that you're carrying in your pocket will have the same value tomorrow morning. May not have the same value 1 year down from now, but it has the same value tomorrow morning. So there is some store of value. The stocks you hold in your portfolio may be down 20% in one day. So they don't have any store of value attached to it. So I think there is a lot of I would say difficulty in the global environment, which may feed into India's economy. India is not a small cap stock. It's a big country with it's a big player in the world with a growing trade with the world, and therefore will get affected by what happens in the world. For example, if the US goes into recession, we cannot come out unscathed. Our growth rate can't go to 7.5. There will be some impact, as it has happened in the past. The impact will be a lot less today than it has been in the past, but there will still be impact. So yeah, I cannot for sure say that the growth will be at a certain level, because I don't know how these global events pan out. I don't know how geopolitics pans out. But these seem to be less settled right now than we would have hoped for.
Hi, we are putting focus on the IT names. You can see that the numbers for Wipro are flashing on the bottom of your screen. Numbers largely seem to be in line with the estimates that you are going with. 22,697 crores in terms of revenue. Very, very close to the number that we were going with, the estimate of 22,681 crores. EBIT 3,680 crores has come down slightly below the estimates. 3,762 crores is what we were going with, and the net profit is largely in line with estimates between 3,200 as well as 3,300 crores. So numbers seem to be, at least for the top 4 numbers, largely in line with the estimates as well. We've seen that the constant currency growth has been the other factor which we have been talking about a bit as well. It's important to note that the management had guided for -1% to +1% in terms of constant currency at the end of the last quarter. So what actually Wipro does is just give guidance for one particular quarter. Margins were between 16 to 17% and have also come in line in that number as well. So EBIT margins coming in at 16.2 versus 16% the same time last quarter. They want to inch that up, is what I got the sense from Srini Palya the last time I spoke to him. But numbers seem to be largely in line with the estimates as well. But to dissect the numbers more, and as we put out a lot more data in terms of the attrition amongst others, I'm being joined by Avinash Gorakshakkar. He is the founder as well as the head research analyst at Avinash Mentor Research Services. Avinash, very good afternoon to you, and thanks so much for joining in. The top 4 numbers largely seem to be in line for Wipro. What was your estimate going in with, and is that the analysis that you have as well?
No, I think, Puneet, numbers are in line with expectations, both in terms of top line as well as bottom line. I think what is important is the commentary which comes out. I think the markets would like to know what are the kind of new deals the company signs, what is the kind of pricing pressure, which maybe the company is facing. And typically, my sense is, what is the constant currency growth going forward? Because, typically, I think Wipro is one of those companies which does not give very aggressive guidance. But typically, in terms of constant currency, what kind of growth numbers could we see in the coming quarter? And what are the kind of new client wins which the company expects going forward? And typically, with the US tariff issue hanging, I think has some pressure come on tariff-related sectors like retail and manufacturing. So typically, I think we like to wait and watch and hear all this from the management and then take a fresh review on the stock.
Well, right, thank you for that. Now, if you look at the overall CC terms revenue growth, it's grown by 0.3% positive. It comes in the range of the management earlier guided, but as for brokerages, it has still done better. Now, in terms of deal win, we also see the deal wins have clocked at 2.9 billion. It's an uptick from the previous quarter, which again comes in line with the estimate. While the interesting thing to watch is the guidance. While the management has increased the lower end of the guidance from -1% to -0.5%, and they have also increased the upper end of the guidance from +1% to +1.5% on the back of positive momentum. Well, that's interesting given the street was expecting a mixed guidance and most of them are penciling in the guidance to remain same. So Avinash, I would like to come down to you to understand what do you think is the reasoning behind this increase in the guidance? How does the whole Wipro looks going forward from here?
No, I think it looks to be a small, pleasant surprise from the management side. But I think clearly we like to have once the analyst meet call starts and we get to know more from the management. I think we have been telling our clients to hold on to the stock. I think clearly, some better traction in the October to December quarter would give a little more confidence to investors. I think clearly, the way the stock has been beaten down, I think markets were little prepared for a much bad kind of number performance, which I think the company has pleasantly surprised on the upside. So we continue to be structurally positive, but we like to wait for another quarter before we could take a fresh review. But it's a hold. We have been telling all our clients to hold on. Fresh buying possibly could be done at lower levels.
Fair point, Avinash. And the valuations have been quite favorable for Wipro at this point of time compared to the other larger peers. The problem has been in terms of growth. So in terms of guidance, it's come in as Jasmeet also mentioned, 0.3% in terms of the quarter-on-quarter basis. In terms of constant currency, attrition largely stable at 14.9 to 15%. So that's another key positive, that it hasn't increased or inched up at any point of time as well. They've highlighted some other points as well in terms of deal bookings, 2.9 billion. Total bookings have come in at 4.7 billion. Avinash, while the total booking actually number has come down by almost 6% on a quarter-on-quarter basis,
The concern largely on Wipro has been that as these deals have been won and starting to go up in terms of execution, the margin pressure has been sustained. And again, this quarter, it's not been a very major push in terms of margins on the upside. Do you expect that in terms of the guidance largely to be expected around 16%? Do you see that could be a challenge going forward for Wipro?
Yeah, in terms of margins, Puneet, there could be a little bit of challenge because I think despite the size of the deals going up, margin pressure is something which is very clearly evident. I think we'll have to wait and watch what the management says. But I think clearly the market is also penciling a lower margin, on new deals. And that I think is going to obviously not going to be liked by the market. But I think we'll have to see how it goes. Typically, at least as of now, the margin pressure looks very evident. I think we'll have to see how the management justifies as to how it protects its margins going forward.
Well, right, thank you for that. Now, if you look at the TCS results, we see TCS had moved in to a data center, and we couldn't see similar trends across other IT results like HCL Tech and Tech Mahindra. Do you think Infosys will come up with something like that? And given they have done the buyback, even that's going to have the impact. So do you think like Wipro is going to move away from its core business, or what do you think? And what do you think on the AI ramp up as well? Given that they haven't mentioned the advanced AI revenue like how we had seen in the other companies. So what are your views on both of these factors?
Puneet, can you please repeat the question, please?
Sure. Can you hear me?
Yeah.
Well, I was asking you, given that companies have reported advanced AI revenue as a separate key factor, and we don't see anything as such in Infosys yet. So what are your views on that?
No, I think we'll like to hear the management commentary on that. I think, as of now, it's difficult to tell you what exactly does it mean. But I think clearly some more clarity from the management would be better to note.
Avinash, one last question from my side. We had seen that the guidance last quarter was -1 to +1. This time it's -0.5 to +1.5. But given this guidance, it still seems a little difficult for the company to show any kind of meaningful growth for this whole year of FY26. And if that is the case, this will be the third consecutive year of negative growth or flat growth in terms of revenue. What would your assessment be on this, and what would you be watching out for from the conference call and the presser as well?
No, I think two important things. What is the guidance, margin guidance? Secondly, what is the constant currency growth in terms of revenue growth? And more importantly, any new deals which are expected. See, I think, as you said, the guidance which the company has given does not inspire great confidence. And I think unless they increase the range, I think the markets are not going to look at any strong, meaningful growth for 26. So my sense is the order wins which are expected to come in, which are there in the pipeline, the margin guidance and the constant currency growth. These could be three important elements which I think most of the analysts would like to know from the management.
Got that. Avinash, thanks so much for joining in, giving us perspective for the numbers of Wipro. So, we mentioned about numbers largely being in line on top four aspects. We're seeing some comments coming in from the Wipro CFO as well, that they're expecting some gradual returning of growth trajectory with 3 to 4 SMUs growing sequentially in Q2. But the larger implication seems to be that while the guidance for the next quarter is better than what they gave in Q1 for this particular quarter, there seems to be some absence of growth, and we will be watching out for the presser in terms of commentary, because FY26 could well be turn out to be a year where you could have a flat performance in terms of revenue growth. But that's all the time we have on this edition of Earnings Edge. Stay tuned to NDTV Profit for more.
a powerful gathering of global leaders and thinkers. Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it.
టెక్నాలజీ విషయానికి వస్తే మన ఆంధ్రప్రదేశ్ అలాగే మరియు ఇక్కడ యువత చాలా ముందుంటారు. డబుల్ ఇంజిన్ ప్రభుత్వంలో మేము ఆంధ్రప్రదేశ్ యొక్క ఈ ప్రత్యేక సామర్థ్యాన్ని మరింత పెంచబోతున్నాం.
साथियों, आज भारत की और आंध्र प्रदेश की स्पीड और स्कोप इसको पूरी दुनिया देख रही है. 2 दिन पहले ही आंध्र प्रदेश में गूगल ने बड़ा निवेश करने का ऐलान किया है.
మిత్రులారా, ఈ రోజు భారతదేశం మరియు ఆంధ్రప్రదేశ్ యొక్క వేగం మరియు సామర్థ్యం యావత్ ప్రపంచం గమనిస్తుంది. 2 రోజుల క్రితం గూగుల్ లాంటి ప్రధానమైన సంస్థ ఆంధ్రప్రదేశ్లో ఒక పెద్ద పెట్టుబడిని కూడా ప్రకటించింది.
गूगल यहां हमारे आंध्र प्रदेश में भारत का पहला आर्टिफिशियल इंटेलिजेंस हब बनाने जा रही है. और कल जब मैं गूगल के सीईओ से बात कर रहा था, उन्होंने मुझे कहा कि अमेरिका के बाहर दुनिया के कई देशों में हमारा निवेश है, लेकिन सबसे ज्यादा निवेश अब हम आंध्र में करने जा रहे हैं. इस नए एआई हब में पावरफुल एआई इंफ्रास्ट्रक्चर, डेटा सेंटर कैपेसिटी, लार्ज स्केल एनर्जी सोर्सेज और एक्सपांडेड फाइबर ऑप्टिक नेटवर्क शामिल है.
నిన్న గూగుల్తో నేను మాట్లాడుతున్నప్పుడు తెలుసుకున్నాను, వాళ్ళు కూడా నాకు చెప్పారు, అమెరికా బయట చాలా పెట్టుబడులు మా ఉన్నాయి, కానీ అన్నిటికంటే అందులో పెద్ద పెట్టుబడి మేము ఆంధ్రాలో నేడు పెట్టబోతున్నామని వాళ్ళందరూ కూడా నాకు చెప్పారు. ఈ కొత్త ఏఐ హబ్ లో శక్తివంతమైన ఏఐ ఇన్ఫ్రాస్ట్రక్చర్, అలాగే డేటా సెంటర్ సామర్థ్యం, పెద్ద ఎత్తున శక్తి వనరులు మరియు విస్తరించిన ఫైబర్ ఆప్టిక్ నెట్వర్క్ కూడా ఉండబోతున్నాయి.
साथियों, गूगल के इस एआई हब इन्वेस्टमेंट में एक नया इंटरनेशनल सबसी गेटवे बनाया जाएगा. इसमें कई इंटरनेशनल सबसी केबल्स शामिल होंगे जो भारत के ईस्टर्न कोस्ट पर विशाखापट्टनम तक पहुंचेगी.
మిత్రులారా, ఈ గూగుల్ ఆర్టిఫిషియల్ ఇంటెలిజెన్స్ హబ్ ఏదైతే ఉందో ఈ పెట్టుబడితో కొత్త అంతర్జాతీయ సబ్సీ గేట్వే కూడా తయారవబోతుంది. ఇందులో అంతర్జాతీయ సబ్సీ కేబుల్ వల్ల మన భారతదేశం యొక్క తూర్పు తీరంలో ఉన్న విశాఖపట్నం నగరం మరింత బలోపేతమై ఈ కేబుల్స్ అన్ని కూడా అక్కడ చేరుకోబోతున్నాయి.
साथियों, इस प्रोजेक्ट से विशाखापट्टनम एक एआई और कनेक्टिविटी हब के रूप में स्थापित होगा. ये केवल भारत ही नहीं बल्कि पूरी दुनिया को सेवा देगा. मैं इसके लिए आंध्र के लोगों को विशेष बधाई देता हूं और चंद्रबाबू के विजन की भूरी भूरी प्रशंसा करता हूं.
మిత్రులారా, ఈ ప్రాజెక్టు విశాఖపట్నం ఒక ఆర్టిఫిషియల్ ఇంటెలిజెన్స్ మరియు కనెక్టివిటీ హబ్ గా ఏర్పాటు చేయబోతుంది. ఇది కేవలం భారతదేశానికే కాకుండా యావత్ ప్రపంచానికి కూడా ఇది సేవ చేయబోతుంది. దీనికి ఆంధ్రప్రదేశ్ రాష్ట్ర ప్రజలందరికీ కూడా ప్రత్యేక అభినందనలు తెలియజేసుకుంటున్నాను. అలాగే మన ముఖ్యమంత్రి వర్యులు చంద్రబాబు నాయుడు గారి తాలూకా విజన్ కి కూడా ప్రత్యేకంగా నేను ప్రశంసిస్తున్నాను.
साथियों, भारत के विकास के लिए आंध्र प्रदेश का विकास जरूरी है और मैं मानता हूं आंध्रा के विकास के लिए रायलसीमा का विकास भी जरूरी है. आज कर्नूल की जमीन पर जो काम शुरू हुए हैं, ये रायलसीमा के हर जिले में जॉब्स और प्रॉस्पेरिटी के नए दरवाजे खोलेंगे. इन प्रोजेक्ट से यहां इंडस्ट्रियल डेवलपमेंट को और गति मिलेगी.
మిత్రులారా, భారతదేశ అభివృద్ధికి ఆంధ్రప్రదేశ్ అభివృద్ధి చాలా అవసరం. అలానే ఆంధ్రప్రదేశ్ యొక్క అభివృద్ధికి రాయలసీమ అభివృద్ధి కూడా అంతే అవసరమైనదని నేను నమ్ముతున్నాను. ఈ రోజు కర్నూలు గడ్డపై ప్రారంభమైన పనులు రాయలసీమలోని ప్రతి జిల్లాలో ఉద్యోగాలు సృష్టిస్తాయి మరియు ఈ ప్రాంత ప్రగతికి సరికొత్త ద్వారాలు కూడా తెరిపిస్తాయి. ఈ ప్రాజెక్టుల ద్వారా ఇక్కడ పారిశ్రామిక అభివృద్ధి మరింత వేగవంతంగా ముందుకు నడుస్తుంది.
साथियों,
Good afternoon, everybody. And as you can see, that Prime Minister Modi has unveiled a lot of projects in the state of Andhra Pradesh. But what we are getting to know is that Infosys is out with its quarterly results. And let me just take you through the numbers. At present, net profit stands at 7,360 crore rupees versus NDTV Profit estimates of 7,256 crore rupees. Revenue stands at 44,490 crore rupees versus estimates of 43,945 crore rupees. And to decode further, I'm joined by my colleagues Puneet and Jasmeet, who have been tracking the space very closely. So Puneet, what are you making of these numbers? Is it a surprise for you?
Well, they're largely very strong numbers to say the least, because we have seen the growth the number of revenue growth was expected to be somewhere around 43,945, and the number is quite higher than that. In terms of profit as well, it is a beat in terms of the estimates that we were working with. 7,256 is what we were working with. The number has come in at 7,364. We'll also wait by to get the EBIT margin. There you go, 21.02% versus 21.3%. We were expecting a slight inch in terms of the EBIT margins. But, on these four numbers, on revenue, on EBIT margins, as well as profitability, numbers largely in line with what the estimates were. So you have seen Wipro come out with numbers which were in line with estimates. Now it's Infosys that's gathering pace as well. I quickly want to highlight the large deal TCV numbers as well. $3.1 billion for this particular quarter. Again, in line with the estimates of $3 billion, and the estimates were baking in some key deal wins to happen in quarter 2 of FY26. That seems to have played out perfectly for the company in this particular quarter. The other aspect is in terms of constant currency, 2.2% quarter on quarter constant currency. That's of course on the dollar basis. The number varied across brokerages between 1.8 to 2.3 as well. So in terms of the numbers, in terms of these two aspects, it seems to be that the numbers are largely in line with its estimates as well. And that's a key positive. But in terms of the other sectors also, we have seen that the financial services, manufacturing, energy, all three seem to have grown in this particular quarter. But definitely a strong number to say the least. We'll also be joined by Sushovan. He's the IT analyst at Anand Rathi very shortly. He will give us a lowdown of what these numbers mean, because we have the press conference of Infosys also at 4:15. So a lot more will be gathered from what Salil Parekh says in that particular press conference. But a really strong show to say the least, in terms of Infosys as well as Wipro. And now that we already have numbers for TCS, apart from the investments in data center, which got taken out by the market in a negative sense, the results for all three companies seem to be quite in line with the estimates. So it's a key positive to say the least. In terms of guidance, it's now come in between 20 and 22%, and that's largely been maintained. We will be watching out for, in terms of the guidance for this year. It was expected to be 1 to 3%. If you have those numbers, you can share with us as well, Jasmeet, if they've actually met this particular guidance number also.
Well, right, they're expected to be maintained between 1 to 3% for this particular quarter, and margins will maintain with 20 to 22%. Given this set of margins, we see that it's largely in line with what was expected. Well, what's interesting would be the employee headcount addition to watch out for. They have added nearly 8,000 employees. Given where the IT giants are declining people, given on the addition of the AI, we see companies coming out and hiring more people. While more people hiring brings in the momentum that companies confident about the future growth. While on the other hand, also the deal win clocking at 3.1 billion, pretty much in line with what was estimated. I will all in all a good set of numbers, given that the last CCV deal win is up 67% for this particular quarter, and as well as the free cash flow clocking 1.1 billion, showing that the deal wins are summing up into the revenue as well as the cash flow moving in to the company. Well, what's interesting to watch out is the manufacturing sector. Given that we have noticed softness for other IT giants, we see the company has seen an uptick in manufacturing sector. On the other hand, also the high-tech sector, the high growth momentum which particularly causes for IT firm is also sees an uptick. On the other hand, all in all, a good set of numbers. While if you look at the geography-wise, we see that Indian geography has seen an uptick. Similar trend to seen even in the Wipro, given that the overall Asian market has seen an uptick. So this shows that clients are actually pumping up money from India as well. So what are your views on this, Puneet?
Well, largely, we have seen that in this particular quarter again. The headcount addition number was definitely a key positive, because 8,800 you did highlight, Jasmeet, from roughly 3.2 lakh employees, 3.23 lakh employees. They have now moved to 3.3 lakh as well. And attrition, again, it's not too much of a problem right now for the industry as well. Roughly between 14.2 and 14.3% for Infosys, for Wipro as well. Largely maintained that 14.9, but definitely a key positive to say the least as well. Because we have seen multiple key factors as well in terms of what we've seen for Infosys, and we will be looking at for the number of guidance as well. I still haven't got it, but the guidance was 1 to 3% for this particular year for Infosys. Largely, we are expecting that to be maintained at 1 to 3%. But if that is revised, even at the lower end of the guidance, that'll be something to watch out for. But it's definitely a key number to say the least as well. We are looking, actually, they have actually revised the guidance to 2 to 3% now. So that's another key positive number coming in for Infosys, that it was 1 to 3 earlier. It's now come in at 2 to 3%. Announcement for dividend has also been made at 23 rupees per share. That's another key positive for Infosys in this particular quarter. But, it's actually been a good evening for all these IT players, because margins also, Infosys was at 20.8%. now at 21%. And while the estimates were of 21.3, largely seems to be quite okay for Infosys at this point of time. So definitely, multitude of factors that's working in line for the company, and that's a key positive to say the least. Amongst others, they have highlighted in terms of sectors, as Jaspreet was also highlighting, that we had seen a multitude of positive factors that was leading as well in terms of utilization, including trainees, that's coming at 82.2%, while excluding trainees, that's at 85.1% as well. Onshore mix largely maintained, so is the one for offshore as well. But in terms of the active number of clients, it's gone up to 1,896. It was at 1,861 in terms of the active clients per share, and that's been one of the key aspects. Added during the quarter was 118.
Now, when you look at the overall deal win, though it's a bit less compared to what was in the previous quarter, but still the previous quarter had seen quite some large deals. So all in all, a good set of numbers. Seasonally, is supposed to be a stronger quarter for the company. So as this company has already beaten the estimates, while the street expecting a CC growth between 1.8 to 2.2, again, there's a beat on that as well. While on the other hand, the efficiency would be coming in from the dollar tailwind, well, that's something to watch out for how much of forex is that being added, and the guidance commentary, though Steve was expecting the commentary to be pretty much sustained, but this is a positive surprise by the company. What do you make out of the results, Himakshi?
Absolutely, Jasmeet. And, if I need to ask you, you both, that if there's some single digit number that you need to point out, which is the highlight that you're seeing, by seeing the results. So what would that number be? What has caught in your eye?
I think definitely the guidance, because, a lot less what brokerages were making out in terms of revision of the guidance in this particular quarter to 2 to 3% as well. But, the presser has now started. Let's go across to the presser for Infosys and listen to Salil Parekh.
We had a strong performance in Q2. Our revenues for the quarter grew 2.2% sequentially and 2.9% year on year in constant currency terms. Our operating margin was 21%. Our large deals were at $3.1 billion, out of which 67% was new or net new work. In addition, we announced a mega deal worth $1.6 billion after the close of the quarter, but before our results announcement. We've added 8,000 employees during the quarter. Our client interactions are showing a strong focus on deploying AI across the enterprise, both for growth and for cost efficiency programs. In doing this, we are continuing to scale our team of forward deployed engineers. With a strong performance in Q2, we changed our revenue growth guidance for the financial year. The new guidance is growth between 2% and 3% in constant currency terms for the full year. And our operating margin guidance remains the same as in the past quarter at 20 to 22% for the full year. With that, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sangrajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV 18.
Thank you. Hi, Salil. Hi, Jayesh. Salil, firstly on the guidance, the fact that you've tightened it but not really increased it from 1 to 3 to you've gone to 2 to 3%. And, with a 2.2% growth this quarter as well. At the current run rate, you'll at most have a flat growth for the rest of the year for Q3 and Q4 with the current guidance. You'll easily get to the top end. So I wanted to understand, are you not seeing a meaningful recovery, especially when it comes to your manufacturing, retail, these kind of verticals? What kind of headwinds do you continue to see? Because for Infosys, the contribution to revenues is slightly larger than peers. That was one. Also on the H-1B visa issue, if you could give us some details on how many employees you deployed on this visa for this year and the previous maybe a couple of years, and whether you see now this as being something unviable, sending freshers on H-1B visas, to work in the US. If I may also ask, your peers like HCL Tech have also started to quantify their AI revenues. We've been asking you this for several quarters now, and we understand AI cuts across services and sectors. Could you give us a sense of, what exactly you're seeing there? And finally, the Versant Group acquisition. What exactly was the contribution to revenues, and whether you're looking at further M&A in the region or outside? Thank you.
So let me start, and Jayesh will add in a couple of things. First, on the guidance and the environment. So in the guidance, typically we have the second half of the year is slower than the first half. That's the normal pattern. So we've continued with that pattern. Having said that, we've seen good traction, and that's how we've actually increased the guidance. The previous guidance was 1 to 3. And now it's 2 to 3. So in a sense, we have much more confidence with the lower end being increased in what we see into the outlook for the year. In terms of the specific industries you mentioned, we had a good performance on manufacturing, on financial services. We still see constraints in retail. We do see a good pipeline there, and we will see how that plays out in the coming quarters. Keeping all those things in mind and the global environment in terms of the macro, we decided to keep the guidance at 2 to 3 with all of those factors that I mentioned. On the H visa, what we've shared in the past, what we've shared recently, first, our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities, we have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future. We don't have any specific information to share on the numbers that you had suggested.
You know, when you say a minority was dependent on the H-1B visa, could you give us, in percentage terms, how many of your employees that you were sending abroad were on these visas? And when you say there won't be any disruption, how exactly will that play out?
So there, we don't share the specific numbers, but the majority of our employees in the US are employees who don't require any Infosys immigration support. The way we are working with our clients, we've reached out to each of them and made sure that we see and they see how their delivery continuity becomes on track and remains the way it is right now. Then on Versant, so first, there's nothing in the this quarter. They're going through all the approvals and so on. So the regulatory approval, which is a normal process. We'd anticipated it would come sometime in the coming months. Yes, we are very much looking at other acquisitions. We have a good pipeline. We don't know when those will materialize, but there are some opportunities there which we're looking at.
Sorry, the question on Versant was, going forward, what kind of contribution to revenue do you expect? And in M&A, what are the areas, what are the geographies where you're looking to fill the gaps?
On the contribution, we don't have anything to share now. When it closes, we will be in a position to give that information. Is there anything more on Versant?
I think we have given the last year's numbers of Versant already in the stock exchange filings, that we did last time when we announced that. So you can make an estimate based on that. But just to add to what Salil was saying on the guidance as well, if you look at the commentary last time when we gave a guidance, we very clearly said that the upper end of the guidance is where we are expecting stability in the environment, and the lower end of the guidance is where we are expecting worsening in the environment, right? As we stand today, the environment still remains uncertain, and despite that, on the back of Q2 performance, we have tightened our guidance, where again we are very clearly saying that at the lower end we expect the worsening of the environment, and the upper end we are expecting stability in the environment, right?
On AI, I think we are scaling up massively on AI. We have a large team of FDEs. We are doing a lot of projects on enterprise AI with clients, on growth, which is focused like in the sales function or marketing function, on cost, which is focused on many of their processes, optimizing them, on customer service, on code development. So there's a broad set of AI work that we are doing with our clients. There's a large number of clients for which Infosys is today the AI partner of choice. So we're going quite well. We have strong partnerships with a lot of different large tech companies. We believe there's a huge amount of opportunity in the enterprise AI space. And with our experience on how to navigate within the enterprise landscape, we are quite well positioned to help with that.
Thank you. The next question is from Jude from ET Now.
Hi, Salil. Good to meet you here, and congratulations on that performance. You spoke about scaling up on the AI front. Could I get you to throw some light on what those specific deals are like? What is the AI order book shaping up to be at this point in time? And more importantly, what will your hiring trends be like for the rest of FY26? And I know for a fact that you have the confidence, which is why you've raised the lower end of the guidance. But what is the overall demand environment shaping up to be like for the fiscal?
So on AI, I think what we see today is a lot of interest where there's deep work going on, whether it's on a specific knowledge process or it's in credit risk, or there's work doing on software development, or there's work going on customer service. So broad area of AI projects that we are working on. In some cases, we're working across an enterprise on transforming that enterprise from an AI perspective and making them the leading enterprise in their industry in AI. So good traction there. In fact, we have more and more of this that we want to start to share in the sense of what are the approach that we are taking, how it's working, and you'll see that as we go through in the next few months. On the environment, as Jayesh was sharing, the environment is still uncertain. And what we see today is some changes in where the global environment macro is looking. We still see in some of our large markets that there is growth, but there's also some inflation, there's job creation, which is constrained. In some other markets, there are cost constraints. Some industries are seeing that. So that's a mix. Equally, we are seeing a lot of strength, for example, in financial services. Our client base is doing very well. We see extremely good growth. We've seen good growth in manufacturing in this quarter. We have a portfolio where we are across all of these different industries, which helps us to deliver the kind of performance that we've delivered for this quarter. On terms of hiring,
So if you look at our hiring for this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Thank you. The next question is from Uma Kannan from Deccan Herald.
Good evening. In the last couple of years, Europe has been constantly outperforming for you. So what are the factors driving that? And can you give us some update on Project Maximus and its impact on your performance? And one more on fresher hiring. Have you onboarded all freshers whom you have offered?
On the Maximus and the hiring, Jayesh will come back. On Europe, I think Europe's done extremely well for us. We made some good investments in different countries across Europe. We've seen also, especially in the time you mentioned, the past 2 years, there's been a lot of opening up of companies in Europe, in different countries, to looking at the sort of services that we are offering, to looking at both transformation and cost efficiency. And there we've played quite well in those markets. Having said that, we still see the US market is also a very good market, and we will continue to grow. We will continue to make acquisitions. We'll continue to invest in both of those markets and other markets around the world.
Yeah. So on hiring, as I said earlier, we have hired net 8,000 employees, and we have hired 12,000 freshers this half already, and they're already being onboarded as we speak. In terms of Project Maximus, I think Project Maximus is continuing to deliver. If you look at last year, we expanded margins by 50 basis points, despite multiple headwinds, compensation related. We had a higher variable pay. We had, impact coming from the acquisition and multiple mega deals that we signed in the year before, they were ramping up. So we absorbed all of those headwinds and we were able to expand margins by 50 basis points. Even this quarter, if you look at, we've expanded margin by 20 basis points, sequentially. And the Project Maximus has delivered 30 basis points out of that, where pricing, gave us a tailwind, and that was offset by higher subcon and lower on-site utilization. So the project is in works. Yeah.
Thank you. The next question is from Beena Parmar from the Economic Times.
Hi. Salil, you've seen some reduction in your contribution from your top 5 and 10 clients. Could you give us some sense why that is happening and how do you see that in the next 2 quarters? And in terms of the hiring, what sort of outlook do you have overall for, say, campus and off-campus hiring, especially because of the way things are moving? While deal pipeline has been strong, market continues to remain uncertain. And secondly, in terms of the pipeline, where is the growth, where is the deal pipeline coming from? Which sectors is it coming from and which geographies? And lastly, in terms of the margins, what are the levers, given that you've already done with your wage hikes and you also plan to onboard freshers?
So let me start with the pipeline view, and some of the others Jayesh will look at, so you can combine those. So our pipeline remains very strong right now on large deals. What we are seeing is a lot of our clients are quite focused on cost optimization, consolidation. We are benefiting from consolidation plays, on automation, and on using AI for efficiency. That's let's say the big focus that we see from our clients across industries. And I'll come to the specific industries. And then we see some attention to using AI for some of their growth activities and what we can do with an AI transformation. Now, within all of that, we see some of our industry segments with the pipeline doing well. There are some places, for example, in financial services where we see good traction with clients. We see good traction in manufacturing.
Well, that was Salil Parekh talking about the Infosys quarterly results. And what's the key, that's to note is that on the H-1B visa front, he said that majority of the employees, they don't require the immigration, support. So they don't need the H-1B visa. So that's the key highlight that's coming in from the earnings presser there. But with that, it's time to, wrap this edition of Profit 360. But please stay tuned to NDTV Profit for more news and updates.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch Ballerina.
Adjusted operating margin for this quarter was 17.2%. This is within the narrow band we had previously indicated, and it's an improvement of 0.4% compared to the same period last year. Let me now walk you through some of the highlights and key moments from this quarter. Within our markets, 3 of the 4 SMUs reported sequential growth. Americas 1 delivered sequential and year-on-year growth driven by strong performance in healthcare, technology and communications sectors. While Americas 2 saw a decline this quarter, we remain confident about the future growth in this region, as some of the deals we have won in the first half are now beginning to ramp up. Europe returned to sequential growth in quarter 2 after several quarters led by BFSI. In fact, the Phoenix deal is set to start generating revenue from quarter 3, providing further momentum to Europe. APMEA growth was fueled by strong results in India, Australia, and Southeast Asia. Capco grew both sequentially and year-on-year, with momentum coming from newer markets, including LATAM and APMEA. Turning to our industry sectors now, we continue to see momentum in BFSI, with our clients prioritizing on cost optimization, vendor consolidation, legacy modernization, and of course, scaled deployment of agentic AI. Tariff uncertainties continue to impact consumer, energy, and manufacturing sectors, leading our customers to reevaluate their supply chains. In technology and communications, the focus is on accelerating AI adoption and also developing industry-specific solutions, with cost optimization remaining central to them. Healthcare, in fact, especially in the US, is undergoing structural changes, and we are actively supporting clients through this transition. Of course, this sector remains one of our strong performers. Coming to deal wins and pipeline. This quarter, we closed $4.7 billion in total contract value and signed 13 large deals. Much of this demand is driven by vendor consolidations, AI-powered transformations, and consulting-led programs, areas where our strategy is truly making an impact. Our order books this quarter includes 2 mega deals, one with a healthcare client and another in BFSI. While a significant portion of these 2 deals are renewals, they are very important for deepening our presence and unlocking future growth in these accounts. We are also seeing strong momentum in Europe, and I want to highlight 2 examples that bring this to life. First, Wipro has formed a strategic multi-year partnership with a leading UK financial company to modernize their business. We are using our Vega AI platform and building a new center of excellence to drive this change for the bank, helping them improve customer experience, streamlining their back office operations, and in addition, bringing in advanced AI to both their business and technology streams. To give you examples, HR, mortgages, financial crime prevention, and of course, IT. This will optimize workflows and support real-time decisions for them. Above all, it will help our client become more resilient for the future. In my second example in Europe, we are partnering with a leading distribution and logistic company on a multi-year transformation of their operations and IT. By leveraging our expertise in operating model design, process standardization, and technology modernization, we are helping them move to a unified digital core, making their operations more efficient and unlocking long-term growth with AI and digital tools. Now, I am excited to introduce Wipro Intelligence, which is our unified suite of AI-powered platforms and solutions and transformative offerings. With Wipro Intelligence, we will be enabling our clients scale with confidence and lead in an AI-first world. It strengthens our consulting-led approach, driving innovation and delivering measurable outcomes for our clients. In fact, Wipro Intelligence brings together advanced capabilities across both delivery and industry platforms. In fact, our delivery platforms are already accelerating work from software development, cloud and infrastructure, to business process operations. And on the industry side, we have reimagined core business processes and developed more than 200 AI agents and platforms spanning multiple sectors. As AI continues to evolve every day, we are helping clients experiment, adapt, and scale rapidly by working closely with our partners, ventures, and few leading research institutions. Wipro Intelligence is about proof, not just promise. So we embed productivity gains, assure business outcomes, and build responsible AI guardrails for our clients. Let me share 3 examples of these solutions. One, Auto Cortex for automotive, Wealth AI for BFSI, and Payer AI for healthcare. Each is already making a tangible difference for our clients where we have implemented these solutions. And this has earned strong recommendations from industry analysts. This momentum gives us real confidence for the future. With that, let me move on to our forecast for the next quarter. In quarter 3, we are projecting sequential IT services revenue growth of -0.5% to +1.5% in constant currency. Let me reiterate, our priority remains converting our strong backlog into revenue while maintaining operational discipline to ensure profitable growth. And with that, I'll hand over to Aparna, who will take you through the financials in more detail. Over to you, Aparna.
Good evening, everyone. Thank you, Srini. Let me share an update on the financial performance of the quarter ended 30th September 2025 before we start the Q&A session. Our IT services revenue for Q2 grew 0.3% sequentially in constant currency terms and 0.7% sequentially in reported currency. These numbers are well within our guided range. Revenues declined 2.6% year-on-year in constant currency terms. Our operating margins in Q2 was at 16.7%. This is a contraction of 60 basis points quarter on quarter, and 10 basis points year on year. Our operating margin was impacted by a one-off charge taken on account of a customer bankruptcy event. Adjusted for this event, our margins were at 17.2%, an expansion of 40 basis points year on year. This is also within the narrow band that we had called out in our last earnings. As we invest for growth, we do see pressure to be there on our operating margins, but our endeavor would be to maintain it in this narrow band of an adjusted 17.2%. Let me give you some color on our strategic market unit and sector performance. All the growth numbers that I will share will be in constant currency. Americas 1 grew 0.5% sequentially and 5% on a year-on-year basis. Americas 2 declined 2% sequentially and declined 5.2% on a year-on-year basis. Europe grew sequentially 1.4% and declined 10% on a year-on-year basis. APMEA grew 3% sequentially and grew 2.6% on a year-on-year basis. Moving on to the sector performance, BFSI grew 2.2% sequentially and declined 4% year-on-year. Healthcare declined 0.2% sequentially and grew 3.9% year-on-year. Consumer as a sector declined 1.7% sequentially and also declined 7.4% year-on-year. Technology and communication grew 0.8% sequentially and declined 1.7% on a year-on-year basis. EMR declined 1.5% sequentially and also declined 0.5% on a year-on-year basis. Capco continues to perform well, growing 3.2% on a year-on-year basis. Let me share with you certain other key financial parameters. Our net income and EPS grew 1% year-on-year in Q2. Our operating cash flows continue to be higher than the net income and stood at 104% of the net income for Q2. Our gross cash, including investments, was at $6 billion. Our net income declined 14% year-on-year. Accounting yield for our average investments held in India was at 7.1%. Our ETR was at 23.8% for this quarter versus 24.6% in the same period last year. In terms of guidance, to reiterate what Srini shared, we expect the revenues from our IT services business segment to be in the range of $2.59 billion to $2.64 billion. This translates to a sequential guidance of minus 0.5% to a plus 1.5% in constant currency terms. The Harman Digital Transformation Solutions acquisitions that we had earlier announced is expected to close during the quarter. However, our guidance numbers do not factor any revenues from this acquisition. Thank you and wish you all happy Diwali in advance.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.